Neil, can you hear me?
I can hear you.
All right. All right, Nielski. So we got the live trading coming in a few minutes.
Yes, we do, and it looks like we are live here at the Benzinga boot camp.
All
Uh,
right.
so first and foremost, I just want to introduce myself. My name is Neil Hamilton. I work at Benzinga on product and a bunch of our trading services. And here with me today is Hot Stocks Luke. Luke, can you tell the audience a little bit about yourself?
Hey guys, I am another member over here on the Benzinga team. I am a stock market junkie. I call myself Hot Stocks Luke, even though not all of my stocks are hot. They've taken a little bit of a beating this morning, actually. But I'm glad to be one of your hosts for the day.
That's great. But you did have one hot stock lately, though. What was it?
I had Elf Beauty. That was my good one. If you guys know this one, they do cosmetics. I saw that the company was reaffirming guidance. Well, everybody else was cutting guidance or saying, "Hey, we don't know what's going to happen amid coronavirus." And got an awesome earnings report out of them. So I've at least got one hot stock going for me.
Yep, that's great. Lots of coronavirus plays being discussed today as examples with our speakers. So on that note, Luke, why don't we go through some of the content that we have to look forward to today?
All right.
Folks, we will get started with our live trading very soon. We've got two awesome live traders for that session. Number one, we've got Anne Marie Bain. If you're not familiar with her, she's an author. She's been educating folks on day trading, all different types of strategies for many, many years. And she's an all-around awesome pro trader. She's a former neuroscience. She has a neuroscience background, and she just decided that was boring to her, and she'd rather make money on the markets. So there's a lot that you'll have to learn from her, and you'll actually be able to watch her live trade today and then put in all your questions in chat. Use that comment section, ask anything that you want to ask to our live traders, and I'll make sure that it gets to them and they'll answer it live on the spot. The purpose here.
And what time are we starting the live trading, Neil?
We're going to start the live trading in about 15 minutes, if I'm not mistaken. So we'll get we'll start at 9:15 a.m. Eastern time. So we'll get a little pre-market preparation there. And then we'll get right into it with the market open. The other live trader I want to introduce you to is Jeremy Newsom. He'll give a much better explanation of his strategy. But what I can say is that he's an excellent educator and excellent at actually just if you tell him make a trade right now, that man will find a stock and he'll find a way to get alpha on it. His main strategy is around getting opening gaps. So we'll be introducing you to those two live traders. You'll be able to watch it kind of like a sporting event here in just a few minutes. And he just hopped into our Zoom and he's very excited to get going. So just a few minutes here, Jeremy, and we'll let you loose.
And the thing that I love about the live trading is that there's no theory going on. Like you're seeing, here's how these people are playing the markets. This is their actual setup. We got some top traders in the world. Here's what they have on their screens. Here's how they're thinking about the markets. I've got one tip for everyone. This is something that I do every time I attend an educational event. Really simple. Check it out. I got my notepad up. They're going to be moving fast. They're going to be calling out stocks. They're going to be looking at charts. Look at that. Neil's got his up too. So everyone, while you're watching these live traders, especially, make sure you got the notepad, you got the pen and paper. Of course, you can download the videos afterward on the the bottom right corner of your screen. There's a little green box. You can click there and actually buy all the video recordings so you can take them home for further study. But at the very least, again, my one tip I have for everyone, I've been to a ton of these events, is have that notebook ready.
Yep, that's a great tip. And I'll be honest with you guys. This event is organized from beginner or easy content to intermediate to difficult or advanced content. Mm-hmm. So we're trying to take you from zero to as close to pro as you can possibly get. So on Monday, you can hop into the markets and take these lessons to task right away. But one thing I want to add to that is that I'm at the beginner level personally. So if you have any questions, make sure you put them in the comments. No dumb questions. We are here to make sure that if you don't know the difference between a call or a put, ask it. and we'll make sure we define it in a way that you can actually use, instead of giving you your your basic pedia.com definition for the stock without naming any companies, but or for the term. But with that, Luke, what talk today in the general track are you most looking forward to?
I am probably looking forward to let's see. All right, I'll give you two. I got two that I'm looking forward to. We've got what are options. It's options intro one at 12:40. I've played around with options a little bit, so I'm not a beginner. But they're complex instruments, and I don't really do sophisticated strategies. I sort of make my one-off picks where I'll buy some call that's way out of the money. And just hope for the best. So the options refresher, I'm looking forward to that. That's at 12:40 Eastern. The other one, so this is in the breakout session. We'll talk about that a little bit in a second before we get started. But we've got Chris Camillo doing one of the breakouts, and he's got a really interesting take on the markets. Basically, the way that he approaches things is not, here's how to read these various charts or these complex financial instruments. It's just like very straightforward of spot trends that other people aren't thinking about. And I remember he did this event with us last year, and he called out like some big teenage YouTube star. Like I'd never heard of them, but millions and millions of teens follow this star. And the guy recently endorsed a brand, and Chris said, nobody in the stock market knows about this. We're all way too old for it. But the stock is going to pop because this guy is so widely followed. And he bought the stock, and sure enough, the stock, rallied up. And so I think he's going to be dropping a few other names like that in the breakout today. So those are my two.
Yep. And I'm with you on that. I'm really looking forward to Chris Camillo. He's from Dumb Money TV. The last episode that I saw of Dumb Money TV, they were talking about the shift from doing things indoors, stocks that matter for indoor activities, to this huge push to go outdoors. So like things like kayaking, fishing, camping, anything around that. There's so many plays there. So he's definitely someone to look to for finding trends and alternative ways of picking stocks. Mm-hmm. But with that said, the first session that we have during our main track, once we finish live trading,
after the live trading, right?
Yeah, after live trading, okay. 11 a.m. Eastern, Joseph Gasparoni. He's an Italian trader. He trades U.S. equities. He has a pretty down pat, like step 1 through XYZ system for picking stocks. So this is the kind of thing where you can download his ebook. We'll make that available. Actually, I think he's providing 2 ebooks specifically for this event too, awesome. That you'll be able to refer back to in the weeks to months to come, that will help you create a system for picking stocks. Now, again, everything, legal mumbo jumbo, everything that we're talking about here today is for educational purposes only. We're going to talk about examples of stocks. Obviously, don't trade them while we're talking about them. But we are going to give you the fundamentals and the processes that you can rely on, so it doesn't feel like it's just a constant guessing game. So, when we're talking about Joseph's way of picking stocks, there's a down pat system based on fundamental and technicals. Mm-hmm. And then when we're talking about Chris Camillo, it's on trends and paying attention to what's going on in society. So we're going to give you a couple ways to rely on yourself, rely on your skill set, and actually make some decisions that feel good and strong, and hopefully result in some serious profit.
And Neil, do you have any idea of his time horizon? So when he's looking at these fundamentals, is this like a longer term play, or is he swing trading these, or any insight there?
Joseph's active. I think he would consider himself a trader. Right. Yeah. So it's a shorter time horizon. He does operate a Discord chat. So he is constantly updating folks on these types of things. So he's pretty active at picking stocks. So it's going to be a shorter time horizon for Joseph. But yeah, and then we've also got some stuff on how to read charts. So we're going to get into your technical analysis. We've got some great stuff on. We've actually got 2 sessions on options. I don't know, Luke, if you mentioned that. It's not just 1. We actually 3 during the main session, and then we're going to do a deep dive. If you guys didn't know, if you want a deeper dive in a more small classroom feel type setting where you're able to actually hop on the mic the way that Luke and I are right now, potentially the webcam if you're feeling brave. You can upgrade to our breakout VIP sessions where you'll learn from Nick Shaheen, who's like sort of an options hero. You'll get that session with Chris Camillo, as well as Adam Johnson, who's manages a small hedge fund, who will be talking about hedge fund strategies. So if you want to hop in there and have a much more in-depth, I'm actually talking to the professor one-on-one. That's the way to do that. And you won't lose anything from the main session. If you do upgrade, you'll get all of the recordings from the main session. Everything that we're talking about now will be delivered to you very shortly after the event.
Yep, and I'm actually going to be hosting that one. So if you guys enjoy spending time with me more than you do with Neil, then you definitely want to make sure you come to the breakout.
And I understand it won't hurt my feelings because there is some great content there. But we've got about 5 minutes to go before we start our live trading. I'm going to check in, Luke, with the Hey Summit platform chat and see if we have any questions.
Yeah, and for anybody who's just joining right now, again, 9:15, we are kicking off with the live trading. Neil and myself are your hosts for the day. 9:15 live trading, and then from 11 a.m. Eastern through 5:30 Eastern, we are going course by course by course by course. Again, the whole purpose of today is that it's very actionable. We're not trying to get super into the theoretical. We're trying to be actionable. Here are the strategies that you can use Monday morning, start trading, become a better trader, become a better investor, etc. So again, 9:15, we're kicking off with the live trading. We got some professional traders. We're going to be talking through exactly what they're doing. And then we're going to get into the course type material. So it's a nice full day that we have. And believe this or not, but we actually have 12,000 people registered today. Isn't that an amazing number? That's 12,000 people who are taking their Friday to make themselves better. That's what I love about it.
Yep. And what a better time. We have such incredible volatility. I can understand why so many people want to get into the markets right now. So, here at Benzinga, we absolutely celebrate everyone going after financial freedom, whether you're working a full-time job or you want to dedicate all of your time to day trading full-time. It's a culture, a movement that we really celebrate. Everyone should be able to get into the financial markets and give their best educated approach to being successful there. Just a couple things from the comments section here. We have some questions about very specific things like in options, credit spreads, iron condors. We'll get to all of that stuff during the option session, so just stay tuned. So when we're talking about someone here is a beginner, they're looking for a max loss relative to their gain. What I will say is those are questions that you can ask during specific sessions when we're talking with the traders, and they'll answer those for you.
Yeah, Neil and I are not the experts, to be clear. You do not have to spend all day with us.
Right.
We're just the host guiding you through, and we're gonna have we got 10 experts lined up for the day. We're gonna know way more intelligently what to do than we do.
Yep. So again, we're just here to be your voice and make sure that your questions get answered.
Yep. The other thing that we didn't talk about today, Neil, that's sort of a wild card, not something that we planned, is that we've got this big Trump China press conference. So if you guys didn't see yesterday, the market spiked lower in the afternoon because Trump said he's got a big press conference on China going on. We do not know what time that is. So if you're trading today, just keep that in the back of your mind that there is going to be some news. I saw some reports that it's going to be positive in that he's going to ease up with China. And then I saw some other reports that says he might be punitive following the coronavirus. So sort of have that Trump China wild card in there.
Yep. I'll be watching the options activity for the SPY on Benzinga Pro during that. Absolutely. All right, so we are at about 1 minute to 9:15 before we get started. Guys, again, we are at about 1,200 and some change, 12,000 and some change attendees. So we will do our best to make sure that we're monitoring all of your questions, making sure that you're getting the most that you can out of today. If you want to make sure you have the recording, make sure you go up to the top of your Hey Summit screen, and there's an upgrade access option up in the menu. You can go ahead and click that and upgrade your access if you'd like to keep the content. And then that option will also allow you to get into the breakout sessions, which don't start until the afternoon. So you've got a little time to do that. So without further ado,
and I guess just real quick, Neil, I'd say, I definitely recommend doing the upgrade just because you get to keep all the lessons. You get the video recording so you can go back for further study. But if you don't want to do that, again, at the very least, my one tip for today, have the notebook ready. It's going to move fast. There's going to be a ton of content, a ton of great education. Either get the videos or have the notebook ready. Ideally, you're doing both.
Yep. All right. And then now, without further ado, I'd like to bring Jeremy Newsom on. It looks like he's already here. Jeremy, are you there?
Yeah, my man. How are you?
I'm doing extremely well. It's great to have you. It looks
Beautiful.
like Anne Marie is here as well.
Yep, that's me.
Hey, Anne Marie and Jeremy, it's so good to have you guys both here to live trade with us. I don't want to do you any injustices. I'd like to start off with Anne Marie. Could you please tell us a little bit about yourself, your trading style, and what folks can expect to see during your live trading session?
Okay, well, first of all, thank you so much for having me. I'm so excited to be here. I love these kinds of things. And if you see me look up, I've got screens above me and screens to the left of me. So that's what you're seeing when I do that. My last name, a lot of people get it wrong because there's just way too many letters in there, but it's rubber band, marching band, that sort of thing. So it's Anne Marie Band. And my trading style comes from the fact that I have to really look at the fewest things possible. So the great thing about being with Jeremy today is that he and I are almost on the opposite sides of the spectrum. He can look at 50,000 things at a time and really process very quickly. And so his processing style is rapid pace. I'm a little bit of a slowpoke in terms of the fact that for me, I overthink way too much. It's one of my drawdowns. And so I have to build sort of markers to guard me against that. And so I focus on very few instruments and I look for very specific things to engage. And so that's really what you'll see. What I'm going to try to do is be vocal in telling you what my mental step through is as I'm looking at the spaces, because my thought is get a few instruments that you know really, really well and then trade their cycles day after day after day after week after week. And so that's really what you'll see me do today. I'm really looking forward to it. Can't wait.
You're on mute, Neil.
Hey, all right, Zoom, everyone. Jeremy, could you give us a little intro about yourself and what folks will see from you today?
Yeah, man, absolutely. And it's always an honor and privilege to be next to Anne Marie. I love Anne Marie. She's amazing. So Anne Marie, thank you for everything you do for the trading community as always. And Benzinga, thank you for putting this on. I know it's a lot of work. Yep. Neil probably put in like 70 hours this week already. So Thank you, Neil. Thank you, Luke, and the rest of the team. My objective today, very similar to Anne Marie's, I want to be an instructor. I want to help. I do realize that I'm a little neurotic and I spend tons and tons of time focusing on this and practicing it, learning it, and really understanding my methodology. But today, my main focuses will be on 5 specific stocks and then 2 that are gapping. So something that's moving nicely. And those 5 specific stocks are going to be Roku, AMD, Square, Tesla, and Marriott, ticker symbol MAR. So those will be the 5 I'll be focusing on. And then I'm going to find 2 or 3 other gaps about 3 or 4 minutes from now before the market actually opens. And like Anne-Marie mentioned, I'll do my absolute best to kind of explain what I'm looking at, why I'm looking at it. And as far as the actual trades, let everyone know what I'm taking and why I'm doing so.
Great. Okay, so I want to hand it over to you guys so you can start sharing your screens so folks can see what you're doing. We're getting very close to the open. As I turn it over to you guys, would you mind sort of showing us what you're doing and telling us a little bit about your pre-market process?
Yeah, totally. Absolutely. So Can two people share their screen simultaneously, or do I do it and then Anne-Marie will do it and vice versa?
Jeremy, since you're already going, why don't we start with you?
Let's do it. All right. So here's what my objective is. And so this is kind of my process. Is what I like to do is scan for what companies I'm focusing on and how they are gapping. I'm specifically a momentum trader as far as day trading. I do specialize in both options and stock, although stock, in my opinion, is always easier. A lot of people love the options because of the volatility, because of the return on your investment. And Fridays, of course, is always the best day for option trading, in my opinion, because they're just a lot less expensive. So I'll kind of share a little bit about some of the options I'll be looking at. But my main focuses are going to be some of the stocks that you see on my watch list. These stocks are stocks that are moving pre-market. These are the ones I follow all the time. As mentioned, AMD, Roku, here's your Tesla, here's your Square, and here's your Marriott. And then you have Costco. They had earnings, and you had Zscaler, which also had earnings.
Reported, yeah.
Yep. So the two in red, those red arrows are stocks that are moving pre-market based on large sums of news, aka earnings. And the ones with the green arrows are stocks I just follow all the time. And then, of course, you have the SPY. I mean, everyone looks at the SPY all the time because that's the general breadth of the market, so to speak. So my overall thought process, and then I'll turn it over to Anne-Marie. What I like to look for is what stock's gapping, what they're doing. So this is AMD. And specifically, if I'm going to do anything in the first 5 minutes of the day, a stock must be gapping above its previous high or below its previous low. That's what I'm looking for. So this is the daily chart right here on AMD. And I can look at the high of yesterday very easily. The high of yesterday was 53.34, and we are gapping to 52.05. So we are gapping up on AMD. I am watching AMD today for a bullish trade, but I'm not going to be playing it in the first 5 minutes because it's not gapping above the previous high of the day. What I then do is I look at the pre-market levels, Neil. Very simply, I'll draw a support and resistance level in the pre-market support and resistance, and I kind of play that range, man. So if we trade down into here, which is 51.30, I'm gonna look to go long. If we break out of 52.41 and retest that level, so something that looks like this, I will also look to go long. If we do not break out and we don't hold that level, I will look to short off of that price. And that's really pretty much it on AMD. Roku, same exact process. So if I come over here to the daily chart on Roku really fast, daily chart, high of the day, 110.84. We're currently getting opening at 109.75. So we're not gapping above the high of the day. So I will not be trading this in the first 5 minutes of the day. And now what I'll do is I'll draw my support resistance. So this is a pre-market resistance, and here's a pre-market support. So exactly like we mentioned a moment ago on AMD, I will look to go long down here. I'll look to go short up here. And if Roku does break out above the high of the day, hold, retest, and then begin to bounce, this is where I look at candlestick patterns. Right in here, I really start analyzing specific candlesticks like Morningstar reversals, tweezer patterns, hammers. I'm looking for some type of reversal pattern that lets me know I should be getting into this thing bullish. And I'll fly through the rest really quick. Tesla is not gapping above the previous high or the previous low, so I know I will not be trading that early. Here's the pre-market resistance levels. Zscaler is obviously gapping on earnings. This is a massive, massive gap.
Yeah.
Huge move. And it's gapping to an all-time high, actually. So again, this is the daily chart, just looking at where it's gapping, and it's specifically gapping the highest it's ever been. So generally, I'm not a buyer. When a stock is at an all-time high, and not to mention the stock mathematically is up about 150% since the whole Corona thing started. So what I'm looking for is probably a fade to the downside on Zscaler. What that means is I'm looking for it to move higher. All the noobs, which was me 10 years ago, right before I found Anne-Marie. 10 years ago, I'm hopping in this thing. I'm buying all the call options, and then it rolls down. So that's kind of what I'm expecting to do, is wait for a little bit of a flash higher, then potentially look for some type of short on Zscaler. Marriott, it is gapping below low of yesterday. So I'll be looking for this one, some type of bullish candle to come in, and then a breakdown below the bullish candle. And then Costco, we're gapping down very small on Costco. This is the daily chart. The low of yesterday was 306. We are gapping below that low. But you do have what candle everyone knows, the most famous candle, I would argue, the singular candle, the hammer. So even though we're gapping below the low of yesterday, I'm actually going to keep an eye on this hammer to play out. If we break above the hammer, I will be going long on Costco. I don't short Costco generally because it's Costco. So that's what I'm looking for this morning. Anne-Marie, I'll stop my screen share and let you share your genius as well.
Thank you very much, Jeremy.
My pleasure.
Let's see which screen I want to share. Let's share that one. Okay, hopefully you can see my screen. Yep, perfect. All right, so Jeremy's approach and my approach are really quite similar. We're very focused on price behavior into the morning. And for me, what you're looking at is the futures market. It's where I spend a lot of time trading. Like I said in the very beginning, my goal is to find a number of instruments that I know inside and out, where their levels are, where people participate, what I'm looking for, and then I will trade like I'm using my account as an ATM machine. And so traders and investors have to look at their markets differently because investors need to have time on their side. A trader is using price primarily, where an investor is willing to wait for something so that time allows them to benefit. So for me, as we go into the day, we've got about 3 minutes until the open. What we're really looking at is the ES, and that's the S&P futures, the E-mini futures. And this will be my trade tab. You're going to see where the position is and what our P&L is as we're moving along. And the things that I will look for after the open is how well we've held the day before. So if we look at our daily charts, you can see all that trading there. But if we look at the daily charts, what we can see is we've got a pressure event here because we have not gotten over yesterday's close and we are battling with yesterday's low. And these are the same kinds of topics that Jeremy talked about. So one of the things you want to look at is how are we using many of the same observations to strategically position ourselves in the trades. And you'll notice that it has a lot to do with how well it defends price. That's really a very critical thing. And so we'll be flashing through the ES, we'll flash through the NQ, that's the NASDAQ. We'll look at the Dow, and we'll take a peek at oil. We'll see how those things are moving around. I don't know how noisy things are going to be, but I will tell you this, the VIX, since about maybe 3-4 days ago, the beginning of this fairly good week, has crested upward into resistance all week, even as our prices have sort of held on. And this is a warning zone for me that we might have a little bit of a sea change. So I'm going to be keeping my eyes on that quite a bit. Yeah, that's it.
Love it. Beautiful. So we got 90 seconds until open, team. And yeah, again, it's all sentiment, it's all price action, which you have to ask yourself, like Anne-Marie mentioned. Remember, when you're looking at these things, you're looking at what people are doing. So there's someone buying or there's someone selling. They have an emotion attached to that. So if we can determine what their emotions are, and are they scared, are they worried, or are they upset, that helps tremendously, because you can see even on Anne-Marie's screen, like you have these two support levels, these two levels here. People were going long, but people were also shorting. So you have both sides kind of battling it out. So I'm really interested to see if we do and can reclaim a little bit higher and trade back up to this resistance, which I think we most likely will. But if we don't, right, if we break through it and retest it, you can almost expect Anne-Marie to be short. So it's going to be interesting to see how it plays out.
Listen, your John Madden skills are over the top. That's great.
He's a hero of mine. All his
oh man, I love John Madden. I really miss him. I do. Yeah. I miss John Madden. Of course, I miss all sports actually right now. It's crazy. Yes. And I need for you to bang that gong sometime today.
Peace gong. Absolutely.
All right. So, do we split screen, Neil, or are you watching both of our screens?
I think we're just gonna pop back and forth, Anne-Marie. Like,
okay, great.
If I know I see something, I'll flip over to mine.
All right, sounds great.
Yeah,
so
exactly. And real quick, let me just say, if you guys need anything, let me know.
Okay, great.
When you guys get a moment of downtime, I know we're getting started right now, but when you do have a moment of downtime, I'm going to bring up some of the questions we're getting in chat. But right now, I think we just get going.
Yeah,
okay.
Totally. And Anne-Marie, here's a question a lot of people are going to have. How long do you wait normally before you take a trade? What's your process for that?
That's a really good question, and it really has a lot to do with price. And so sort of the big thing for me is this. Yes, all of these guys battled here, but the big thing is they bought here. So if I were looking at this and I would say, hey, listen, I'm interested in seeing how well they hold this support zone, I might just wait for it right here. Because it's early in the morning, if I see it come into the fade, I know, one, it's got to come in and buy, right? I don't want to get overly anxious. I really hope it comes and gets me. If it doesn't, that's going to be a pain in the neck. But what I will do is look at these guys and say, hey, everyone is shorting into these areas where they really bought before, right? So I might look at something and say, hey, maybe what I really want to try and do is they're really coming up to try and hold it. So if it doesn't, here's something interesting. If this doesn't come down into my level and it bounces, the first thing I'm going to look at, notice I'm an intraday trader, but these are 30-minute candlesticks. What traders have a tendency to do from an intraday perspective is get too small so they don't see the big picture. And the big picture is, listen, you come into 3016, 3015, people are going to buy. My goal is the following. If I use my account as an ATM machine, I want to go in and minimize my risk exposure. And once I minimize my risk exposure and I get involved, I want to move directly into where the price action is going. So notice the traders bounced off of the level. Now they're trying to hold this zone, and the next zone they're going to try and hold is this zone, right? So this is exactly what happens every single time. And you can see it over here on the 4-hour that we really are below the VWAP, but we are sitting in a very congested and sideways pattern because the price action is bullish, right? See Jeremy just drew those higher lows for us, which I absolutely love. Those things are telling us, hey, listen, that means I am pushing up. The first place I'm going to try and catch is the VWAP. So if this had caught me, my first position would be saying, hey, listen, I want to take some profit here, but ultimately I'm going to get out of this long from here to here. That would give me 10 points, $50 per point. That's $500 per contract.
Yep,
I move my ATM card out and I'm done.
Yep. So when you guys see, you can see this is a limit order. So what she was working on doing is getting filled at 3014.25. So a limit order means she is trying to buy at that price or lower. So that was her goal. And again, as simple as it might sound, Anne-Marie had a support level based on her analysis. And she was saying, okay, I want to go long at that support level. I have a line in the sand. People have bought there before. I want to buy there because I see that they're buying there. That's a really, really big takeaway because someone in the chat panel was asking, how do we know if we should be long or short in the markets? And the answer is simply, in my opinion, you create levels of what you want to do, and you play those levels based on what people have done in the past. And we don't know if it's going to be right or wrong. We can lose on the position, but if we can see people bought there once, people bought there twice, I'm going to try it again. And when it doesn't hold, right? You can do whatever you want to do. But in this regard, all Anne-Marie was doing is just trying to buy at that support that people bought off of before, because you have short trader, short trader, short trader, short trader, short trader. At some point, shorts have to buy to cover. And that's what she was working on. 10 points on one contract, or 10 points on any contract, is a phenomenal futures trade.
Yeah, and thank you so much, Jeremy, for adding to that, because that really is the basis of things. A lot of times we do things like this. This is a VWAP, this dark pink. This light pink is a 5 exponential moving average, and this thin gray line is a 5 simple. And so these are the only things I look at. If this rolls over, we might be saying to ourselves, wow, that looks like a short. But where we engage is how we need to manage the risk. So if we look at this downward motion and we think to ourselves, listen, this is a short, then the short action comes in at the last area of resistance. And so really what I would do is that I would look at my 30-minute candlestick here. I would notice the VWAP above, but the failure of that candlestick would give me short action sitting in this direction if I had chosen that the first time it faded. Now, my overall thought, based on the 4-hour, based on the daily, is that we are in a sideways patch, which is going to be very noisy trading. It's going to be very, very noisy trading for a bit. I think people are nervous about this US-China business that's going on. We've got a lot of unrest. Listen, you coop people up in their homes for weeks and weeks and weeks and weeks on end. They're going to act out over things that really, some of us feel they shouldn't, some of us feel they should. Whatever the case is, we are really in a region that makes the market very unnerving right now. And so I would say be ultra careful today, because really, as far as my notes see, I cannot tell when they are going to do this conference. I'm going to shift one of my screens over to Bloomberg so that I can see if there's news coming up on that edge.
Yep. And one of the key takeaways, ladies and gentlemen, is when Anne-Marie is mentioning, and we're talking through the trades, she's mentioning the ATM machine, right? Seeing, all right, if I can make $500 today or this morning or early, your number one job from there is to not give that profit back. So you can trade as many times as you want the rest of the day, but if you had $500 of profit in the first 37 seconds of market open, that's pretty awesome. I mean, $500 a day is about $2,500 a week, give or take, approximately, theoretically, right? Minus taxes. It's not a bad month, realistically. Again, if you're working for minutes a day, hours a day, doing what you actually love doing, the goal is simply not giving that back. If you go realize green on the day, the number one sign you're a noob trader is going realize green to realize red. You should never do that. It's just simple math. Don't do it.
I have to say it does happen to me occasionally, but I try for it not to.
We try for it not to. Yeah.
You know, sometimes we set up a trade and it goes badly. Here's the thing, folks. The number one thing for you to realize, and this is a cold hard fact, most of us that look at the trading space will run out of money before we learn how to trade. And it's because we don't know how to manage risk.
Yep.
If we learn how to manage our risk, we don't care about the trades we miss, only the ones we get. And so for me, some of you might go, well, gosh, that's terrible. You totally missed that trade. Listen, there's going to be 1,000 of these for the rest of my trading career over and over and over and over and over again. I let the market come to me. If it doesn't, I don't take the trade, because I trade to eat. And so it is meaningful if I have, you know, my $500 trades and I do, that's just one contract, folks. If you really work it with 2 contracts, which is really ultimately what you want to do, you take 2 contracts, you take the first one off at your first line of profit, you move your second one to break even, and then you wait for it to get into the next target. And then Bob's your uncle. You don't have to care about what you miss, only what you take. And a lot of us really are concerned about what we miss. And I like to put it this way. Being concerned about what you miss is like going to a buffet. I saw something the other day on a tweet that said, no, that's not how you say it. Well, you go to that place with all kinds of food at the Waldorf Astoria, and you have your one plate, and all you're doing is thinking about what's left at the table that you simply cannot eat. And realize trading careers are made and broken one day at a time. One day at a time.
Yep.
And that is your goal, to make money every day, one day at a time, and not look for, the Barry Bonds hit for or Aaron Judge or whoever all over the place, way far away in the deck. That's going to come occasionally, but plan to hold your trade right into the congestion. Notice, if this had held for me, it is still giving me my target area that I would have gotten out. Still, the same target zone right up there at that 30-minute. And so the takeaway is this. When markets are sideways, what is the actual slope of this motion? I can draw a line straight through the majority of these contracts, these candlesticks. And so it tells me my moving average is flat. And people are going to move above and below, and that I'm bounded by range. If you're bounded by range, play what the market is giving you, not what you think the market is going to do. That's the difference. And the market is going to do exactly what it's going to do, whether we're there or not. But we strategize. We go out, get our piece of cheese, come back. And that's how it is over and over again.
Neil,
what's going on with you?
Question.
So I wanted to jump in really quick. One question that we're getting is, what are some technical indicators that you guys are using? I want to hear about some of those. And when you're talking about them, let us know what tool you're using, because sometimes they can be named differently, or sometimes they can be accessed differently on different tools. So technical indicators that you guys are using for your strategies here. And then after that, I do want to flip over to Jeremy and then take another look at those gaps.
Lovely. For me, this is a VWAP, volume weighted average price. This platform is Motive Wave. And so we are looking at this just simply from Motive Wave, but VWAP is the same thing all over the place, right? VWAP means the volume. If people are above the VWAP, they're more inclined to buy. Below the VWAP, they're more inclined to sell relative to trend. So if they're up here, and they're prone to buying, they're going to buy into resistance. If they're down here and they're prone to selling, they're going to sell into support. And so when the VWAP is flat, that's what you're looking at. This is a 5, and I use the 5. It's very fast because I have a 30-minute. It helps me understand overall rotation in the market, and I look at the difference between the 5 simple and the 5 exponential, because if the exponential is moving faster, which it often does in the near term, because an exponential uses the forward part of the moving averages and the forward part of the candlesticks more aggressively than just a simple that weighs everything exactly the same. It tells me what's going on. And I just use a standard MACD. If everything is above 0, I'm still holding support. If I have a small dip below 0 and everything was above 0, I'm still holding support. So the way to read the MACD is, a lot of people have some ideas about that, but mine are certainly very straightforward. All right, let's start it over to you.
Right. I'll flip it. Perfect. Because what I want to do is I want to show some traders 2 methodologies for order inputs in their brokers. This is something that I like to do a lot. As far as the gaps, let's kind of go back over here to Marriott's one that I'm looking at. So Marriott, I mentioned earlier today that my goal was to wait for some sideways movement and let some bulls come in, try to protect some of the support, and then potentially short it on the downside. So one thing that I like to do as far as my order entry is very frequently, I will like to say, I only want to get in if this particular price, right? If the particular stock gets down to a level. And so breaking out an opening range. And this is an order that confuses a lot of traders. As far as indicators, I don't specifically use any right now, at least. I generally just use candlesticks and volume. It's just kind of my thing. So what I'm looking for in this regard is I'll kind of show how I will put in this particular order and how I calculate risk. So the way I like to do it is if I put my stop loss up here, so this stop loss will be $91.80. There's a way to calculate risk that I think is usually kind of valuable, is understanding the difference between your stop loss and your entry. I like Marriott because it's a super volatile stock. I mean, this thing can move like $2 or $3 a day in any direction, whichever you prefer. But one thing I like to do is figure out how much am I going to lose on a trade. So what is my risk? So let's just say, for example, that's $500. So that means if you are wrong on the trade, so the trade just simply does not work, you're not right, good try, go home, try again later, you lose $500. So the difference is 91.80 and 90.15. So the difference between those two numbers mathematically is $1.65. So we're talking second grade math, nothing crazy, right? Entry, stop loss, take the difference, $1.65. Then you throw in the division, right? 500 divided by $1.65. What is that? What is that number? And that will give you 303. So 303. What that represents is how many shares you can be in this position. And if you are absolutely dead wrong, you're going to lose $500 mathematically. And if you are right, you potentially can make more than that. Now, here's a really cool question. Another way you can consider doing this is if you want to base your contracts and your futures, your options trades, you can do 3 contracts. Right. I'll show you another way you can visually look at how many options you can actually trade as well. But what I would like to do is when I'm setting up a trade like this, I very frequently will like to set up the whole trade at once. So let me do that now. I'll show you all how to do it. Give me 3 seconds to pop over to Thinkorswim, and I'm just going to move my chart over. Give me 9 seconds. 5, 4, 3, 2, 1. Okay. So Marriott's going to look something like this. When you're looking at the particular chart, and again, this is Thinkorswim. Everyone's pretty familiar with this particular platform. Here's the 5-minute chart right here. And if I want to set this trade up, all I need to do is right click the chart. You can come down here to where it says sell custom with OCO bracket. So I'll do that again. All you have to do is you can trade from this particular chart here is you will right click the chart, go down to sell custom OCO bracket. There's 400,000 different ways to trade on Thinkorswim. You can use active trader. You can do time and sales. You can trade from many, many various aspects. This is simply one way. The reason I do like the OCO bracket is it gives you a stop loss and it gives you a target predetermined. So for a lot of traders out there, this is a useful skill and a tool to have because it has a limit, which is your profit for a short trade. And this is your stop loss, which is your exit for a short trade. And all you have to do is input the correct order. So if you're doing 303 shares, as an example, you click this little paperclip looking thing right there, and it can pre-fill all of your orders for you. Now, again, you can do this faster through Active Trader. What I like to do initially is have traders do it manually so you can kind of see what you're doing and see the order entries and see the actual understanding of why you're getting into the trade. Because knowing these guys really, really, really matters. This is your order type. So if you did a limit, okay, so right now the limit pre-filled at 90.19. If you did a limit, remember you would get filled immediately because you're selling. So if you're selling, ladies and gentlemen, and you don't want to get in until it gets to this price, you must do a stop order of some kind. So you can either do a stop, this is a stop market order, which means as soon as it hits $90.19, it's going to sell short at market. But if you do a stop limit order, right? So here's if you come in here and do a stop limit, you actually get to determine the stop price, and then you get to determine the price at which it tries to fill you, $90.19 or higher. And generally, what I like to do, in my opinion, is keep the numbers the exact same. I like to just kind of wait, let it do its thing, and it's easier for me to calculate the risk based on that situation, that scenario. So if I wanted to do 90.15, like I mentioned earlier, so 90.15, I would come up here, change that to 90.15 as well. If I come back over really quick, my stop loss was 91.80. So 91.80 would come over here. This is the stop, right? And then the target, we can make the target anything we want. Generally, I like to aim for 2 times my risk. So again, if this is a $500 risk unit on this particular trade, I like to try to get 2 times that risk. That's the goal. Sometimes it happens, sometimes it doesn't. Generally, it doesn't. Very frequently, I find myself exiting at 1.3, 1.2, 1.4. I'll show you some math in just a second that you can kind of really revolutionize your trading a little bit. But here's a target. This would be 86, 83. So that's 2 times my risk. So remember, risk was $1.65. So I'm taking $1.65, multiplying it times 2, and then adding that to 90.15, which again, this is second grade math. So don't let it stress you out. This is something that can take you 45 seconds when you start really, really getting in the hang of it, and you can just start throwing in some orders pretty quickly. Neil, you said you have a question for me, man. Go ahead and throw it at me.
Yep, from the chat. Do you have any suggestions on a mass loss on a daily period, on a weekly period, or a monthly period relative to your account size?
Yeah, I actually do. I do. That's a really, really good question. Again, this is just my opinion. Doesn't mean that it's absolutely factual, but generally, most big time traders really like to do 1%, 1 to 2% of their account size as risk. So 1 to 2%, again, as an example, let's say you're trading $25,000 account. Well, let's say 26,000. All right. If you're trading $26,000 and you're day trading relatively full time, you could pretty easily have a $250 risk. So the $250 risk would be about 1%, right? It's actually a little less than 1% if we're doing the math, but around that 1% threshold. From there, my personal opinion is you should never have more than 5R loss per week or 10R loss per month at any point. What I personally like to preference is I'm okay to lose 3Rs in a day. So 3R per day or 3 risk units is kind of my max. So this is just simply a percent, right? So 3% per day, whatever your percent is. So if you're trading a $100,000 account and you're trading a $500 risk unit, that is 0.5%. So I still use whatever that percent is. I will be okay to risk 3 of those per day. So if I'm just off, not getting it, I'm not feeling it that day, I'm okay to lose 3 of those overall full risk unit trades, which would be for me is 1,000. So I do $1,000 risk per trade. If I'm doing $1,000 risk per trade, that means I'm okay to lose $3,000 a day, $5,000 a week, or $10,000 a month. If I hit those, I'm pretty much tapped out for a little bit, and I'm doing some type of pause. I'm doing some type of break, some type of meditation. I'm doing something where I definitely lock it down for a while. So that's a great question, Neil. What else you got for me? Or if you have anything else for me, let me know.
Yeah. So we have a couple. So some basic ones I think you can rip through pretty quick. You mentioned a contract. The question is, did you mean an options contract?
I did. Yep, I absolutely did. So here's another way. I'll show you in Thinkorswim, just a way that you can, give me one moment. I'm gonna pause again and pop over here. So here's one other way that you can look to play an option contract. That is correct. So this is Marriott again. If I'm looking at day trading, I do love day trading options on Fridays. So this is simply an options chart. Calls, you're trying to make money as the stock goes up. Puts, you're trying to make money as the stock goes down.
Really quick, Jeremy, why on Fridays?
Great question. So Fridays is option expiration Friday. So what you'll notice right here is May 29th, 2020. That's today. So when you have Fridays, 99% of options expire on Fridays. So you do have SPY and a few other instruments that have options expire on Mondays and Wednesdays. But on broader stocks, let's say Apple, Tesla, Google, Facebook, Netflix, you have options that expire on Fridays. So what that means is they're extremely inexpensive. So right now, you could buy an option on Marriott for 85 cents. What that means is one contract would literally cost you $85. Now, what you'll also notice is there's a bid and there's an ask. So there's a 60 cent, 85 cent bid and ask. You could probably get filled on this for 75 cents rather than 85. So you just save $10 knowing what a bid ask spread is, all right, per contract. So that's a lot if you're buying 30 or 40 contracts. But if you're buying one contract, all right, and you're buying it for 75 cents, and let's say Marriott drops to $89, this option will increase in value. One way that you can have this particular chart actually graphed for you is right click on the chart. And again, you can send to, if you want, right here, you can send to a particular chart, or you can click on copy and actually take that exact chart and paste it. And this is the option pricing chart in candlestick form, which is really, really, really helpful for a lot of option traders, because many option traders don't even know that this exists. You can do this in Thinkorswim. You can do this in Interactive Brokers. I think you can do it in Motive Wave. You can do it in a lot of other charting softwares, but it's where you get the actual option contract in candlestick form. The reason that's helpful is you can see where your entries should be and where your stops should be. So if I'm looking at taking an opening range breakout on Marriott, I'm looking at getting in at about $1, and I would put my stop loss at about 40 cents. So that's a 60-cent risk. All right, $1 minus 40 cents. I can see that on the right-hand side of the screen, how many of these options are going to trade for. And you can do the exact same thing. If you want to trade one of these positions, you can trade right from the chart, buy custom, OCO bracket. So the reason you're buying it is because you're buying that option. You're trying to make money in a direction. So you click buy custom OCO bracket, and then boom, here it is. You have an entry that you can create. You have a stop loss, and you have a limit sell. So this would be a target. So I actually do like this particular Marriott trade. This is one, if I pop back over to here, I'm also really going to be keeping an eye on Zscaler, because this is the area of which I mentioned before market open. This is where I'm looking at shorting Zscaler. So if you remember, this pink line is the same line I had drawn, all right? Same exact line that I had drawn before market open. So I was looking for the noobs to come in, run it up, everyone expecting this thing to just go to the moon and then potentially roll over. So what we now have is we have a new all-time high area on Zscaler, and having a new all-time high allows you to have a trade that looks just like this. So this would be a limit sell, and this limit sell would give you the opportunity of, meaning that you're trying to get in bearish with a stop at a previous all-time high. So Zscaler, again, setting this particular trade up. Give me 3 seconds. Let me get this one over here as well. So Zscaler, and then I'll flip back over to my girl Anne Marie. Here is the Zscaler position, Zscaler chart in Thinkorswim. So again, if you're setting this particular trade up, like, all you have to consider doing is setting up a limit sell, which I would do probably right about here. $91.64. Sell custom. Again, when you're doing the sell custom OCO bracket, you're able to actually have your order input. So 91.64, stop loss would be 93.64. That's really easy for me to calculate risk. $2. So if you have $1,000 risk unit, divided by 2, 500 shares. If you have $500 risk unit, divided by 2, 250 shares. If you have $100 risk unit, 50 shares. Really, really simple. 93.64 is the all-time high on Zscaler. And then the target, we'll see what the target would be, but let's just say right now it's going to be 89 some change, or at least very close to that. And then that would actually be the trade that I'm going to throw in on Zscaler and see if this bad boy works. So, Anne-Marie, all you, Rockstar.
Thanks. So while Jeremy was, I'm a bit of a quiet trader. So while Jeremy was working through everything, we actually had a trade that was short that popped up into this range here. I was looking for it to break underneath this edge. I know that because I have negative drift on my moving averages, and I have a fairly sideways formation, that it shouldn't hold this level because of the negative drift here, because of the color of the MACD. It tells me, listen, I've got selling pressure sitting above me. So the short initiated here at the 30.27 area. Down here, I was paying attention to Jeremy and didn't notice that it was bouncing off of this area, which is really where my limit order should have gotten out. Instead, I closed it here. And so that's for $275. Now, Let's see if we can do the chart settings here and show the trade history. It's going to get a little noisy, but you'll see we went in and just got the 4 points, a little bit more than 4 points, 4.5 points, and sitting looking at the space. Now, ultimately, what we are seeing is a little bit of downward pressure for the morning action. Remember, I look at this VWAP quite a bit, and so the VWAP tells me, hey, here is what the sellers are thinking once they drift below this area. It takes the ratio of all of the traders that are either long or short, and they say, all right, there are more people losing money because this is the level that the average price that everybody was in at. And so once we break an average price, we're likely to fall into a support zone. Okay, so this support zone should be here, but if our VIX, which is what we're looking at here, if our VIX decides it's going to break out from its forward motion, let's move that to something that's maybe moving a little faster. I don't seem to be getting the reader on this that I should be. We won't worry about that. I can see the VIX from my other charts, and it is continually trying to expand. All right, so we have a couple of thoughts here. We have a thought of, hey, it just came into 16, maybe I can hold it again. And so if we look at this area where the chart has bounced most of the time, right? It's bounced really right in this zone. We're thinking that that bounce action ought to come first into here and then into here, right? So once again, what we are looking for, because this is downward, because my MACD is looking like this, I'm looking for the bounce to short, right? I'm still caught in a sideways trend, and you can see from my 4-hour chart here that really people are buying these edges. They are. And so I don't know until this 4 o'clock candle close, this 4-hour candle closes at 1 p.m. I don't know if they're going to stop buying here. So until that's proven, I won't be shorting here at this edge because everyone has told me, hey, I know it looks like I dipped down here, but I am buying at this zone. And what I am continually trying to do is get above this flat VWAP. Flat moving averages or undulating moving averages or price action that stays bogged in a formation are the most difficult ranges to trade. I'm very sorry that this is what the market has given us today, unfortunately, but it is what it is. So hopefully, something can open up for us. One of the things that does bring to the fore, though, is this understanding that traders who make a living at this really very interesting business is that we don't force trades. A lot of times when we sit in front of the chart, we think to ourselves, you know what? I simply have to make a trade. I've been sitting here this whole time. I've got to find a trade. I have to tell you that whenever I have thought those things, I have lost money. Just once you have a strategy, and mine is very simplistic, I buy at support and I sell at resistance relative to trend. So my first trade today in this area is I'm selling the short relative to trend, and I'm buying at support. And that's really all I see for now until my moving averages tell me something different, right? I don't trade tighter time frames simply because I don't like to. It causes too much moving back and forth of mindset in terms of what is supposed to happen. I like to look at the big picture, sit on the right side of trend, and if the price action moves in my favor, great. If it doesn't, also great, but I am just going to hang tight as long as my chart does exactly what it did in the past. I'm just going to follow along.
So here's a question for you. And I know Neil has
Yep.
two as well, Anne-Marie, but some other people are asking, why choose S&P futures versus trading the SPY shares or SPY call or puts?
Leverage. Leverage is fantastic. So here's the thing about first the options. When you use an option, you have to be conscious of how much implied volatility is being priced in that option. And you have to look at things in terms of the relative delta. So let's say I buy a SPY put and that delta that I pick up is at the money. If my price action moves $1 and my delta is 50, I'm going to have a 50-cent move in my option, which might be very, very nice. But if the formations are changing and volatility drops right out of the option, then I'm going to have to move more to actually get the price right. It's easily a way that you could work it. Absolutely easily a way that you could work it. No doubt about it. You can most assuredly move to that edge. But if I have an options account and I use, I have a $500 risk event for the engagement for each option. So my leverage of $500 just a minute ago made me a return of $275, and that's way more than 50%, right? So it's 50% I just made off of that one trade. So the leverage is why I sit in the futures charts. Now, leverage can be good and leverage can be bad. If you're good at what you're doing, leverage is going to really benefit you. And if you're not good at what you're doing, leverage is really going to hurt you. But that is why I choose it. With a $500 margin, being able to pull off $275 in just a couple of minutes gives me that 50% return, which I absolutely love.
Yep, love it. Neil, what were your questions?
Yep. So now that we're getting more into the Q&A session, I think we have some stuff that's moving a bit away from options. Number one is just very basic. What's a quick process that you go through when you're drawing resistance lines?
For me, I just look at where the close of the day was yesterday. Where's the low of the day yesterday? Where's the close of last week? Where's the low of last week? Markets have price memory. Take a look at what's happening here on this area. Listen, our volatility is spiking, all right? And so we are, remember, the VIX is the measure of how many people buy puts. And people are nervous right now. They really are. One, we've had monster, absolutely incredibly monstrous moves. The second thing is all of my indicators that I work with really showed this big press out to the upside, but no buy triggers on the swing. Here's what I mean by muscle memory and price memory. Do you see this 4-hour chart, how even though volatility is rising, there are buyers? Take a look at this. This is called a depth of market. It tells you where the buyers and sellers are sitting up. They are sitting right at this prior area because they are remembering, a la looking to the left, and seeing that, wait a second, everybody bought here. So I'm going to try and buy here. The problem is there are now sellers sitting up all around these zones, all the way up to, let's see where the biggest sellers are, really all the way to here. But the second this turns really bright red, it means that they are overpowering the buying pressure. And so there's a huge battle here. What you do, if you're looking at this, you go, well, wait a second, why is 3014 important? And if you look at the daily chart, right, you're going to see that this 3014 area is dipping into this wick over here. And really, as soon as we started losing the low of yesterday and the high of 4 days before, our price action started to weaken. And so from now on, all I'm going to be looking for is short trades, because the price markers are telling me, listen, any kind of bounces here, I'm looking for weakness, because they are using that price memory event to get themselves into these lower levels. So that's how I use them. How do you use them, Jeremy? How do you set your prices up?
Great question. So Neil, if you can for me, ask that gentleman or gentle lady which stocks they want drawn support resistance on. I'll kind of talk about the very first things I'll look for. Generally, and I'll keep an eye on the chat pane as well, but generally I'll kind of start with a monthly chart if I've never heard of the company before. So if I have no idea what the company is, obviously I know Square, but if I've never heard of the company, I'll just pull up a monthly chart and go, all right, cool, big picture. What's the trend? And so this is a bullish trend on Square. All right, awesome. So from there, what I look for is just the most strong candles on the chart on the monthly time frame, just to kind of give me like a big overview. So when I'm looking at this candle, right, that's the biggest bearish candle. So I personally subscribe to the theory that a lot of big candles are very, very good levels of support resistance. So I will draw one there on Square on that particular resistance, and I would have a support here based on this particular candle right there. And then after I have those two support resistance levels drawn, I'm going to have one support resistance level drawn here, and I'm basing that off of the body, aka the open of this bearish candle there, because that is I would argue, the first or second most strong bear candle on this entire chart. And then once I have those three levels drawn, and let me actually see if those are the levels I have on the chart. So let me delete all the drawings for a second. So this is my main level right here on the monthly. Then I'll pop into like a daily chart. And once I have the monthly levels drawn, I go, all right, in the daily chart, what are the biggest, most important candles presently or recently? So if I'm looking at this particular chart on Square, I'm gonna draw a support line here based on this candle. And again, I'm gonna use the body. And then I'm going to use this particular level price action right here, because it's just a spot where the stock obviously stopped moving and then pulled into that spot right there. So I will draw another level here, and that would kind of be my two main support levels on Square. And I'll go look at INO, MDGS, and Hewlett Packard. So this would be a support. This would be a support. And the way I would play it personally is up in here, I'm more short to cautious on Square, expecting it to trade down to 72.09. That's where I'm looking to go long. And then if it breaks 72.09, I will short it and then look to go long at 56.05. But the key point is I will be looking and I will be playing longs at those two support prices on Square. And if it doesn't work, that's okay. So let's go look at INO. INO is a great example.
And Jeremy, as you do that, with your style here, you're mostly looking at daily charts, right?
Mostly, yeah, mostly. Again, big picture. So this is the monthly chart on INO, because I'm just simply trying to look at what the heck is going on. And the first thing that jumps out to me on INO is this wick right here. So the very first thing that jumps out is that wick. It's a massive candle, huge upper shadow. I mean, that was like a $4 upper shadow. That's 63%. That's insane. So I will draw a support resistance level right there based on just that wick. And what's really interesting is we'll see how well it interacts there and how well it's already interacting here. So 1357 is a big price point for INO. And then just like Neil said, I'm popping into the daily chart. And once I have the daily chart up, I'm going to look at my support resistance levels based on the open of really big bear and bull candles. So that line is drawn based on this one. And then this line is going to be drawn based on this one. This is just simply the most recent, strongest bullish candle. That's really all. So as I'm looking at this, it actually does look nice. You have 3 days of sideways movement. We are hanging on top of right now a very strong support resistance price. And so if I was playing I&O, I would go long above there with a stop loss there. This is the first time I've looked at this chart in probably 3 months. And that's how fast I can do the analysis in regards to pretty basic and simple support resistance and then candlesticks. So I'll do the other 3. And then I know our time is going to be closely expiring, Neil. So MDGS, again, monthly chart, never heard of this company in my life. And it's just going straight down. This is what's called a ski slope. Don't trade that because you are betting against the weight of all of the people who hate this company. So this is the weekly chart. I mean, you had 1 shot to go long, and that was 3 weeks ago. Yep, that one's just going to go right to 0. So that one's really easy to look at. Next on the list is HPQ and Hewlett Packard. We all know what Hewlett Packard is. So this is the monthly chart on Hewlett Packard. I'm going to zoom out. And again, I'm going to look for really relatively specific support resistance on the monthly. So this line that I'm drawing is based on this guy right here. That's the 2000 tech bubble. It actually does act as a pretty decent support resistance coming in through there. So now that I have that, I'm going to draw one other line based on this support area right here. Right there is the next support line that I'll draw on Hewlett Packard based on the open of that candle. So now I got 2 major support resistance levels on Hewlett Packard. Then throw it into the daily chart. Again, at the daily, I'm looking for the most recent bullish, strongest candle, which is this guy right there, in my personal opinion. So at that price structure, this is where I would look to go long. Hewlett Packard 1379 would be an interesting price. I do kind of like this candle here. It's a really interesting candle.
Why?
Very, very small range. That could be fun to play either direction, honestly, up or down, because it is Hewlett Packard. I mean, I don't think they're going to go to 0 anytime soon, but really fun little candle right there. And that's just kind of how I generally draw my support resistance. Monthly, hop into the daily, look for most recent candles, and all is pretty good. To update the trades that some of you may or may not be in, I don't know, but Zscaler, I'm definitely losing on it right now, but it did trigger. And this one looks incredibly, incredibly strong, ironically enough. So I will say this. I'll be moving my stop loss down on Zscaler in just a few moments, looking to get out for a small gain because this stock has been holding up so well. And then Marriott, MAR, is retesting as well. So right now I'll be lowering the stop on both trades, which are both bearish. And it's not the most horrific position to be in as the market is struggling a little bit. So we'll see how it plays out from here. But that's what I got. And what do you have for me, Neil?
Yep. So just a quick update from chat. It looks like Trump might be talking at 2 p.m. today. I didn't verify that, but just watch
Eastern,
out
right?
from that.
Yeah.
Yeah, we guess Eastern. So I want to hop in. I think this one's more for Anne Marie. I want to talk about, and if you can define these in absolute dummy terms so that I can understand them. VWAP, RSI, and then there was one more that I'm going to grab for you right now. So if you could just start off telling us about how you use VWAP, RSI, and the MACD.
All right. So that's a lot to answer because I use them in really simple ways. Listen, the biggest takeaway, and I love it that Jeremy and I got to work together. His energy is just, anytime I feel my battery going down, I'll send him a text.
Yes.
Right. So, and really what he and I are talking about are incredibly similar. And the big things that we're talking about are price and price discovery in the charts. And so when you're looking at something and you've got technical indicators, remember, technical indicators draw a picture of what's happening with price. And so just remember, the reason that Jeremy has nothing but price candlesticks sitting on his charts is because they are the most meaningful things that you want to look at. And so if you have a moving average, and let's talk about the VWAP. Again, if you're above the VWAP, it tells you people are making money in their current positions and they're more likely to be buying price up. But if that VWAP is flat, it's just going to go into resistance, right? So if you're staring this down and you're seeing this motion, then if you look at this get up over the VWAP and you go, okay, I'm going to chase this long, you just have to remember that you have to look at where your candlestick wicks are and move through that decision, making the choice to say, hey, I'm out of that position. The MACD is something, the MACD is moving average, convergence, divergence. And so what the MACD tells us is, are my moving averages getting closer together or are they moving further apart, and in what direction? So MACD, moving average, convergence, divergence, I'm using exponential moving averages. One of my moving averages is 12. The other one is a 26. And then I am taking the 9 time frame to look at all of them. And so what this says is, over the last 9 bars, my 12 is moving ahead of my 26. That's going to make it green above 0. This is white for me. I don't really use red and green on my charts. It's just a psychology thing. All right. And so I have this motion up. It tells me, hey, listen, I am going to have a combination of upward pressure. And once I get above the VWAP and my MACD is above my 0 line, I've got to move into my front line of resistance. Okay, the second it starts turning the next color, and this is motive wave, of course, the second it starts turning this next color, what it's telling me is those averages have stopped moving far away from each other and are now moving closer together. A fast moving average always moves towards the slow moving average. I'm going to flatten this position now because I came right into the old support zone. And I still don't know, thank you so much. I still don't know if the position is going to hold. See, here's my philosophy. If you see a couple of $100 bills sitting on the floor, pick them up and move on.
You do that too? That's so weird. Like, I love picking up $100 bills.
Pick them up and move on. The goal for me and for both Jeremy and I together is to sit here and listen. The way you make big money is small pockets of little money over and over and over again.
Yeah. Many
of us are drawn into these great, hey, how I turned $5,000 into $325,000. Listen, that involves a lot of risk and a lot of luck.
Yeah. Yeah.
It absolutely does.
Yeah.
Go ahead.
Yeah. When you get around that 100,000 mark and you go from 100 to 2, it's like you're risking 85,000 of that 100,000.
Exactly.
So,
exactly. So once again, another reason I love the futures, $500 of margin gave me another $275 of return. So today I've made 120% profit out of my expenditures. 2 small places into the market. It's 10:25 my time in the morning. And listen, $500 a day makes you $120,000 a year. And if you think about going to your systems every day and saying, you know what, I'm going to get my car payment. All right, that's done. It's put away. I'm going to get my phone payments. All right, put away. I'm going to make my rent payment, put away. Use the market as an ATM machine and use the rhythms in the market. Take a look at how much this has bounced since I got out. I just knew, all right, if it's going to go here, this is where it's likely to stop. It could go lower, but that's not the game I'm playing. I want to get in there, sweep the account, make money, and then get out over and over and over and over and over and over again. And you do it until you start feeling tired, and then you stop.
Yep. And team, one thing is, if you're short, ladies and gentlemen, what a lot of traders do just too poorly is when a position makes a new low and you're short, it's a phenomenal spot to exit profit. So if you're in contracts on futures, buy to cover one or some or all. If you're short stock and you make a new low, buy to cover some, all, or a little bit. Trim and trail. When you make a new low, and this is what it did, right? We had this low here. We make a brand new low. And again, look at all the bearish candles you have in a row. You have numerous bear candles. Boom, 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 boom. So on each position, when Anne-Marie goes short in the stock in the position, the futures contract makes a new low. She covers because it's lower than where she sold it for. So you sell high, buy low, right? Don't overcomplicate it. If it goes lower, cover some.
100%. Don't overcomplicate it. You're going to see all kinds of things. Your question to ask yourself is, how can I use this to trade more effectively?
Yeah.
Not to trade more.
Yep.
To trade more effectively. And that's going to be the thing that we look at. Thanks so much for putting this together, Neil. Jeremy, always an honor to share the stage with you. We had fun the last time at the live trading event. It's been fun today. Just love it. It's a kind of a messy sideways day. It's really hard, to get some whiz bang awesome trades when the market is simply going nowhere.
Yeah, right? But you'll be looking for a long soon if I'm guessing.
It's good to hear. So actually I got a couple questions here. Sure. One is vocabulary, one is a little more personal. So let's get the vocabulary out of the way. Right. What does it mean to flatten a position?
Oh, that means to go, what it does is wipe out all your trades. If you've got a pending trade, if you've got, let's say you've got a sell order up here and a buy order down here, flatten wipes everything from the board.
Got it. Right? Got it.
Just closes everything out. So if you're in a position, boom, you're out of it.
Yeah,
so
it closes out, and it closes all your orders that are sitting pending because you don't want to get caught somewhere. So I will flatten so that I'm looking at what I'm doing.
Yeah. And that's a great question, but it's a super popular term. You'll hear pros use it all the time. It's like, I'm gonna flatten real quick. And that just means like, get out, flush it, clean it out. Cause something's happening. I'm scared. I want to lock in things. And then let me kind of readjust and replan. Great question.
Yep. And then the next one, I think Anne-Marie, you did a beautiful job of kind of answering this before I asked, but could you guys both, if you can, just get your trading style down to a couple words, describe what your trading style is, and tell us what attracted you to it. Why is that what you stick with?
Okay, I'll answer this one first. I got attracted to this trading style because I overthink everything, and I've got to make it simple, stupid, right? I am Forrest Gump. Right here. I am the Forrest Gump trader. And so what I am sitting with is, shucks, wish I'd get that. What I'm sitting with every day is, do I see a place where across the board everybody started selling? Then I'm going to sell. Do I see a place where everybody's buying? Then I'm going to buy. And that is it. If everybody doesn't buy where they did the first time, I get out. I make sure that my stop, for instance, if we look at this is coming down into like 30.06. This is a fairly good buy zone, right? But we've got some wicks down in here, so it's super noisy. It could drift all the way to here. So for me as a trader, if it bounces, I'm going to take another short. But if it stays here and just sort of dribbles down, when it gets to the base of congestion down here, I'm going to look for long action, because literally 1, 2, 3, 4, 5, 6 4-hour candlesticks, everybody ended up buying. I just need for the level to confirm. Now they sold like the dickens here, but they bought eventually. And so I will wait and then watch it recover and then get in. I will not buy it on the way down. I'll watch it. And then when it does what it does, look at how fast that thing bounced. Beast. Yeah. And so when it does what it does, I'm going to engage that way. So it's really, again, I say it jokingly, but I had to make my trading environment very simple because I overthink everything. And so I needed it to be simple. That's it.
I can kind of agree to that. So for those who are asking my trading style, I do a lot of math. This is going to sound really boring and basic as well. And that's why Anne-Marie and I have always clicked so well. But when I was younger, I had someone come up to me and they were like, Jeremy, if you buy 1,000 shares of anything and it goes up $1, you're gonna make $1,000. And I was like, wait a minute. That just seems, what are you talking about? Like that just, hold on. If you buy 1,000 shares of anything and it goes up $1, you're gonna make $1,000. I was like, there's no way, but I just did the math 2 or 3 times. I was like, yeah, I think that's correct. So I started I was like 7 or 8 when I really got that concept down. But what people have to understand is that concept applies so strongly to many, many traders and companies and positions and sizes. I love trading AMD. And one of my styles and approaches, guys, is I love trading 1,000 shares of AMD because that bad boy moves like $3 or $4 a day in any direction, up and down. So if I do 1,000 shares a day on AMD, and this is your whole strategy, your whole plan, you wake up, AMD, you go to sleep, AMD, it's AMD. It's like, that's it, right? Antonio Michael David. So you know this company, you're good friends, you guys have cocktails together. You buy 1,000 shares, you can start doing all kinds of fun things. If you do covered calls, if you do protective puts, if you do collars, right? AMD was the best performing stock in the S&P 500 last year. So if you're doing 1,000 shares on only AMD and it moves $2 a day, right? You get in and get out. Then the next day it goes down a little bit. You get in and get out. Next day it goes up a little bit. You get in and get out. On average, I know a lot of traders who can make 70 to 80 cents every day on AMD on 1,000 shares, which is, as Anne-Marie said, that's like $500, $700, $800 a day. That's around $130,000 a year. It's really not that bad doing something you love doing, which again is the KISS model. Everyone knows it.
Absolutely.
It really doesn't have to be insanely hard. And that's my specialty, is I'm really good at second grade math.
I love it. I love that we're getting down to the KISS method. I think a lot of folks that are present today, like myself, we look at all these charts and look at the terms that folks use, and it seems daunting. It seems impossible to get into. But we look at 2 traders here that have been doing it as their career, and the mantra is keep it simple, stupid.
You have to
keep it simple.
You have
Absolutely.
to, at least until you make money. And then you start making a lot of money, you can go, all right, well, let me flex and do something really cool and do all these fun option strategies. And you take $30,000 and you just kind of like learn with that account. That's fine. I'm okay with you doing that, but do something really, really basic that you understand. My original stock trade, first time ever, talk about Forrest Gump, back in 1994 when it came out, I bought some shares of Apple with my pops all the way back then because he talked about it in the movie. So when we're looking at the whole coronavirus thing, people are staying at home more and they're going to be online more, and they're going to be doing online companies and freelancing and trying to grow and add value to the world and make more money. So what companies are going to do well? Wix, Shopify. I knew that months ago. I was like, yeah, this makes tons of sense to me. That is the most basic, easy to understand rhythm of people are going to be using the product more, therefore it should go higher. And those stocks have done extremely well, up over 100% since the whole COVID situation happened. Up over 100% since COVID, based on the fact that more people are going to be using it because they have to, or they want to, or they need to.
Yep.
So
And that definitely speaks to paying attention to trends and
Yes,
having a story behind
absolutely.
your picks.
Yeah, for sure.
Have a story, do a little bit of thinking, man. Think and grow rich, right? Napoleon Hill. Sit down for an hour and just go through why and what will be beneficial and useful, and and then take a position on it.
Yep. Okay, so we got a couple more here. Actually, we're getting questions rolling in. So, thoughts on penny stock trading?
Good question. So, I personally have never met in physical form a human being that's made a lot of money trading penny stocks. I'm not saying it's possible. I'm sure it can be done, but consistently over the long run, it's extremely hard, because if you do have a lot of money, you can literally be the market on a lot of these stocks. If you
Absolutely.
I'm talking like millions of dollars. If you have legitimate cash, sure, dude, you can make $15,000 doing anything, honestly, in the market. But if you're talking like 150,000 or 1.5 million, like if you're going to throw down some money, you're not going to be playing penny stocks. I don't know anyone who does really well playing penny stocks, because you shouldn't. The liquidity is not there. Some of the best traders I know in the world would never touch a penny stock. And if you do, just know your risk, which is probably zero. So plan your risk on it going to zero. And if it's 25 cents and you go, all right, I want to lose $1,000 playing this penny stock, take $1,000 and divide it by 25 cents. So if it goes to zero, you're like, okay, cool. I lose $1,000. No big deal. So you buy 4,000 shares and you're done. I don't personally play penny stocks. That's just my opinion. But if you do play penny stocks, that's how I would suggest, is understand the risk, plan on it going to zero, and then taking your risk, dividing it by whatever the stock is trading at, cross your fingers, and hey, I hope it works out. The whole thought process behind penny stocks is people think that that Apple and Microsoft were at one point a penny stock and then they became so valuable. That was not the case. They IPO'd just like everything else right now. Shopify, Wix, Datadog. Like if you haven't made money on Datadog in the last 3 months, like what are you doing as a trader? These companies that IPO, right? Mongo database. I mean, Zscaler, which is up massively today. That was an IPO that came out back in the year before last. It IPO'd at $27 a share, and it's $100 a share right now. 93.82.
Crazy.
It's crazy. So the companies that are IPOing, if you're going to find the next Apple or Microsoft or Johnson & Johnson or Procter & Gamble, they're not going to be penny stocks. They will not be penny stocks. They will be normal companies that make money, that create revenue for their customers, and they're going to have a price tag associated with them, and you can buy them, and they will be relatively expensive, quote unquote. But just like Facebook, right? IPOing at 34 and some change, or 40 and some change, and going down to 16 and some change.
Yep. Risky.
That's how you're going to play these companies.
Yeah.
But it does sound like you're not afraid of looking at an IPO that might have an interesting story behind it.
No, I love IPOs. That is, if you're going to make a lot of money and you want to really, really scale into something, study an IPO, figure out what it's viable for, why it's viable. My two ones that kind of, I guess, quote unquote, put me on the map were Square and Shopify. I was bullish on Shopify at 40. I was extremely bullish on Square at 12.
Dude, you were bullish on Tesla when people were literally booing you in the street.
Yes. Which is fine. That is fine. Literally in the street, because I was in New York City when it was happening. People were like, you're an idiot, dude. I love Tesla. But yes, the big names, the companies, you have to put in a little bit of time and a little bit of research, but it's not insanely difficult. Like if you have to go to the headquarters of the company, do you like the CEO? Do you like the CFO? Do you like the marketing company? Do you like the people who are there? You know, like if you do that, you're going to start getting the feel and the flow for what these people are going to do.
Great. And Maria, I think this is a perfect one for you. How do you keep the 4 fears in check? Now, this person has broken down those fears into being wrong, losing money, missing out, and leaving money on the table.
What a great question. You know what? You're going to battle that every day of your trading career in some form or fashion. Every time I get out of a trade and it moves aggressively in my favor, I always go, you should have sat in there. You actually even heard me say that. I should have sat in there.
Yes.
So It is not a matter, listen, fear is always with us because it keeps us safe, right? Hey, don't walk blindfolded into a busy street. Obviously, there's a problem with that, right? So, what you have to do is figure out whether fear is real or whether it's something imagined. And so, here are the things: fear of missing out, that's an imagined fear. You don't really know the answer to that. The fear of, what were they again? There's the fear of missing out, the fear of being wrong. Okay, the fear of being wrong, also an ego-based fear, so it's not real.
Mm-hmm.
The only fear you should have is, what if I get into this trade and I lose more than my risk sets me up for?
Mm-hmm.
See, what you have to do is bind your decisions into a logic space and then realize that every time you do it, you're going to feel a little bit of trepidation because nobody wants to be wrong. Listen,
Yeah, totally.
I'm being watched by everybody here. I don't want to be wrong. I don't want to be wrong. But see, all I care about is following the process. If I'm wrong, oh well. I'm just following the process. And that's why you need to pick strategies that have expected positive outcomes. Now, let me explain what that is. An expected positive outcome means that if I took the trade 1,000 times, the outcome would be positive. And that means if you're taking a trade and you buy a put or you buy a call with a delta of 12, that means you have a 12% probability of that option expiring in the money. If I did that over a series of 1,000 trades, I'm going to be a loser. There might be one or two trades that are going to really hit it out of the park, but it's the outlier. And so when you trade an outlier, special things need to come into focus. And so the way I dissipate that fear is by facing it, saying, well, wait a second, what are you afraid of? You're afraid of missing out? Well, listen, if you miss out here, you're going to be able to participate in the next form, right? You'll just go to the next candlestick where things set up the next time for you. All right. If you're afraid of being wrong, listen, if I'm wrong, then what's at stake? My ego. You should put your ego in the cupboard. It doesn't belong in the trading space at all. You need to have no ego trading. It's going to ruin you if you focus on ego. The second thing is, well, I'm afraid I lose money. Listen, if you're afraid to lose money, you shouldn't trade, because trading, you lose money when you trade. Once in a while, you're going to have trades that go badly. Your job is to say, if this trade goes badly, what's the least amount I can lose? And see, most traders that I work with, they think to themselves, if I take this trade, here's the most I can make. Mm-hmm. And remember, the very first thing Jeremy did was assess the risk and then obey the risk. If something falls into your support zones and you're like, oh, well, maybe my stop, I put it in the wrong place, I'm just going to give it a little more. Obey it. If you learn to obey your risk events, you'll learn to position that risk properly. If you never obey your risk, you never will learn how to position your risk.
Yeah.
So it sounds like having a plan and being disciplined about that plan.
Oh
is
my
essential.
gosh, 100%. That's it.
Unfortunately, that's the answer. It sucks, dude.
Yeah.
Discipline is like, wait, you're telling me I have to be
know.
really disciplined to succeed in anything?
Yeah. Put away the donuts. That's me, right? You just can't. You can't say I'm going on a diet and then, head to the buffet and eat 7,500 calories. You can't do it. And so it really is a measure of discipline. And a lot of us don't have it.
Okay, so I've got some more interesting questions here. This is for some of our newer traders. So folks that have smaller accounts, they're adherent to the PDT rule. Do you have any tips for them to get into some active, if not trading, but active investing with short time horizons?
Well, the great thing is for the futures market, there are no pattern day trading rules.
Yeah.
One more reason.
So really quick, Anne-Marie, we also had a question around futures. I don't think folks are totally clear on what that means. I mean, we all know what stocks are generally, but could you explain what futures are and why it might be an option for folks that have smaller accounts?
Okay, so a futures option is a futures contract, it was developed by the agriculture folks. That's why the Chicago Board of Trade is where we see all of these options come in, but these futures contracts. So what the futures contract is supposed to do is really help position the market makers in the space to say, hey, I want to bring my corn to market, and I'd like to know that it can make me, $300, whatever they use that, right? XYZ. So what the futures contracts were built to do was create security for the farmers who were bringing their things to market. So if they thought prices were going to dip, they would buy a put contract that gave them the right to sell something. If they thought prices were going to move up, they went and bought a buy contract. They bought the contract to say, all right, at least I can buy it at this on the cheap because I think prices are going to go up by the time I go to market. So what the financial markets have done cleverly is to create the same kinds of instruments that allow them to hedge. So this is really a dynamic hedging contract. And so that sounds super terrifying, but it really isn't. The big things are there's a ton of leverage that makes a lot of great sense if you know what you're doing, and you have to get you have to be just like, to trade options, you have to check the box and fill out the information. You have to be authorized to have futures in your account. So you'd have to go to wherever you have your account and say, hey, I want to trade futures. And they would tell you. Now, some places have expensive futures contracts, and places really, I got to give a hat tip to them. Top Step Trader, they actually fund traders who can prove to them that they know how to manage risk. And so really, if you have a small account, get somebody to fund you. And that is certainly one of the best options you can have.
Yeah, that's exactly. I was going to say the same thing in regards to futures, and I threw in a link for Top Step, Neil. I mean, Top Step, both Anne-Marie and myself have used it. We're big promoters. We're big fans of it, simply because if you do have a smaller account and you are disciplined, it's very, very extremely inexpensive, realistically, to get a $50,000 funded account where you can spend $130 a month or something to get that experience. So you don't have to blow out $3,000 or $4,000. You can take a $3,000 or $4,000 account, put it into some blue chip company that you really understand, and just kind of let it hold its weight for a while, and then use a totally simulated account right through Top Step to learn how to trade futures actively on the E-minis, on the NASDAQ, on gold, on oil, whatever. Really get your hang through that, and then that $50,000 fake account turns into a real $50,000 account.
And you get to take your first 5,000 out, and after that, it's 85% or 80%.
80, 15,
yeah,
15, something like that.
It's
cool.
tremendous. It is really tremendous. And they give you the practice so that you can go in and go out and go in and go out and learn how the mechanics work, right?
Yeah,
so I love the futures. I love the futures. I'll never leave them. Yeah.
And they're at night. So what's phenomenal is for traders who work full time.
Yes.
And day trading is stressful, or you live on the West Coast. You're like, I don't want to wake up at 5 a.m. because let's be honest, that sucks. You can trade futures at night, or in the afternoon. Like, it's very flexible.
Yeah.
And again, the leverage is phenomenal. And it is an ATM machine. It feels like a video game where you sit there, you just click, buy the bid, hit the ask, you're getting in, and you simply let the trade play out, let it do its thing. And you see the P&L increase or decrease, hopefully increase. And it feels really exciting. So
Yeah, it's a lot of fun.
Okay. So we like futures here. So the next one here is around earnings. So we want to know how we can be successful with earnings. Specifically, is there anything that can help us avoid fake outs? The examples given are BURL, Burlington Stores had a bad earnings report, and Autodesk had good earnings, but it looks like they were trading down slightly in the pre-market, and they took off and traded higher for most of the day. I wasn't watching them, so not totally sure on the context.
Do you want to take that or?
Yep. I mean, my thoughts on earnings, guys, is it is literally the day of earnings is you're at the roulette table and you're betting on black, red, and or green, because that is truly futures earnings gaps. The big challenge with earnings gaps is really understanding the sentiment of the gap. So for example, I played earnings today on Zscaler and was wrong on the sentiment. I figured that it would gap up, after being up 179% in the last month, would probably pull back. No, it's not. It's going higher. So you're still going to get sentiment wrong, but the sentiment is the most important aspect. The part about earnings, man, is when you're playing earnings over earnings. Okay, so you're getting into a position, you got some shares, and I'll talk about the way I like to do earnings a lot of the times. But one of the ways is if you have an expected phenomenal earnings and earnings are really good, the stock will probably go down. Because if you have a phenomenal expected earnings where people are like, they're going to crush it, and they do crush it, everyone's like, yeah, we figured that. So awesome. Let's sell and lock in our profits. Right? It's like going to a movie. If everyone is hyping up this movie, for me, it was Napoleon Dynamite. When people are like, Napoleon Dynamite's the funniest movie of all time, and everyone's talking about how funny it is, and then you go see it and you're like, yeah, it was all right, because everyone's just hyping it up so much. That's kind of the way earnings are. It's all about perception. If everyone is really, really just harping on how amazing this thing is, and it is good, but you already think it's going to be good, then it's whatever.
I have something to add to that. I do. So let's see if I can pull up BURL.
Yeah, Burlington.
Right. And
Burlington Stores.
All right. I'm going to try and put this on daily. And it's really gappy right there. So here is something super interesting. You see this great big fade and then the move up. This is a daily chart. The best thing to figure out whether something is a fake out, right, is to look in the pre-market and see where it got faded to, right? And if it sits in that region, right, where we've got, hey, we saw this on the weekly, it came in really deeply and then started to move up, look for an open and a high or a close. If they come in, remember, big money moves on big time frames. Big money doesn't move on small time frames. So if in the pre-market, they really push the price down, open up a weekly chart, start seeing where the weekly support and resistance is, and then you can gauge there. What was the other one?
Autodesk. ADSK.
Autodesk. ADSK. Okay, ADSK. And this one, did it gap up and then fade? Was that the story?
I think gap down and fade higher.
Okay, so here's what happened. Take a look. This is a weekly chart. See how this is a week that closes and then opens. And then right here, we have a congestion zone. Support, resistance, resistance, new support. Fades, they're going to hold. Take a look at this guy over here and watch it get above that high. Look at that. It turns out being the same number. That high and this low. Look at your weekly charts. Your weekly charts are going to tell you where big money is going to move in. Take a look at this gap. This is the gap I like to call COVID-1 and COVID-2, right? This is the COVID-1 gap. This is the COVID-2 gap. This is trying to fill the gap. And it got to the top of the gap, and now it can't do any more. And see, last week, now it's battling just above the high. So if it doesn't hold this 200-ish area to close at the end of this week, going to have itself a little bit of a fade. But you go back to those weeks and say, wait, where was resistance broken, and can that be new support? And when it fades there, big money is going to come in.
Mm-hmm. Yep. So big theme here is it's going to be the institutions. It's going to be the big money that's really going to determine it. So if it goes the other way, they might have had higher expectations than the company initially released. Guys, I can't thank you enough for spending this much time and sharing this much knowledge with everyone, opening up your private trading lives up for everyone to see. Before we go, I just want to ask both of you, starting with Anne-Marie, where can folks find more from you after this? Where can they find you online if they want to hear more?
Well, I'm on Twitter at Anne-Marie Trades, and my site is called thetradingbook.com, and you can find me. I'm really pretty active in the Twitter space, also on StockTwits. And so I will talk about broad markets. I talk about the futures a lot. I try to give traders a little bit of a macro understanding of the bigger pictures. You know, charts fall apart when we have liquidation problems. As long as liquidity is around, we're going to buy these deep dips. And so you'll find out a little bit more about the market and the straightforward ways that I trade like that. And of course, I'll be here this afternoon at the afternoon portion of the boot camp. I'm going to break down systematically again, 1, 2, 3, 4, why it is I took these trades, why I got in, why I got out, and what might be the reason to go, hey, I'm going to go support to resistance or resistance to support instead of just hanging out to see where a trade is going to go. And when those times are present, what can we do to engage there? So I'm looking forward to this afternoon as well.
Me too. Yeah, that will be our advanced session. So that's when we'll really start talking about day trading, folks. So make sure you stick around for that into the afternoon. Jeremy, loved it. Where can people get more?
Thanks, man. Yes, I appreciate it. You can Google me.
Wow. Humble brag.
That's right.
True.
Man.
It's true, though.
Yeah, his first name is spelled with 2 R's. My dad's name was Jerry, so it's Jerry and me, Jeremy. If you ever want to send a message, yeah, Jeremy Newsom at Gmail, Jeremy at reallifetrading.com. Reallifetrading.com is my website. Every trader has their own website, so feel free to connect with me there. Absolutely buy Anne-Marie's book.
Yep.
I love Anne-Marie. She's been one of my biggest mentors of trading in my life. So I am humbled and honored to be here and be a part of Anne-Marie's trading journey. But yeah, reallifetrading.com, thetradingbook.com. Check out both those websites. Get some education, learn, spend a lot of time on the charts, on the pages, scroll through it, click around, and get some knowledge, ladies and gentlemen.
Mm-hmm. Yep. So great to have a mentor-mentee pair here.
Yeah.
That's absolutely wonderful. Couldn't have asked for a better lineup. All right. So without further ado, guys, I'm gonna say goodbye. Yep. Jeremy, we'll be in touch. Anne-Marie, we'll see you later this afternoon.
All right. Take it easy.
Appreciate it, guys. Thank you.
Bye-bye.
Now, everyone else still here with us, we're about to introduce our speaker for how to pick stocks, the very fundamentals of picking stocks with Joseph Gasparoni. But before we do that, make sure you get your questions ready. If you're looking for anything that has to do with picking a stock, put them in the chat. There is like a 15-second delay, so get them in the chat so that I can ask Joseph for you. Also, remember, guys, we had a great morning session here. Lots of stuff, probably a little bit too much to retain. I don't know how fast you are with taking notes, but just know that you can go up to the top of our Hey Summit event platform and you can purchase the recording of the masterclass video library to keep for your reference from now until eternity. So go on up there to the top and make sure you purchase that, and everything will be yours to keep. Now, without further ado, I'm just going to hop into my panel here and make sure Joe's and Joe, are you there? Can you hear me?
Hello, Neil.
Hey.
Glad to be here.
It's wonderful to have you, Joseph. How are you doing today?
Thank you very much from the Republic of San Marino over here in Central Italy. Thank you for the invitation today. We're going to talk about some great stuff on stock picking, fundamentals, how to buy stocks, how we find best stocks to trade each day.
That's wonderful, Joseph. And I just want to remind your audience that we do have 2 PDF downloadables that will condense these lessons down into text. So if you're someone that likes to print something out, hold something in your hand, or just refer to a text version of what we're offering today, we'll make those available for you. Just make sure that you purchase that that upgraded ticket, and we'll get all of that content for you. Now, Joseph, before we get started, could you please just tell us a little bit about your style, what you do every day, and tell us what you're going to talk about?
Okay, I started back in '99. Was 19 by the time. Today is my birthday. So
happy birthday, man.
Thank you very much.
Thanks for being with us.
And I started trading covered warrants based over here in Europe, stocks, futures, and I had to switch because the market environment changed. So in the last 3 years, I also started trading let's say 3-4 years started also trading together with big caps and futures, the small caps. Now I'm mainly focusing on small caps, big caps, and options. And I'm a day trader. Rarely I swing, maybe some position like, buying the dips Tesla when it's 400 and then selling it on the run. But otherwise, I'm a day trader for small caps, big caps. I like to take a trade intraday, selling it before end of the day, or sometimes even like for 5-10 minutes, depends from the stock itself. I can have like a trade that lasts 1 hour, a trade that lasts 1 day.
Great. Okay, so that was a great overview of what you do. Now, for this session, what are people watching going to take away from it?
Okay, the point is there's a lot of information out there. There are like thousands and thousands of stocks, and each day we see traders that they don't know what exactly to trade. So I have a guide. This is the guide that I've been doing for all my life. And each morning, it's my routine. I wake up, take my coffee, start reading the news. I open Benzinga, 6 a.m., not later. I want to read not only the title of the news, but the entire plot, the entire article. I need to read if the press release is sketchy, is some recycled news, if it's like some very good important endpoint met of phase 2 or phase 3, FDA approval, and so on. Then I move my eyes, really, my focus on the watch list and how I do my watches. So we were talking about how to find the best stocks to put in your watch list, which can lead to a run, which can lead to a fade. And this both for small caps and big caps. And I'm going to bring some good example from this past days. ABIO of yesterday, big run, or FBIO in the past 3 weeks. And we've been seeing a lot of these small caps, generally like below 300 million market cap. So we're talking of nano or micro market cap, low floaters, below 5 or 10 million float. And we'll go over all these small caps, low floaters, and micro float stocks, so that you can have an idea, because a lot of these stocks are going up from $1 to $5 or $3 to $6 in 1 day. And we want to get these moves. So we'll see how.
All right. I'm excited. So with that, I'm going to hand it off to you, Joseph, and show us what you got.
Okay. So you can see over here my screen, right? Everything's fine.
Perfect. Yep. Everything's looking good.
Okay. So as I said before, we'll go over to see how the scanners with Benzinga are, so how I fix them. It's very important to have a routine. So the first thing you have to do each morning is read the news, whatever comes up. Then start looking at your scanners. First, we'll look at the small caps scanner for pre-market. Then we'll go over the big cap scanner, because they have different parameters. And we can see how I use them. So I want to see 2 main important factors. 1, range, and this is called also volatility. So we want to see at least a 7% gap, and this is over here. We'll see in the next slide where you have to fix this, but the change of at least 7%. So everything that is not at least 7% up in pre-market, and I'm talking about 7 o'clock, 8 o'clock, 9 a.m. AT, right? I don't want to trade it. And then we need liquidity. So you cannot trade every single gap, even if it's a 50% gap, if it doesn't have liquidity. Liquidity means volume, means that we have some traders trading it. If we have, for example, what you think is an incredible news, but nobody is buying it. We don't have institutional on it, big players on it. You cannot simply like going to trade something like this only because you like the news. So you need always liquidity and volatility. And with Benzinga, I look at this. I make my scanner run in the morning from 7 o'clock, maybe sometimes even before, and I take the first 10 stocks. So the first 10 stocks with the market below 300 million, market cap over here, you can see how I do it. Choose the gainers, pre-market, choose the session. So if, for example, you choose period 50 minutes, it tells you only the gaps in the last 50 minutes. If you're like at 8 o'clock or wake up late, you get at your computer, at your desk at 9 o'clock, you want to see the entire session pre-market, what had been popping up. We want to see all the sectors, not only, for example, biotech companies or tech companies, but all the sectors. And then you can fix your market cap. For small caps, I tend to focus on stocks below 300, 350 million market cap. I would suggest you to use a 300 million market cap over here. And then we start having the price. So small caps, as everybody knows, are the stocks that are trading a small cap, but also that are priced low. So between $1 and $15 is a very good parameter. And then I try to filter more. So you can see on my right, you see volume greater and gap greater. So I want to see a gap at least 7%. And I want to see an amount of volume at least traded $100,000, 100,000 on a day. The more volume, the better. And we will see some example where the volume is very important pre-market. So making this, you have, for example, this was back in May, you have a list of all the gappers from 7% up to 24%. Some days we will see 2 or 3 gaps. Some days we will see like 10, 15, 20 gaps. And then we need to filter because all of this is a little bit too much for our eyes, for only single person to follow. So I generally filter down my watch list down to 3, 4, maximum 5 stocks. So here is an example fresh from yesterday, 5/28. And this was the scans I was running yesterday morning at 9 a.m. So we see a lot of these ABIO, BAT, TCCO, and I like to see the volume that we have versus the float versus the average daily volume. Some of these already in pre-market are trading more than their average volume. This is a very big signal that the stock will be in play for the day and a potential long for the day. And then we'll see which are the stocks that can generate a long, so an uptrend, and which one instead are just like pop and fill. And they tend to use the news, a press release, only to have a pop, to unload and unwind during the day. So let's take, for example, ABIO, 110% gap on the day. So this is the biggest gap of the day. What means everybody will have eyes on this. We can see the volume pre-market, 1.7 million at that time. And it's a very huge volume pre-market, especially in comparison to the float. Remember, trader, this stock has 1.5 million float, means that the volume you can buy, the shares that you can buy of this stock are 1.5 million. In pre-market, we already have traded all the float and more. So there's a flow rotation. Whenever we start seeing these small floats, small market caps with high volume pre-market, and they have a very good catalyst, and we'll see now what the catalyst is about, we have a tendency to have runners for the day. So this happened in the past when we had CODX, INO, when we had NVAX, DVAX, and yesterday ABIO. We don't have to think this stock will go to 60 like Elfin or others. We have only to be day traders. So take the amount that we need, buy and sell, be traders intraday. The news was very clear. So basically they said, this is a possible cure for COVID-19. And you can see these days, a lot of the biggest percent gainers on the day are stocks that have a press release with some referral to COVID-19. This was a test on 700 patients. So they're looking this for primary endpoint met of phase 2, big news. And ideally, after the phase 2, there's phase 3, then there's FDA approval. So strong news. And here you can see the chart. So the point is identify then a level of entry. You know that the news is good. You know that we have a high volume. We know that the float is small. So these micro float tend to push to the upside. We also know that there's a shelf. So there's an ATM of 75 million, means that the company needs to raise money, and they will generate money. They will raise money through an offering. Generally, they wait a big news, a big press release, so everybody gets interested in the stock. The stock goes up from 3 to 4 to 5 to 6 or whatever the price is, and then they dump their shares. Can happen the first day, can happen second day pre-market, second day after hours, third day, fourth day. So they decide, the big hands decide when they want to dump the shares. In this case, this is one of the best setups I teach to get long. So these are my J lines, and in the ebook that Neil will share with you, we have 2 ebooks today, I explain this strategy. So you can definitely go and learn something effective today in order that you can start trading this on Monday or track it. So pre-market action, you can see how the stock goes up in pre-market. Then we have this faded open, all right? We have some bounces, and we have that consolidation on these 2 lines, all right? Once we have that consolidation, you start looking at the high volume increase, and then you can get your long. And this was a stock that went up all day, all morning, and went up till 20. So incredible move. We start having the price in pre-market $5, $6, $7. End of the day after hours is 20. And this morning was already coming down. So a lot of these big movers have a first day very strong, maybe a second day, and they tend to end their run or in a second day or in the third day. How instead I run my scanning for pre-market for big caps. So totally another environment. When we're trading big caps, we cannot look for stocks above 7%. We need to see stocks gaps up on the day of 3% is more than enough. More volume, surely it's a big cap, so at least 200K. And I run in this way my pre-market scanner for big caps. So all the same gainers, pre-market session, but then I tend to put between 2 billion and infinity, price from $20 above. And you can see over here on the right, just go on filters, put 3, so greater than or equivalent to 3, and volume above 200K. This is very important because it filters you only the most, the best percent gainers on the day with the highest volume. And you can see over here, we have RCL, Uber, YOL, this BA, and the volume pre-market. The minimum volume pre-market over there is 200K. And I start to look at only first 3 or 4 when we have a volume at least of 400 or 500K pre-market. Look, Uber, 1.8 million traded pre-market. So this will be the main stock because it has the biggest volume of the day, 5% gap for the big caps. Some examples over here. So this was RCL. So it starts as a gap and go. You can see dip, bounces, break of pre-market high 41, and then fades back. Now we have Uber. So big gap, and we have weakness at the open. So it seems like a gap and crap. And then we have a B pattern, end of the day, and we close around 32.50. You all gap and go. So over here, you can see that the volume over here on these dips is very high. So around 10:30, 11 o'clock, higher lows, and this was a very nice move from 23.50 up to 25.50. Now we've seen how to run the scans. So that's the first thing. But what are the best news to trade for long and for short? So as a trader, I'm very analytical in my trading. I trade a precise strategy, and I base my trading on statistics. So I've been tracking everything since 20 years ago. At that time, we had no big softwares. I was using a real tick. I was trading only mainly the tape. Right now, we have access to everything out there, and backtest even your setups to see which one are working, and also consider the news as a very important parameter in all this. For example, we have often news of contract agreement, license agreement. We have also fluff news like phase trial half or FDA track designation. A lot of these, if they don't have a particularly huge amount of volume, tend to be only pop and fail, especially in the small caps. So I call them sell the news scenarios. Other times you can have like news like primary endpoint met of phase 2 or phase 3 or some merger agreement. Those can be very strong news that can lead to a run for the entire day, maybe day 2 or day 3. So I suggest track the last 3, 4, 5 months from the start of the year, see which news led to a all-day run and which news instead led to an all-day fader. And this is very important because you have like an edge in your trading. So how I set my news feed, the first thing, don't get, if you can, I know some traders are from different parts of the country, United States, some traders are from Australia, some traders are from Asia or whatever. If you want to make money, you have to be at your desk very early in the morning. I'm not saying like 6 o'clock, but at least 7, 7:30, 8 o'clock, try to be there. You have to be like, you have to have your routine, all right? When everything is set, when you have all the green lights, you know that you can trade something after because you have that conviction. You had your research, you did your research, you investigate a company, and you saw that this has certain green lights to go for a long or certain green lights to go for a short. So the main news I look at are the catalysts. For example, COVID-19, cancer breakthrough, earnings. So the second one, I like to trade earnings. Generally, I trade earnings after the earnings came out because earnings, they can be very risky to trade. And I like to trade in the direction of the main trend. So you have an edge. Upgrades and downgrades. Just set them in this way. I like to have all the sources. So all the sources over here. I like to have the categories. So I put these exclusives, hot, market moving exclusives. And all of this is in one of the ebook that I sent. Then I put all the sectors over here. And then this is just like what I was saying you before, traders. So basically, what means tracking news? So every single day, you will go and write the name of the ticker, the percentage of gap, how much this popped. For example, you see over here the first one, gap 50%, pop. So pop means an extension from the open level to the high of the day. And then you have to write, did it fill the same day? Did it ran for a day 2? So it was a long. And then you write the news. My back test, personally back test on a small cap with certain criteria are that agreement with another company, for example, is one of the biggest fader, or sometimes they will call it contract agreement, all right? For example, today we are trading PRTY. And many of these, they tend to have the same press release over and over, even different years. For example, maybe 2018, and then they have another contract agreement 2020. So just go back, see how it moved in 2018 to have an edge in trying to anticipate, trying to know what can happen in 2020. The next step, so once you evaluate the news, so you have the scanners, you go check the news, and right away you have an idea. This news is good for a long, this news is good for a short. Then you have to go check the stats. So you can use whatever you want, go to the SEC filings or whatever, and start looking at stats. What are the stats? Two different types of stats. So there are stats based on the history of the stock. So how much the stock can fade from the open, how much a stock can extend from the open. And this is a different scenario. I'm personally working on some software like this. The other one is looking at the general statistics parameters that a company has. So to see if a company is healthy or a company is not. So I start looking at the float, and you will see the stocks with smaller float, smaller, I'm saying something below 10 million, and best even below 3 million of float with high volume, as we said before, they tend on a good catalyst to have a run and be grinders for the day. So to be gap and go, to be long players. Then we have to look for institutional ownership. So the percentage of the institutional owning the stock. The lower this number is, the sketchy the company is. For example, nobody will be interested in a company with crappy fundamentals that doesn't have revenues, that doesn't have like great earnings. So we will have probably a low percentage institutional ownership. These tend to be more like gap and crap, so gap faders. We will see the short percentage of float. If they have SSR, the market cap we saw before, accumulated deficit, dilution. So all these things together. For example, when you have a company with a float around 10 million, and you have a company with less than 50 million market cap, a company that has a high accumulated deficit versus the market cap, and maybe has even dilution, so an offering, an ATM, a shelf of warrants, it will probably be a gap and fade. So they will use the news to pump up the stock, and then you can trade it short. Over here, what we were saying before. So how to make a watch list. And this is very, very important, traders. So we need, just 1 second, trying to enlarge over here. Okay. Okay, so we need traders to make a watch list this morning. And I like to see, as I said before, the best percent gainers, or the best news, or the news that I think they will be fader. And select only 3-4 stocks. Don't go and select more stocks than that, all right? So for example, this is an example of my daily routine. So wake up at 6, start reading newsfeed. I look for the biggest catalyst, and I definitely like to watch the pre-market. So see the pre-market action, see the pre-market support, pre-market resistance. In May, we had FBIO. So FBIO will focus over here. I hope you can see this good because my monitors are 4K, so that's the reason why some traders maybe will see it like smaller.
Hey, Joseph.
Yes.
I'm glad you brought that up. A couple folks are saying they're having a hard time seeing. So when you show screen captures, can you zoom in on them the same way that you just did?
Absolutely, absolutely. Everything of this is already in the ebook, but thanks for telling me. I will zoom in.
Okay, thank you.
So FBIO traders has this news: global license or license agreement with Columbia University. Doesn't matter with who they have this this news. The important thing is that you focus on the key words: global license deal or license agreement. So let's go back 1 second to this, because it's important to make you understand the things. All right. And what we saw over here, tracking license agreement, license agreement. So they had a big gap, 20% pop and faded all day. So it means that gap over here, they pushed and then boom, sell off. Another one, license agreement, gap, small pop and faded. Agreement with another company. Look, faded open, all day fade, all day fade, all day fade. So this what tells you already that this news can be a possible fader in the day. All right, let's go back to our slide. And this is the work that you have to do every single day. So let's read over here together. News, F by O. They use two words. They use cancer and they use the word COVID-19. So to big catalyst. Remember, whenever it's something about, with all respect for the illnesses and sickness out there, but when it's about some big illness like tumor, brain tumor, cancer, the catalyst will is much stronger than just like, I don't know, like skin cream or like some other fluff news. All right, so it's also wanted to put these names, these terms in the news, because they want to get buyers. They want to trap longs. They want to have their stock going from 2 to 4 and to 6. And that's the purpose, to make you understand, not only read the news, but make you understand if the news is strong or if the news is fluff, and see how it behaved in the past. So if we go over here, which is the next step, I start looking at the stock, what the stock did in the past. So this is F by O, daily chart, a simple daily chart. You don't need indicators. Keep it simple, traders. Just look how it behaved in the past. We have over here the volume below. So you can see that we had days with 20 million volume of the day. And for a stock, especially a small cap, is a huge amount of volume. Days with 5 million, 3 million. And we can see the history. Go back the last 2 years, see how the stock behaved. If on the day of gap, for example, we had a big, strong move, or if on the same day, the gap led to a fade. In this case, look what happened. Gap over here, push, and then faded. Gap over here, another gap and fill, push and faded. Another fade over here. So we have already 1, 2, 3 times that this stock gap and fill. So I'm looking ideally for a gap and crap. So for a gap and fade on the same day. All right. Now, as we said before, we go to see for the parameters. So the float, we have a 58 million float. So this is not a micro float. It's not something that with 2, 3, 4, 5 million volume, this can like spike. This can go and turn into a big runner day 2, day 3. Then we start looking at the market cap. All right. And this you can see with Benzinga. See the market cap, 148 million. So always below the 300 market cap, let's say level. And then you can see other ratios. So you can go to see the earnings. You can see the accumulated deficit versus the market cap. You can go to see if they have revenues, the cash burning ratio, and other important parameters. But this already tells us that we have a stock with a news. They try to use the news to pump it. History of fading the first day, no micro float. And then I start looking at the filings. So just go to see the last earnings, sorry. Go to see the last earnings, the last 10Q, and start looking at the balance sheet. Sometimes will be page 2 to page 3. Sometimes will be different, maybe page 20, page 30. So you have to go and find it I just suggest you to do Control F, put accumulated deficit, and right away you go to the balance sheet. So we have a company that has, you see over here, cash and equivalents of 136 million. So you can say, wow, this is a great company, even because year before we had only 65 millions. And we have a net loss though of 110 million that they're losing each year. Also, we have an accumulated deficit, you can see it over here, of 436 million versus a market cap of 150. So we're not talking about Google. We're not talking about Amazon. We're talking about a company that basically has a high cash burning ratio. On the other side, has 3 times accumulated deficit compared to the market cap. So something is wrong over there. And you can start digging into this stock and see if they tend to raise their money through offerings, through dilution. And it's like this. So this becomes one of the main plays for me to look for a short during the day. That's the reason why when you trade, for example, small caps, you have that edge. Because a lot of these, and when I say a lot of these, is more than 85% of the gappers tend to fade on the first, second, or third day. So they get back down to where they came from. This is the edge why to trade small caps versus, for example, Google, Amazon, Tesla, Facebook, which I trade every single day, but in a different way. Any questions, Niels, about this?
Looks like everyone's pretty enraptured. Everyone, make sure you scroll down to the bottom of the comment section if you have any questions for Joseph. Had a couple questions about some particular stocks, Joseph, to see if they fit your parameters. Was wondering if you saw OKTA or VEEV today. Just wondering if you could take a look at those and see if they fit into your stock picking parameters.
Look right away. Just 1 second. So putting up my charts. Okay, you see my screen, right, Neil?
Yep, and that's ticker OKTA.
OKTA over here. So let's see first the daily. Basically, I didn't trade today. Was preparing for Benzinga. But over here, what can we see? We see a daily chart. We see price 197. We see a big wash the previous days. So this wash over here, this big spike to the downside tells us one thing. Buyers stepped in. And you can see also the increase of the volume over here. And then seems like making a V pattern, a cup pattern. So let's look at on an intraday. Generally, I tend to use or a 1 or a 3-minute chart. And you see, this is my indicator that I use. Only this is a setup I explain in the room. So you can see that once the price opens, has a dip. So where I would be a long player on this, I will be a long player once we have a dip into this consolidation of 189, 189 and 50, and take long just on a trend line break over here, because this is one of the setup that I trade, which is the first dip on the day on this stock. And this leads to a breakout over here. So a lot of these trades come from 1, high volume, 2, continuation, and 3, trend following. Trend following with a dip. I don't like to trade breakouts because often we have fake outs. And I think that all the big players, the algos, the institutional are waiting for the retail trader just like to trap him. So often you buy the breakout, you get stopped. No, buy the pullback. Wait for that volume to get in and then buy over here once you're getting up, and then stop below this level of these 2 lines over here.
Let's take a look at one more here. Let's look at GHSI.
GHSI. I traded this in the past. So it didn't move at all today. So What's the question over here?
Yeah, so I guess there's a lot of chatter about it. I haven't been on Twitter today, so I'm not sure.
Okay, so the point is, looking at the chart, a daily chart over here, we can see that we are below these two lines, all right? So until the breakout, these two lines, we're like only having pops and then fading, pops and then fading. But at a certain point, we started making over here a nice juicy cup. So I want to do, let's see, annotate over here. I think we can do this. And you can basically see a cup formation. You can see also over here bias shifting from short below the J lines over here to long above the J lines. And I won't buy a breakout over here. I want to buy or a dip to the J lines, like for example, over here, stopping below, or I will wait for a breakout, dip on the support, previous resistance, look for a curl, and then taking the long. Always looking for increase of the volume like we have down here.
Great. And then I got another question here. This one's specific, Joseph. Would you buy a stock at 7 a.m. if it jumps in pre-market at double-digit growth with high volume and sell it later when it reaches resistance?
Yes, absolutely. Often, some of the best longs in this market happen in pre-market. Actually, you have to be ready. So, seems like I want to make publicity for you guys, but it's not like that. Just I run your scanners, and right away, this morning I had the news ABIO. Sorry, yesterday I had the news ABIO. Today I had a news of ADAP. Right away, the first thing I do is look at the float, look at the volume, put in my charts, see how's the daily, and if I have an intraday pattern. You have to be fast. If you are like still waking up, and I'm lucky I'm over here in Europe, but I was trading the same way in Italian market, European market, waking up at 6, so it was the same thing. If you're late, if you're slow, you're still drinking a coffee, you cannot get this. You have to be already on fire, all right? It's like a match. You go to there to box or do something, a tennis game, whatever, you have to be on fire right away. You cannot be slow in this market. By the time you decide you want to buy, this already ran up. And often we see pre-market movers, they go maybe 20, 30, 40% in pre-market, and then right away they fail down.
Great.
So
I love that
yes.
analogy. Okay, great, Joseph. So the answer is yes there. Great analogy there. You got to be on your toes like a boxer going into a match. So you've got some moving average lines here.
Yes.
Are these something you're willing to talk about here, or do we have to join your chat room to get them?
I have no problem explaining new traders what my stuff is about. You have also the link to YouTube where I explain what these moving averages are. It's just like I've been a mathematician in the past. I like mathematics. I studied Fibonacci code. So I went deep into Fibonacci code and I got out from that 7289. These two percentages, you can find them often in the retracement or in the extensions. So this is only a 7289 exponential moving average. Alone like that, they have no sense. But in the way, and I was using this in the European market 15, 17 years ago, and then moved into the US stocks and lately to the small caps, I see they work extremely good. As a matter of fact, we can have a 70% win rate with certain patterns and certain rules in this market using some of the strategies I teach. Other questions, Neil?
Oh, yep. Sorry about that. I was muted there, Joseph. Yeah, we've actually got quite a lot of questions. So let's go back to selecting stocks. How do you weigh a firm's market cap versus float? Yeah. So I mean, how do you weigh a market cap versus float?
Okay. So think this. Whatever the company is, and I'm not making names, but you have a market cap below 300 millions, a market cap of 50 millions, 20 million. Sometimes we see, I think there was one today of 6 million. I mean, what this company can really do if not pumping and dumping, you know, the famous pump and dump. Then why the float is important? Because You have sometimes some companies that they will have 6 million market cap. So you know that they're like sketchy company, we can call them. You have a float of 1 million, so a micro float. They are the best stocks to buy for an intraday run. I don't say hold them, keep them. Sometimes you buy them for 50 minutes. Sometimes you can buy them like HX yesterday for an intraday or ABIO for an intraday. And ADAP this morning went up in pre-market. So look at small float below 10 million, big catalyst, small market cap. The smaller the market cap, the better for this intraday's run. All these Jiva in the past, DCAR in the past, LFIN, they all add all these parameters. And more, if you start like tracking this stuff, you will have an edge.
Great. All right, Joseph, it is just about that time. I want to thank you so much for spending some time with us today on your birthday of all days out of the year. So we really appreciate it. Where can folks find more from you so they can continue learning what you're doing and trade along with you?
Website jtrader.co, YouTube. Every day we have almost every day a recap. YouTube JTrader.co or Twitter JTrader.co. Very good free content stuff on YouTube.
Great. And we do have a coupon code in chat. If you would like to join Joseph's chat room, you can get 25% off for a limited time for that quarterly subscription. So make sure you check the comment section under the video to do that. Joseph, again, thank you so much. And I hope that you have a great birthday, man.
Thank you, Neil. Thank you, Benzinga. Thank you, everybody, to attend over here. See you.
Our pleasure. Take care, man. All right, everyone. Joseph Gasparoni on picking stocks. You know, looks like he leveraged Benzinga Pro quite heavily. I promise that wasn't something planned. Benzinga Pro is a very good platform for discovery, though. So I do recommend that if you want to get a free trial of it, go to pro.benzinga.com, grab yourself a free 2-week trial and see if Joseph's stock selecting processes work for you. Also check in the comment section if you are curious about that ebook that he mentioned a couple times. I went ahead and dropped that there for you, so you should be able to download it today. Next up, we have Douglas Bush. He is the founder of Chart Smarter. We're going to be talking about analyzing stock chart performance. So we've gotten some glimpses of that, especially during the live trading session, for different technical indicators with Joseph's moving average there, different ways to set up your chart so that you can actually glean information of them and make informed trades. Now we're really going to talk to an expert who does this every single day and dive in much more deeply. Speaking of which, I just want to remind everyone that you can purchase all of the video recordings that you're seeing here today. If you go up to the top of your Hey Summit, our event platforms page and click Upgrade Access, you have 2 wonderful options. You can buy the complete masterclass from the primary session, get all the videos, get all of the downloadable ebooks and everything that we're talking about, as well as the option to get our deep dive access. So that's a VIP room, much smaller room with the ability to actually hop on the webcam, hop on the microphone, and discuss your situation, real life scenarios with our trading experts. Much deeper dive into options. Highly recommend for folks that really want to get direct answers and they don't want me to have to skim through everything and filter them through me. We'll also have a hedge fund manager there talking about hedge fund strategies. You're not going to get those anywhere else, folks. So you're going to have a direct line to that person, Adam Johnson. Highly recommend that you get over there and check that out by clicking the Upgrade Access link at the top of your page. But now, without further ado, I would like to bring Doug into the session. Now, Doug, are you there?
Yes, I'm here.
Great. Let's see. Hey, there's the man. How are you doing?
Good. How are you, Neil?
I'm doing wonderful. It's a great Friday. Looks like the markets are a little bit choppy, but hey, the weekend's coming up and folks are learning a lot that they can bring to task on Monday. Before we get started, obviously, I want to thank you very much for taking the time out of your trading day and being present here with us. And then the next thing I want to do is ask you just tell us about yourself. What is your style? How do you look at the markets? How do you approach them? And what can folks expect to learn from you today?
Well, Neil, I've been watching the markets now for, probably about 30 years now. I've been on Wall Street in so many different capacities, but I found my niche with technical analysis. I've got my CMT about 5-6 years ago now, but I've actually been following the charts now for well more than 30 years. Today, what I thought I'd do is, share with you guys a few different, strategies that I use on a daily basis with my work. 4 or 5 different methods of technical analysis. Like I said, believe me, I respect the fundamentals as well, but I'm a pure price guy. I respect price. That's how I make my decisions. And these 5 different methods, anyone from a beginner to a professional can use them to make better investment decisions. I found, I have a site called chartsmarter.com. Basically, I'm an independent sell-side research analyst. For about 10 years now, I've authored a daily piece on, and probably in the last 3 or 4 years, I found a lot of people tend to be, pure play sector guys. So I've actually, every single day, what I'll do is I'll put out a different note on a different major S&P sector.
Mm-hmm. Okay, so there you go, guys. You're going to get some very specific lessons from someone that's been doing it for a while. And Doug, really quick, I know that probably about half our audience is familiar with the term, but what is CMT? What is a CMT?
It's a chartered market technician. It's the fundamental, it's a technical equivalent of the CFA on the fundamental side. You have to pass 3 different levels. The tests are given twice a year. I highly recommend anybody that likes charts to participate or even try and delve into the curriculum at some point. But yeah, it's basically devoted to technical analysis.
Great. All right, Doug, I'm going to get out of your way and let you start doing your thing. And as we go, folks, if you drop your questions for Doug into the discussion, into the comment section, per usual, I'll watch those and I'll make sure that Doug hears them. But without further ado, Doug, I'll let you take it away.
Okay, like I said, Neil, and if you guys have any questions during the conversation, please let me know. But like the first of the 5 technical indicators or the technical strategies I like is the bull flag formation. It's a continuation pattern, as you can see here. It forms during an uptrend. The best stocks, keep in mind, they will offer investors a chance to add to them on the way up. I know people like to buy low and sell high. Technicians tend to like to buy high and sell higher. They like to buy strength. This type of pattern forms generally after a sustained move higher, and then the stock will kind of digest that strong advance with very tight sideways action. You don't want to see this get too long in the tooth. 2-3 weeks is the maximum. It's considered very bullish, as the stock is stubborn not to give anything back of that powerful rise. The breakout occurs when the stock breaks above the top of the flag, preferably in firm volume. We do like volume. And the measured move, you get a measured move from the bull flag, which is from the top of the flag, from the length of the flagpole, and you add that to the breakout price. And let's get, with no further ado, let's look at a few examples. I think that's the best way to really look at it with the technical analysis. What it really brings, it gives you a visual representation of what's going on. So just a few recent examples. I think that's probably the best way to learn. Keep in mind these charts, or in the highlighted black at the bottom, is exactly where they closed yesterday. But some of these charts are from, like I said, a couple weeks ago. This one here, a Biomed, ABMD. This was an interesting name. Former best of breed play in the medical equipment group. I know in healthcare, obviously, people follow the biotechs and the pharmas pretty closely. But this is a medical equipment play. From an earnings standpoint, to give a little bit of a fundamental take, it's moving in the right direction. 3 consecutive positive earning reactions. But of course, like I said, we want to see this translate into bullish price action. We saw multiple closes above the 200-day moving average. And that's important because it was actually below that line for more than a year. And it formed the bull flag in conjunction with that very round 200 number. I'll get into round number theory later. I'm a big fan of it. And it didn't trade above that figure since last November. And on a weekly chart, a break above 200 would also negate a long series of lower highs and lower lows dating back to October 2018. So I'm real bullish on this chart. You can see here, actually, even down here on the bottom, I don't know if you can see this. This is the stock actually compared to the medical equipment ETF. It's a ratio chart showing how it's comparing to its peers, how it's trading to its peers. Obviously, you want to buy strength. Like I said, I'm a technician. We want to buy high and sell higher. This actually had a nice, very long, about a 6-month bullish inverse head and shoulders pattern on the ratio chart, broke out. This chart, as of Thursday's close, like I said, is about 19 handles now above that very round 200 number. What it's doing today, I'm not exactly sure. Another one people may be more familiar with, PayPal. This has been a strong play, up 38% year to date, 33% over the last 1 year period. Had a huge gain the week ending 5/8 of more than 20%. It's now on a 7-week winning streak. And this week, coming into today, was lower by 1%, threatening that streak. And more importantly, 6 of the last 7 weeks closed near the top of the weekly range, which is a very bullish sign going out on the highs. Has nice momentum in regards to earnings, 3 positive earning reactions the last 3 times it reported. And you see here on the chart here, it actually broke above a nice cut base of 124.55 on May the 5th. Again, the best breakouts tend to work right away. This is a very good sign that it actually broke away earnings gap. It actually consolidated very nice there, formed the bull flag, broke above this bull flag. It's now trading as of the close of yesterday around 148. And remember, as I was saying, you get that measured move with the bull flag. It started here right around the 120 number. The break above the bull flag was 146.50 at about 26 points there. So that carries a measured move to 172. Again, here on the ratio chart below, I actually took a look at this against MasterCard. We'll look at Square later, but PayPal against MasterCard, you're kind of looking at those older plays against these new disruptive FinTwit plays. PayPal, you can see here on the ratio chart, very solid digestion. And then usually what we see from solid digestion is a break higher. You can see that's what happened here. I think that stock goes higher. Here is Dollar General. The discount plays have been in the news lately. Dollar Tree actually had a huge move higher this week. I believe it was yesterday on earnings. It was a laggard. It's actually coming into its own. Dollar General has probably been a best of breed play in this group for a while now. Small dividend yield, just a lower than 1%, higher by about 18% year to date. It's higher 6 of the 9 last week. It's not bad, but more importantly, like I said, it's digesting that 4-week winning streak. You can see it in here between 327 and 417 that rose more than 27%. Right now, it's just 3% off its most recent 52-week highs. Keep in mind, I like to see strength versus peers. Raw Stores off 21% from its yearly high. Like I said, Dollar General 3%. You can see here the bull flag formation. You can see, like, again, you're going to see here a nice advance and you're going to see some digestion. The flag pole started here around 135. You add that to 179 and you get a measured move to 224 on Dollar General. Like that name a lot. This is a name we looked at earlier in May, DocuSign. Much has been being said about, not, I don't know if it could be said anymore, but before, maybe a couple of weeks ago, there were a very small number of leading stocks that were actually shouldering most of the gains, software, semis, some retail plays. And this one here, the technicals on DocuSign, you can see here it broke above a double bottom with handle pivot of 88.87 on 331. Very nice move post breakout. Again, the best breakouts tend to work right away. You want to see something move higher right away. Formed a bull flag formation right here. Again, started at the 80 number, add that to 105. You get your measured move to 130. And right now it's trading about 130 right now today. Let's see, Sienna.
Hey, Doug.
Yes.
Really quick, getting some questions
Sure.
from chat. Can you break down, down to its fundamentals? What is a bull flag? Like get it real simple with it.
Yeah, sure. Well, let's just go back to, we can go look at any of these. This here, you see this long rise from late March to early April. That's called your flag pole right there. Okay, that's how you're going to get your measured move. So you look at the flagpole here, you see a nice, real strong move here. Then you see some really tight digestion, sellers very reluctant. You kind of want to see, very small volume, volume retreating in the bull flag, which is showing that sellers, like I said, not looking to part with their shares. Mm-hmm. And then what you like to see is you like to see a nice burst higher. Remember, it's a continuation pattern, which means the stock's basically already in an uptrend and it's going to just continue higher going forward. And again, just in case anyone is not clear, remember, you want to take the length of the flagpole. So right here is 135 to about 180. That was the breakout point. So you get 135 to 180 is 45 points. You add that to the breakout, which it is higher than that 180 right now. You'll end up with a measured move to about 224.
Okay, and then what time frame are you typically looking at for this? What's ideal?
Well, like I said, usually you want to see these moves occur pretty quickly. The best breakouts work right away. If it kind of hesitates and it doesn't really move out of that base, it might show exhaustion. On the other point, if it really takes off, that's a very good sign. New buyers coming in. The bull flag, we've seen a lot of that lately. Obviously, with this big move in the market, mm-hmm. We kind of want to see that digestion. Nothing goes up in a straight line. Nothing really goes parabolic. Mm-hmm. But the bull flag, I really like this pattern. It's one of my favorite patterns. That's probably why I put it number one. Does that answer the question, Neil?
Yeah, I think it does answer it, and it does seem like a fairly easy pattern to recognize. So I can see why you like it so much as a first example. Now, is this can we find bull patterns when we're looking at intraday?
You can find them intraday. I'm more of a longer term guy. Over the course of my career, I've learned that the biggest money is probably made sitting on your hands. Kind of putting it in cruise control. Of course, you have to have stops in there. Mm-hmm. But, this takes the emotion out of it. I'm more of a longer term, swing, probably position traders. I tend to like to hold my positions as long as the catalyst that got me in still is in play. I just really let it, like I say, put it in cruise control and try and take the emotions out of it. It's not easy, but that's the way I've been doing it. And that's helped me through the years.
Good. All right. I think that answers it perfectly, man. Thank you.
Okay, no problem. I think I found, Sienna, just another quick example here. Again, another break above a double bottom. Very nice holding, very steady here. You can see the flagpole started here. Right above here, we had a nice breakout above that 44.52 double bottom. Pivot on 4.6. Again, there was a bull flag that set up. Fast forward today, that stock's trading near 55. So you can see it's made a nice move. Earnings have been pretty solid, up 3 of the last 4. You can see 2 of them were up over 20%. So I like that. Some old names coming back into vogue. Currently it's trading about 3% off multi-year highs. Decent relative strength this year, up 4%, looking for its 4th consecutive weekly gain. And just one more with all this coronavirus. Look, like I said, I'm a price guy, but we're hearing that a lot of people might want to move out of the cities. They're going to work from home, move into rural areas. Redfin's really picking up on this. This is something we looked at back about 10 days ago. Real estate play up 68% over the last 1 year period. Obviously very strong. Remember, strength begets strength. This is probably about now 10% off most recent 52-week highs. But this week, very impressive action. Basically, after last week jumped almost 22%. That's obviously very bullish, not giving much back. Since March lows, there were 2 weeks that screened higher by about 38%. 3 of the last 4 earning reactions for the fundy guys and girls, of course, very positive. And we saw here, it actually had a bullish ascending triangle. Let's take a look at the chart here. And again, these round numbers, we're going to actually talk about these round numbers next. You see here how it held that very round 10 number. 20 number was resistance here in this bullish ascending triangle, kind of popped above, broke back in, broke out. We saw a bull flag here, kind of resembles a cup with handle if you want. But now this stock really powered higher after it broke out of this bull flag. Currently, it's dealing with that round 30 number at the moment. But that's basically my presentation for the bull flag. Any other questions before I go on to the next one, Neil?
Yeah, we got a couple. I think one is you mentioned staying on cruise control when I asked you about intraday patterns. I think that it might have been conceived as sort of like a feature on a tool or something. What exactly did you mean by cruise control?
Well, what I mean is, once a stock breaks out, you kind of want to let it do its thing. It's I've learned, early on in my career, I was one to take profits very quickly. Mm-hmm. And, at the end of the year, I would encourage everybody to keep a trade journal. At the end of the year, if you look back on what you've done, I mean, in the stocks you sold, you're probably going to realize they were much higher at the end of the year than they were when you sold them. I think Warren Buffett is, he probably put it best. He said, for investors as a whole, returns decrease as motions increase. So what I try and do, I try and be a very concentrated trader. I kind of like 4, 5, 6, concentrated holdings. The other adage there is, concentration, diversification preserves wealth, and concentration builds wealth. Preservation, diversification preserves it. Sorry there. But yeah, I kind of like once something breaks out, kind of let it go. There's going to be some pullback in here and there. But like I said, let these things work out, let them play out. You'll find many times, as long as the catalyst, like I said, that is still there, is in play, let the stock go.
Okay, so great answer there. Referencing the great Warren Buffett. So we've got a couple. I think we've got some people that do have some experience with charting. They're asking some pretty specific questions here. Do you have a tool open that you might be able to hop in and maybe take a look at a couple stocks that our audience is suggesting?
Absolutely.
Awesome. So I've got one for DFKG.
DFKG.
Yep. Comment is, looks like a big flagpole rising, maybe a bull whip.
DFKG. Is that DKNG, you mean?
Yeah, DFKG looks like it's not coming up. It could be. Yeah. So whoever commented that, if you're talking about a different ticker.
DraftKings, is that what they're looking at?
I mean, that would seem like it, yeah.
DKNG maybe?
Yeah, I mean, look at it.
Yeah, this thing has had, obviously, wow, what a move off the low. Again, you can see here, a move off the 10 level. It's actually finding some problems here near the 40 level. I think I heard this morning, this is actually a good indicator as to when sports are going to open up. Obviously, you need to bet on sports. Mm-hmm. To me, this is too extended for me to actually get involved. I mean, you had a nice cup-based breakout right here near the 20 level.
Yeah.
You can see between 10 and 12, it's really taken off. Has great momentum behind it. I mean, for me, if you're in this position, again, let it run. To initiate a new position here, that would probably be a tough scenario for me to get into. I think there's better fish to fry at the moment.
So when you're talking about overextension, you're saying that it took too long a period of time for this sort of quasi flagpole to
So
start.
what I would have done here, this is a cup base right above the 20 number. You can see it actually looks like it traded between the round numbers around 10 and 20. This breakout here, you can see there was a little bit of a tug of war here between the bulls and the bears, but eventually it worked itself out. And here, look, I mean, obviously it's a great chart. It's going from the lower left to the upper right. Volume looks fantastic. It's up every day this week. Looks like it's going to finish about a 5-day winning streak. But the RSI here around 90. It's a little overheated for me. I'd probably wait for a pullback. If, like I said, if you're still in it, if you have a nice basis, it's a whole different scenario.
Yep. Now, okay, so let's do a little exercise because we're getting some questions about just setting up your tool so that you have the right indicators and all of that. Would you mind opening up AMD and then just going through, just start with like an area or a line chart, and then just go through the things that you want to turn on. So it looks like he's using stockcharts.com.
Yep. Well, I use stock charts. I have investors.com as well. This chart that actually I'm actually long this name. I'm long it from 35 last year. It was a long, let me see if I could pull it up here. You can see this long bullish ascending triangle. You see this 35 level way back. You could see again here, we were making higher lows and then it broke out. You can see it actually retested right around here. We can go back to the daily chart. The daily chart, I'm looking to actually add to my position. You can see here, this is a nice cup. It's kind of putting on a handle. It's getting a little long in the tooth. Again, next I'm going to talk about round number theory. You can see how it's holding this 50 number. I think this is a big line in the sand. I'd actually add to this name here, or, I think you can initiate a position. You can see how it's holding this 50-day moving average, which is rising. 200-day moving average is rising. You could see on Wednesday, we had a bullish hammer. It dropped real hard here below, but closed well off the intraday lows. It's definitely holding this 50-day moving average. For me to really get involved, for me to add to my position, I'm gonna need a break above this handle here, right here. You got a cup here, and then you got this handle. So above 58, I'll add to it right here. I mean, if you're looking to initiate a position, I can't fault anyone who's looking to do that. I think you look at a stop below this intraday low here around 49. You can see here there was a nice bullish engulfing candle. Those are the Japanese candlesticks. I'm a big fan of those. We can get to that on another day. But I actually like AMD here. It's kind of underperforming NVIDIA. I like some other stocks here. IPHI, you can see this name's had a gigantic move. Looks real good. And MTSI is one of my other favorites.
So Doug, as we're taking a look at this one,
sure.
Could you give us
AMD?
No, we can do MTSI. That works. I mean, this is great.
Okay.
Can you give us a little description? So this is stockcharts.com. What are the trend lines that you're running right now? Could you just kind of go through, if we have someone that just goes to stockcharts.com, they don't know anything about like how to set up their candlesticks, how to set up their time horizons, all that kind of stuff. What is your setup here?
Well, right here, actually, this to me, it resembles a bull flag right here. You can see this flagpole here started at 23. 32 has been a lot of rejection here. You can see here, boom, here again, here again, here again, here again. The way sometimes I analyze the bull flag or try and interpret it is almost as a beach ball held underwater. You can see here it was rejected at 32. Rejected at 32, rejected over here at 32. Once that can finally, like I said, technicians were big on the close. Another adage, amateurs open the market, pros close it. So if I can see a strong close above 32.50, this to me is a bull flag right here. You can see how it actually, it's actually digested this move really nicely. This blue line here is the 50-day moving average. The red line is the 200-day moving average. You can see here, this actually crossed above the 50 days. So the shorter term moving average. actually crossed above the 200-day moving average. In technical analysis terms, we call that a bullish golden cross. But for this setup here, I actually have this on my radar. If this, like I said, can close above 32.50, I'm long. The flagpole starts at 23, almost near 33, 32. Add 10 points. If that can break out above, that measured move would be about 42, 43.
And so, what are your just very specifically, if we're looking at this, what are your ideal entry and exit points?
Yeah. So like I said, I need a buy stop. Again, I'm a buy, I'm a buyer of strength. So I need to see a buy stop, which means I'm not going to buy. You can see here, it looks currently, it's about 30.87. I won't buy this until it closes above 32.50. So most of my trading is done in the last 15 to 20 minutes. I want to see that close above, because you can see here again, the resistance here, resistance here, resistance. Plenty of resistance, but this is I really like this chart. This is one of my top 5 semiconductor names on my list. If this is going to get above 32.50, like I said, you have a move to about 43, and then you can see here again, round number theory, 30 number. It's really holding this 30 number very well since this nice candle here. So you say about the last 7-8 days has been holding that 30 number. A lot of people, kind of, want to. What's the word for I'm looking for? Get in before the actual buy point, but I'm a price confirmation guy. In my notes, I always highlight or capitalize price and closing. I'm a big fan of that because you can see here, if people tried to get in around 32 or 32, you've had some whipsaws here the last 3, 4, 5, 6 sessions. So I want to see a decisive move above there. And then if I was going to have a stop, I'd probably stop it out, right around 29.50, because this 30 number has been holding. If I was to draw a bull flag in here, it'd probably be from, like I said, to there, and across. But this is a very encouraging chart. I really like this chart.
So we've got another request for another ticker.
Absolutely.
We've got ATEX. And while you're typing that in, you mentioned it a couple times, so I think I want to get an answer from you on round number theory.
Okay.
So tell us a little bit about that too.
Okay, I'll get into that. That's one of my. That's actually my next strategy I'm going to employ. But the round numbers, you're going to find generally that stocks, they kind of find support and resistance at the round numbers. I'll give you some good examples.
Okay.
But look, probably, going back over time. Actually, presently, we have the S&P at around 3,000. That's his 200-day moving average. That's a big round number. Everybody's watching it. If you want to go back a year or two, Bitcoin, I think, reversed at the round 20,000 number. If you want to look at that cannabis stock, Tilray, obviously, it's had a gigantic move off. It actually touched, I believe, the intraday high was 300 precisely. I'm not sure if that was, how long ago that was, but if we pull up that chart, you can see Tilray actually reversed at 300. I think it's now trading around 10. But yeah, I'll go into the round number theory next. That's my next category I want to take a look at.
Okay.
But ATEX, I actually like this name a lot here too. I'm seeing, you can see here round number theory, 50 number, resistance in January, resistance in February, resistance in early March. And look what happened. It turned into support. So I really like this number. If this stock could stay above 50, I'm a big fan of this name. This is a really nice chart here. Obviously, it doesn't trade too much. So if you're going to trade, it probably has a little slippage, but you can see here, good accumulation. When I talk accumulation, that's big moves higher on big volume. You can see here another one here. Wow, that's easily the best daily volume in the last 6 months. But again here, resistance, 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 support. Great sign. Great sign. I might want to wait for a little more of a pullback, but if you're going to put a stop in, you got to put it in right around $49. But this looks great. That's another thing, another adage we talk about, former resistance becoming support. That's a positive trend change. I like this chart.
Great. Thanks for taking a look at that one.
No problem.
I think that's it for our questions right now. So if you want to move on to the next section, that's great.
Okay. Let me move on to round number theory then. Okay, round number theory. Like I said, this is probably one that's underfollowed, not given the credit it deserves. It's very simple. I like to keep things simple. I know many have a complexity bias. I try and keep things very simple. But round number theory, like I said, it can actually help investors trim or add to core positions. Like I said in that last example with ATEX, the round numbers will often serve as support or a roadblock. Some round numbers are more important than others. First time trading around 10, above 10 can give a stock a nice move, as you know, some mutual funds are not allowed to own single digit names. There's been studies that stocks that trade through the round 90 number often go to par or easily beyond that. So that's usually a very good sign. Again, like I said, some highly visible examples of round number theory would be that Bitcoin reversing at 20,000, Tilray at 300. Of course, the S&P right now, all the focus is on that line in the sand at 3,000. But let's take a look at some examples. Okay, SurveyMonkey. This might be a name that's not really followed that much. I believe it was a recent IPO, maybe a couple of years back. Maybe I'm wrong. But it's been a thorn in the side here. This is how we looked at it. I'm not sure how it's trading today, but this is how it looked about 2 weeks ago. Let's see. You can see on the chart here, right down here, you can see these intraday, 3 days in a row in mid-March, well below 10, closed above the 10 number. This session here, right there, was a bullish engulfing candle. And then the 20 number here, let me see if I can, let's see where actually SurveyMonkey is today, actually. Let's take a look at that. Is it above 20? You can see here again, above 20 intraday here. This is the actual current chart, above 20, above 20. It's actually been above 20 every day this week. I'm not sure if it poked its head above 20 today, but you can see on Tuesday, Wednesday, and Thursday, it was above. I'm not a buyer until this actually can pop above 20 again. You might see that beach ball held on the water effect there. But you can see in here, actually had a nice 10-day winning streak to begin May. Volume was pretty solid. And getting back to the chart here, we might have a gap fill here at the 200-day moving average. I doubt it. It looks like it's off to the races here. But, you know, software has been very strong. This here, again, is the ratio chart comparing SurveyMonkey to the IGF. That's the software ETF. Again, I'm comparing SurveyMonkey to its software peers. Broke that downtrend lines going higher. I really like this name. It can get above 20. You can see here, 20 again was a little bit of resistance. It was very reluctant here to move above 20. If this can get above 20, I really like it. Let's see, Chipotle. I eat there. I actually love the food. A while back, I put up a poll on Twitter. Who would be the first to break 1,000, Chipotle or Tesla? Proving that the crowds were wrong. Tesla actually won that debate. Chipotle actually did actually trade well above 1,000. You can see here again, this is a bull flag. And you can see here again, round number theory. Look at this, holding the 600 number very nicely. The flagpole hold here, 300. You got about 300 handles there. So your measured move would be to about 1,200. But again here, 900 all through late May, April and early May. 900 was a roadblock. Did burst above there. Let's see where it was today. I know it reversed. Okay, so now it's back basically to the 1,000 number. But can you see here? This was that bull flag from here to here, burst up to about 1,100. It's had a tough week. You have a bearish engulfing candle here near the 1,100 number at all-time highs. Not the best sign, but it's holding that 1,000 number. It's well above the 900 bull flag. So again, you know, all this intraday noise, I think you can hold this. I think this eventually resolves itself up to around 1,200. But again, it could be, you know, could be a few months from now. But again, this is a good example again of round number theory. In the biotechs, this name here, ARWR. This is a chart from earlier this month. This is a weekly chart, actually. Again, I like the longer term charts. You can see here a nice break above the round 20 number on a cup with handle. Actually stopped right here at the 20 number. Not sure where it is here. Let's take a quick peek at it here. the round 40 number, you can see it's been trading between 30 and 40. Obviously losing that 50-day moving average, not a good sign here. But it looks like, well, it's a tough one here, but you can see here how it really held that 20 number nice, basically doubled from 20 to 40 in about a month. Losing steam here, not a good sign. Let's take a look at a couple more examples. Micron, obviously a lot of people know Micron.
Let me, Doug, if I can, let me pump
Sure.
the brakes really quick. So you touched on cup with handle.
Sure.
So that's another pattern that folks here have probably heard quite a lot.
Very common pattern.
Yep. Can you what does that mean? One is, how do you recognize it? What needs to happen for it to be a cup with handle? And then what does it mean to you when you see one?
Okay. Like I said, cup with handle is probably one of the oldest and most basic patterns. I could give some examples of the cup with handle. You can see here, this is Teva Pharmaceuticals, formed a long cup. And then you see here with the handle here, again, you want to see this form in lower volume. What the handle does in the cup with handle, Neil, is it basically shakes out the weak holders. You see a lot of guys that might have bought up here, and it kind of gets back to even. They want to get out. They want to try and put their money somewhere else. They get shaken out. If it happens on low volume, that's a positive sign. This is a good example here. Broke above 12.15. Not exactly sure where it was today. Yesterday it closed near 13. Perigo is a good example with that also. Coupa software been red hot. Again, let's take a look. You have a nice cup. And again, here, this is round number theory here. Look where this number stopped here in the bottom of the cup, about 100 right here, 100 reversed hard. Had some problems above 200 here, but the handle here, 170. So you see this cup here, you want to see this actually move back to old highs. Again, we'll see the weak players probably shaken out. And then when it takes out that 170 number, boom, off to the races.
So those weak players, they're folks that are holding that stock, but they have low conviction.
Absolutely.
So they see that and they're dropping it. And
Absolutely.
so you see a slight ding in the price of the stock. And then you can expect it to go back up. Now, why is it that you expect it to go back up after the handle?
Well, I don't expect anything, to be honest, Neil. Like I said, technicians, we're seeing is believing. We don't try and anticipate. We want to see price confirmation. Once it's broke above that 170 cup with handle there, 169.30, you can see it had a nice move. Yesterday, I'm not sure where it's trading today. Yesterday it closed around 217. But you can see this move here. Again, it really probably shook a lot of people out here. Again, it got up to near, kind of close to where it was. You always want to see the handle, Neil, form within the, very in the upper half of the range, probably closer to the very near to the top of the range.
Mm-hmm.
But again, you can see Coupa software. Then do we have any Square? People probably obviously very familiar with Square.
Mm-hmm.
I can show you here. Remember we compared PayPal to MasterCard on a ratio chart earlier in the program. Here we have Square versus Visa. You can see how Square, these smaller, more nimble players are outperforming these older super tankers in Visa and MasterCard. Disruption. But you can see here, I believe Square at the moment is still trading right near this cup with handle, which is okay. Remember, most breakouts are retested, Neil, to determine their true validity. But again, we want to see these names kind of move pretty quickly. We don't want to see them hesitate. The best breakouts work right away. So if you're seeing a breakout, turn into the red on your P&L screen, that's not a very good sign. You probably should take a small loss and look elsewhere to put your capital. Winnebago, another name, beautiful cup with handle here. Again, it came back to retest that, just like I said here. A lot of times you'll see these cup with handles, or any breakouts for that matter, bull flags, triangles, whatever, they're normally retested. You can see here it was retested at the 200-day moving average. If we take a peek, I don't know where this is now, but Winnebago, where is it now? Yeah, it's coming down, but it's still well above that cup with handle. We had Camping World had a nice move. You can see this move almost from 4 to 24. Obviously, a little long in the tooth, but Yeah. So does that answer the question with the cup with handle?
Yeah, absolutely. We're getting another one from chat, wondering if you can look at club, CLUB.
CLUB. Let's take a peek. Okay, club. Yeah, this is it actually broke this long downtrend line. I kind of like it. I usually don't trade stocks this low, but you know, I like the volume here. It did break this downtrend. Yeah, it couldn't really trade above one here, but it's actually a hold in this last 2 days. I mean, man, that must be a 50% move. It looks like from about 50 cents to $1. You got to consider pretty bullish that it's holding on there. Yeah, it's a tough one to play. There's a slight gap here. It looks like it filled in that gap. Usually you like to see gap fills occur in a longer time frame, longer time period, but broke that downtrend. I mean, can it come back and revisit these three? You know, I like that. There's also another old adage in technical analysis: nothing good happens below the 200-day moving average. So for me to get involved here, again, I tend to avoid single-digit names. I've had problems with those over my career, very early on. But I'd be much more bullish on this name if it got above 145.
So that's a great takeaway for everyone here is that 200-day moving average.
Yeah, that usually determines the long-term trend, the secular trend. And you can see this line obviously is sloping lower. So that's telling you that the long trend, the long-term trend is still slightly negative. The 50-day you can see down here is starting to curl higher. So that's a shorter term. So it depends on your time frame. I mean, if you're a shorter term trader, I think, but you got to be able to withstand a pretty decent stop loss there. But again, this would have to get above 145 for me to get interested.
Very good. All right. So I don't want to take too much more of your time because we are getting pretty close. I was wondering if you could take one more from our audience here.
Absolutely.
We want to look at VTIQ.
VTIQ. Oh, wow. Look at this. This kind of looks like a bull flag here. Wow. Nice move here. Let me see if I can annotate here. I think I can. So what I'll do is I'll try and annotate this myself here. This is what you probably call a bull pennant. It's kind of a cousin to the bull flag. Broke above there and it's hanging above 26. Not a bad chart. I'm going to have to take a look at this after we say goodbye to each other. But this looks like a nice, if this could hold 26, looks pretty decent. Fairly liquid name, trades over 1 million shares a day. You can see here, though, it's had problems at the round 30 number this week. I'm a big round number theory guy. And guess what? Look where the bear pennant held up right at the round 20 number. So if this can get above 30, you could probably add to your position. But if I was in this name, I'd probably have a stop just below 25. You can see the 26 bull pennant formation. It broke above there. It's kind of stalling again. I like to see. I hope I don't sound like a broken record, but the best breakouts work right away. I want to see this move higher, but man, this has had some move. It's more than doubled this month. If you're long, and you can see here again. Let me see if I could paste this out here. You see a cup with handle here. Cup.
Oh man.
So I mean, just obviously this is Monday morning quarterbacking, but you know what I mean. This is this is a nice break above a cup with handle. Talk about positive move post breakout. That's a monster move, man. That could really have an impact on a year to date P&L portfolio.
So nice pick from chat. Thanks guys for recommending that one. This one demonstrated two of our predominant patterns here. So I just want to get kind of a quick summary before I let you go. So as someone that's focusing on technical analysis, how much does the story behind the company, how much does the fundamentals and all that kind of stuff compare to what you see on the charts?
Well, it's, usually strong charts, strong patterns, stocks and uptrends. Obviously, they have good technicals. They probably have pretty strong fundamentals to back them up. But again, I think I'm a big believer that the technicals and the fundamentals complement each other. Usually people focus on one or the other. I think they can, like I said, I think they complement each other. But at the end of the day, I'm a price guy. Price is truth.
Mhm.
The technicals, I make all my decisions based on the technicals, but the technicals to me, right here, if we're just going to talk about the market for a minute, I mean, the S&P has been lagging a little bit. I know the NASDAQ's well above its 200-day moving average. But I think if you continue to see tech move higher, we're going to see good moves in the market. But if you really want to look at that 3,000 S&P number, I hope that's not a bull trap as we peaked above it this week, and now it looks like we're right about there now.
Mhm.
But yeah, I love this stuff, Neil. I'm true and true. I'm a technician. I battle one stock chart at a time. And I love this stuff. I really do. I hope you can have me on again.
Yep, I think we absolutely have to. We did not get through. Doesn't even look like we got through half of what you wanted to cover.
No, I mean, next time for sure. I mean, I'm sorry. I guess we got a little too passionate about it. And we had a lot of interaction between your guys. Keep up the good work over there.
Hey, we're doing our best, and I gotta say, your passion for charting is infectious. So what I want to leave folks with is, Doug, if you can, where can folks get more of you, what you're doing? Where can they go online to find it? And what would you like guys and gals to take away from this session if there's just one thing?
I think price is truth. Like I said, a lot of good buddies I know, technicians that I really admire. You see all these indicators on the charts. Most of these guys, including myself, these indicators are all secondary. Price comes first. Price is omnipotent. I like to take a lot of these indicators off the chart and just focus on price. If you want to learn more about what I do, my website is chartsmarter.com. I'm on Twitter with that handle, ChartSmarter. I'm on Facebook. That's probably the easiest way to find me. I'm in the process of starting a YouTube channel. So look out for that in the next month or so.
Great. Definitely watch out for that. Doug, all right. Thanks so much for your time. It's been a great pleasure having you, and we will definitely have you back.
Neil, I really appreciate it. You're a great host.
Thanks so much. All right. Take care, Doug.
All right. Take care.
All right, everyone. That was Charting with Doug from chartsmarter.com. Make sure you check him out. He was getting pretty advanced there. I know some folks, and my colleague Hot Stocks Luke has joined me, but just to wrap it up, he's getting a little advanced there, but I think at the end he did something really great, which is just simplifying it down. He only had two trend lines. He had the 50-day moving average, he had the 200-day, and besides that, it's about the price. Folks you can open up any charting tool from free to paid, and you can throw so much on there. It'll make the whole thing look like a little kid's etch-a-sketch drawing. But, you heard it from someone that's been a chart expert for a very long time, and they're just keeping it simple. So theme of the day so far, keep it simple, stupid. So before I turn Hot Stocks Luke on here, I know he's raring to go. We've got something great for you. Luke is going to make a live trade based on the lessons we've learned so far with his own brokerage. But before we do that, I just want to remind folks that you do still have a little bit of time before that deep dive breakout session begins. So if you go up to the top of the site to upgrade your pass, you can still get access to our deep dive, that more intimate classroom style approach. You'll get Hot Stocks Luke in there as your host, making sure that every single question that you have is answered. This is educators there expecting folks from all levels of sophistication in the markets, ready to answer all of your questions. So make sure you don't miss out on that live opportunity. And then if you just want to capture the recordings, both options will get you the recordings. The breakout will get you the breakout recordings. But if you just want the recordings for the main session, make sure that you do upgrade your pass to get just those. So without further ado, Luke, have you been watching this?
Neil, I've been watching. I said at the beginning, and everyone, I'm Luke. I'm one of the guys here over on the Benzinga team. If you're just joining, but Neil, I have been watching, and if everybody recalls, I had one tip at the beginning of the day, which is to take copious notes. I've got my notepad in front of me, and I'm gonna put them to practice. Neil, you know that I'm one for putting my money where my mouth is. So I'm going to take something that I pulled out of each lesson, and I'm gonna make a trade with it. I was gonna do it while I was watching, but you never seem to believe me on anything I do. So I figure let's do it now.
All right, great. So Luke, before you do that, what are some of the big takeaways that are going to go into this trade you're going to make?
Okay, so the first one, let's talk about birthday boy Joseph. So kind of him to come and do a session for us on his birthday. Especially with him being all the way over in Italy. It's his birthday night. Yeah. Even more important time. But he talked about two things that I pulled out of it. The first one is look for positive news. So looking for positive news. And then he said, follow the trend. Said, the trend is your friend. If the stock has upward momentum, follow that trend. So let me show you what I got here. I'm going to share my screen. Okay. All right, Neil, can you see my screen?
Yep, you're good.
All right, and I'm going to pull Benzinga Pro over it for now. Can you see Benzinga Pro?
Yep.
Okay. All right, so the first one I'm looking at, and let me throw you guys a couple zooms here. I actually grabbed this idea out of the chat. Okta, ticker OKTA. It's got the two things that I'm looking for, which are positive news and a positive trend. So, this is Benzinga Pro. This is what I use for news personally. But I'm looking at yesterday, they reported really strong earnings. So this is the quarterly earnings number that every company is required to publish, tell their investor base how good of a job they did that quarter. They reported a loss of 7 cents per share. That's the EPS number, but analysts expected a 17-cent per share loss. They also said that they had revenue of 182 million versus the 171 million estimate. So there's my positive news. And then I'm going to go over and I'm going to look at the chart. Check this one out, Neil. This might even be too quick of a rise. This stock has been strong. What do you think of that chart?
So what are we on? This is the daily.
Sorry, these are daily candles. So each one of these bars represents 1 day of trading activity.
Yeah, this thing's breaking out.
It's breaking out. It got stopped up here. So right around where its high was 3 days ago. It is at about $197. I want to make sure that I can push past that. But generally speaking, I like this stock, Neil. I'm gonna lock this in as my first one. All right, I got my TD Ameritrade account up here. Let's see. I'm gonna go ahead. I'm gonna buy 5 shares, about $1,000 position. I've got my limit order set. So the stock's at $193. The most that I'm gonna say to pay for it is $193.31. Gonna review it. Order sent. All right, there's my first one, Neil.
Yep. All right, I like it so far. I believe it. Right. Putting your money where your mouth is.
All right. I'm going to pull this back up and give you my second one. So this is taking some principles out of Doug, who we just watched. Yep. Technical side of things. Now, I am not a technical guy. I'm very much focused on the fundamentals. Mm-hmm. But I might have just spotted my very first bull flag. You want to see it?
Yeah, I'm kind of in suspense.
All right.
Grubhub.
You're just teasing me.
No, I'm not. I'm not teasing you. I'm serious. All
right. So check this out. This stock is Grubhub. So I'm gonna draw on this chart a little bit. So here is my pull, my flag pull, and then we got some consolidation right here. All right. There's the rest of my flag. Again, this is my first bull flag. So if I'm doing this wrong, somebody in the chat correct me so I know. But then we got the breakout. So he said, look for that rise up, look for the flag, and look for the breakout. So we got Grubhub spiking higher. It seems like it fits one of the patterns that Doug was describing. So I'm going to go ahead and I'm gonna place my second trade using my first bull flag. Again, going to my brokerage, I'm gonna hit buy. I'm going to go ahead and buy 20 shares for a similar size position. Again, I'm going to utilize that limit order, so that way I'm not just throwing my order out there willy-nilly in the market. I know what's the max price that I'm going to pay. I'm going to review it, and then I'm going to lock it in. So that's what I pulled out of it, Neil.
Okay, Luke. So this is great. I cannot wait. So everyone that's attending now, we'll post on Twitter the results from Luke's trades as soon as he gets to an exit point that he likes. Luke,
there we go.
Can you go back into Benzinga Pro really quick?
Yeah, and actually, you know what? Really quick, Neil. Let me show you how I found these. I saw a few people chatting in wondering how do you find the stocks in the first place. Here's a tip that I like. I use Benzinga Pro to find this. There's other tools out there, but Benzinga Pro, it makes it nice and easy. I went to this movers widget here and see it gives me all the stocks that are having the biggest gainers and losers of the day. Can you see that?
Yeah, I can see it. And this is what Joseph was doing earlier. Joseph had a different color scheme going. So what he had was white. Luke has our basic color scheme now, which is darker.
Yeah, I'm a basic guy, Neil. I clicked through these stocks that were breaking out, and then after I clicked on them, I was looking at the charts and using that to identify a pattern. So that was my stock selection process.
Yeah, and you made that look really easy, which is I mean I suppose it is. Can you hop back to your workspace that you had open for Grubhub?
Yep. Here's my Grubhub. Let me zoom out a little bit.
Is this thing does Zoom let me draw on the screen? Is that something I can do? Annotate. Yeah. So could this be a cup and handle?
Oh man, I see it. All right, I got two patterns going for me now.
So
just wait till we post those results on Twitter.
Yeah. Everyone that's watching it, you guys let us know which one you think is right between me and Luke. Is that a true bull flag, or is that a cup and handle, or is it both? Neither of us are expert chartists like Doug.
Yeah, it's my first bull flag, Neil. Work with me.
But yeah, watch on Twitter, and we'll let you know how Luke does on these trades.
Cool. And Neil, but before you hand it back back to the main session again, I'm just doing a little bit of recap. I do want to invite people to join the breakouts. That's going to be starting at 1:30 today. We're going to have three awesome speakers, three top traders doing a breakout session. They're going to be talking about picking stocks. You're going to be throwing names out in the chat. They'll be looking at them, going into some unique strategies. If you want to see that, go ahead and click on that. I believe it's the upgrade access button at the top of your screen. Again, that's going to be starting at 1:30. We will send you the recordings for the main session, so you won't miss any content there, and you'll have those recordings for further study. Again, if you want to join me in the breakouts, go ahead and click that upgrade access button.
All right, Luke. I think your time is up, bud. Next up. We've got an intro to options with Sean Cruz from TD Ameritrade. Luke, thank you so much for putting your money on the line and demonstrating some of the stuff that we've just learned from this morning.
Thanks, Neil. We'll see what happens.
Good luck, bud. All right, guys. I think we are ready to hop right in. I hope you are ready for some options. We'll try to keep it light. Guys, remember your thanks, both cup and handle. Guys, make sure that you put those questions into the comment section, because those are what are going to drive these sessions. So if you need to pump the brakes on things start to get too advanced, let me know exactly what you want to hear from the speaker, and I'll make sure that we get that across. So without further ado, Sean, are you there? Sean, you're in. I just can't hear you yet.
All right. Are we, do we got me? Am I live?
Yeah, you're live. How are you doing, Sean?
I'm great. How are you?
Doing wonderful, man. It's great to have you here.
I kind of wanted to let you and Luke just keep going. I was sitting here watching it myself, and I was like, oh, maybe I should look at Grubhub. That's interesting.
Yep. We'll hope that pans out for him. I think he's a lucky guy. He's got luck usually in his favor, so we'll see. All right, so Sean, we're talking about options today. So I would love for you to tell the audience a little bit about yourself, your background, and what they can expect to learn from you during this session.
Yeah, so thanks a lot, first of all, everyone, for joining. And I really do hope you get something out of this. Thanks, Neil, for having me on. So I'm the Senior Manager of Trader Services and Client Advocacy for TD Ameritrade. So we work in the trader group, and that comes down to all the products, the platforms that you see, a lot of the client experience, and also a lot of the education that we do, which is something we really focus on as well. So I've been at TD for about 10 years now. I've had a few roles. I also worked for an option advisory service where we were actually giving real life trades and putting those on and advising clients on different trades, not only just how to open it, because anyone can really go out there, throw out a trade, hey, buy this, but then they don't tell you how to manage it moving forward. So that was one thing we focused on. But I've taught clients across the spectrum and just in terms of where they're at from options, basic, intermediate, and advanced over the course of these years. So this is something I really enjoy doing, and that is introducing people just to the concept of options. And we're going to keep it very basic. And the whole goal here is if you just come away and you're a little bit more familiar with options and how they work than you were when you came in, that's great. I'm going to try and keep this so that it's as platform agnostic as it can be. I'm going to use the TD Ameritrade Thinkorswim platform. I'm a little biased. I think it's the best one out there. But the thing is, you can take these concepts and it doesn't really matter which platform you're on. You'll come away a little bit more aware of how to use options in your trading and investing strategies. So, you might be a big technician. You might have some sort of fundamental take on things. You might have a little bit of a mix. But the thing is when we're looking at options, we really aren't so concerned with how you arrive at your opinion of a company. It's more about how you put that to work. And is it going to be buying a stock because you think it's going to go up, short a stock because you think it's going to go down? You can sort of take those opinions on the future price of a stock and use options to put that to work as well. So that's some of the things we want to just get basic familiarity with today. And I hope actually you come away with this with sort of more questions that sort of take you further down the path of learning how to put options to work in your portfolio. And like I said, that's going to be if you're an active trader or even if you're just more of a longer term investor. The good thing is you can still use options for that.
That sounds great, John. So as we go, we will be taking questions. And so from time to time, I might interrupt you with a couple questions, but without further ado, I'd say let's get started.
Yeah, and please do feel free to chime in with questions. These things kind of build on each other. So if there's something that you want me to maybe just to dwell on a little bit and maybe hash it out and unwrap it a little bit more, please do, because as we get further and further in, it helps that you have a very clear understanding of what we just covered. So let's kick it off. So I'm going to use some slides here, and this was actually a big thing for us in education. One of our rules for years, and anybody who's ever been to any of our market drives or education events knows, we always just went right off of the platform. So this is sort of a departure from that, but we think actually having slides and getting some visuals on what we're talking about help prepare you to ease into using the platforms and tools that we offer. So I'm going to bring up the slides. This is part of a bigger options course that we do offer, but we're just going to cover the basics here. Just on these options, on some things you should know about options before we go into this. And I think that will make the platform, some of these active trading platforms, when you first go in, there's a lot of things blinking at you. They can be a little bit overwhelming. So I want us to at least have a level set of where we're going into this of options, so we know what we're looking at and what we're seeing on the screen and what that means for us. So we're going to learn the basic of option contracts. We're going to learn the difference between a call and a put. We're going to learn how to identify, buying or selling an option can actually change what you're doing in that trade. And then we're going to talk about, how options trades can end. And then we're also going to start talking about some of the things that impact the price of an option. Because when we talk about going long or short a stock, I'll go into this more, you're just really talking about the price. If it goes up $1, you make $1. If it goes down $1, you lose $1 if you're long. Short, everything is reversed. With options, there's other things going on in here outside of just the price of the underlying, and we're going to get into that. And I think it's a pretty timely scenario or time, very timely right now we're having this discussion, because this is definitely a time where there's a lot of volatility and uncertainty out there, and that dramatically impacts what we're seeing in options. So by the end of this, you should have a pretty good feel for why, you know, all this volatility is something that is a massive consideration for options traders. So without further ado, oops, going backwards. So what is an option? So an option it really just gives you the right to buy or sell a specified number of shares of stock, or we have these on ETFs as well, before a certain date. And so there's that price that you agree to. Hey, I'm going to buy 100 shares of Apple at $100 a share next, the third week of next month. So our strike price, that's the price we've said, hey, I'm going to buy Apple for $100 a share. That's your strike price. That certain date, the third week of next month, that's going to be the expiration date. So you can almost think about it as sort of a coupon you can go in and redeem. You can walk in the store and say, hey, I've got this that says I can buy this stereo for $100, and I just have to do it before this date. That's when this coupon expires, and the store owner has to honor that and say, all right, yeah, you know what, it actually is selling for 200, but I have to sell it to you for 100. So that's sort of something to think about it when you're looking at this. But options always have these standard characteristics that come with any option contract. So that's the underlying. So we just talked about Apple, that would be the underlying. We talked about shares, that's 100 shares. The premium, you do have to pay something for that coupon. Maybe you got out of a coupon book that you bought for 10 bucks or whatever, but there's that premium that you have to pay just to own that contract. Then there's a strike price, like we discussed, is the agreed upon price you can buy or sell. And then the expiration date, which works like every other expiration date. After that expiration date, the option contract is more or less null and void. So the key here and why the quantity matters is we're talking about the options multiplier. And so when you think about an options multiplier, all right, I can buy these shares for X amount. Is that 100 shares? Is it 50 shares? Is it 1,000 shares? The standard is that it's $100. So we quote these options on a per share basis, very similar to stock. That $60 price you see for that stock, that's one share. But now if you're buying 100 shares, it's going to be $60 times 100 is what you end up having to pay. Very same thing for options. It's one, that one contract is quoted on a per share, but most of these contracts have that multiplier for $100. So that's why if you're looking to go out there and you say, I'm going to buy a call for $1, that multiplier kicks in. So it actually will come out of your account is that $120. The reason, and I think here, just one question to get ahead of, I'm sure everyone here is familiar with the concept of stock splits. So stock splits are something that can impact this multiplier number, but generally speaking, option contracts are going to be 100 shares unless there's some extenuating circumstance like a stock split that causes that. It also happens in merger and acquisitions. You see that in some energy companies. You see that in some of these biotech names as well. But we're going to go over, the implications for that and how to tell what that is here in a minute. So how do options fit in a portfolio? And that's why I said you don't have to just be all in on looking at options as something you're going out there and speculating on or taking shots on. It can actually be part of an investment plan, it can be part of a trading plan. And they do say you should have some sort of alternatives. And make no mistake, when you talk about alternatives and someone says, well, it's an alternative investment, they're thinking of a hedge fund or something. If you are using options in your portfolio, you probably that's an alternative allocation in your portfolio. And if you think about what a hedge fund does, they're usually using options as well. So there's where we get into what are the uses for options in a portfolio. And I think everyone has this scary idea of, you're going to end up with your entire portfolio wiped out. But we see this used in a variety of ways to generate income. I've got 100 shares of company stock or 500 shares of company stock. How can I generate more income outside of a dividend? That's an idea that a lot of our clients use. You can use it to speculate. And that's a very popular thing that our clients do as well, especially when you have these earnings reports. And then also hedging. I have all this stock, it's my nest egg or it's a huge chunk of my portfolio. I don't want to wake up, this company goes, goes under or for whatever reason sells off and a massive chunk of my wealth is out the window, that's sort of like a hedging, almost like an insurance policy on your portfolio, if you think about it. So these are the three uses. And I'm sure a lot of people watching this now have some idea of what they have in mind when they think of it. Maybe you came in just, it's entirely speculative, but now we can maybe come away from this with more questions about, well, how do I use it to generate income? How do I use it to hedge? And we have clients that actually use options across the board. They use it to hedge some of their portfolio. They use it to generate income off some, and then they use it to speculate on some names that they do want to speculate on. So when we talk about options, we've heard about this. There's calls and there's puts. So let's just talk about what a call is. Think of it like calling in a favor. It gives you the right to buy an underline if you are buying that call option. Now, if you're selling that call option, then you're actually selling that right to somebody else. You're basically agreeing. You're basically the store issuing the coupon at this point. You're agreeing to sell somebody, that underline at some future date at a certain price. And if you want to think about what oil companies are doing, oil companies sometimes sell calls on their oil. If oil's trading at $50 a barrel, you just want to lock in that price. You sell calls on your oil and say, look, you come to me third week of next month, and I'm going to sell you 100 barrels of my oil for $50 a barrel. Right now, if you were an oil company that did that, you're probably feeling pretty good because the prevailing price is $30 and you've locked in an agreement to sell it for $30. So think of it like that. Puts work almost as the opposite of a call. So when you think about a put option, that is something you're saying, I'm putting this to you. You're putting these shares to you, and you agree to buy these puts or these shares from me at this price. So here you go. Similarly, you can think of it as you can sell a put and then you're agreeing to buy it. So think of that, maybe if you want to think of it in terms of insurance. Your house, maybe you have that assessed value of, $1 million. I hope everyone on here ends up owning $1 million house someday. You might take out insurance that says, look, if something, unforeseen happens, heaven forbid, and my house gets destroyed, you are going to give me that $1 million. So you're basically buying that put on your house. The seller is the insurance company. They're saying, yeah, you know what, if anything does happen, we're going to give you $1 million for the house, even if, for whatever reason, it's no longer intact. Think of it like that. So here's where we want to think about what's our bias. And that's why I said, no matter what whatever drives you to arrive at this opinion on the stock, I think it's going higher, I think it's going lower. That could be because you're a technical oriented trader or you're a fundamental trader, whatever that is. The options, though, are pretty much going to be what they are. If you maybe want to play a stock going higher, like you see here, I'll leave it to the experts what sort of pattern this is. But you are going to say, look, I think it's going higher, so I should maybe think about buying some call options, because call options increase in value when the underlying price increases. Or if you say, I think the stock's going lower, I'm thinking about shorting some shares. What you could also do is buy puts, because now those puts are going to increase in value as the stock goes lower. So let's just look at this call, and we're going through a very simple example here. So here's our call option, and we have the strike price of $76. So that's sort of the price we are locking in to buy or sell these, depending on what we do. So trader A is actually bullish on this stock XYZ, thinks it's going higher. So we'll enter in and say, I'm going to buy this call option. Similarly, you could have somebody at the same time who has a differing opinion, and this is great. Whenever myself and some of my fellow traders think about, I think this stock's doing this, or here's my opinion on the market, and they say, I think it's the other way. Say, great, now we have a market. Now we have a buyer and we have a seller. So the seller, trader B, is a little bit bearish on the stock XYZ and is saying, oh, you know what, I'll sell the call. So now let's think about this. What happens if the price goes up to $76? So at the expiration of this contract, you can now take that and say, hey, I want my stock for $76. So you would get the stock for 76. Meanwhile, it's trading in the open market at 78. You could almost instantaneously just sell the stock as soon as it comes into your account for $76, and you've made that $2 difference. Now, what happens if this stock is now falling to 74? So now, why would you buy a stock for $76 if it's trading in the open market for 74? So now that coupon is essentially worthless. So what happens in that instance? Well, trader B, who sold that call, they sold it, and this is the premium you paid for the right of buying that call. So trader A will be out the money. They lose 150 because the call is now worthless. But the seller who sold that and got the 150 bucks in their pocket basically keeps that $150. And so that's where this comes into buying and selling of options. You need to think about that premium as that initial cash flow. Trader A paid out that $150 premium, hoping that it would move higher and then they could sell the call for more than they bought it for. Trader B brings that premium in the pocket, and they're hoping that they can actually just keep that premium and never have to sell Trader A that stock for 76 bucks. Because Trader A is looking at either exercising their call, taking that in and saying, hey, I want my stock for 76. But why would Trader A do that if they can just go out and buy it in the open market for $74?
Hey, Sean.
Yes.
Quick question about premium. And I think, so I'll lead with a question, but I think it'll help explain the question we're getting from chat. One is, from where is premium derived, or how is it determined? And then two is, this is straight from chat, is there a relatively easy way to take a look at premium and determine whether it's too much?
We can, and that's actually a great question. I like that everyone's heads are sort of going that way, and that is the concept of premium. And here's the thing. If you have two stocks trading at $100, but their options trade at different prices, why is that? And that's where you get into the concept of premium and what drives that premium. And I'm actually there. I love it when the questions come in like that, because that means they're like 2 slides ahead, which means they're really thinking deeply about this. So in 2 slides, we're actually going to go into what goes into an options premium. And so that's why I want to make sure it's important we understand $76. You can take this and instantly make that $2. I'm going to exercise my option for 76, giving my shares for $76 a share, and I'm almost instantly going to turn around and flip it and sell it in the market for 78 and keep that $2. That's sort of an important anchoring point to think about option premium. So, great question. We're going to get there in a handful of slides here.
Okay, cool.
So puts actually work in a sort of the opposite manner. So now we have the premiums $200. So the buyer bought this, gave $200. The seller took that $200, put it in his pocket. The strike price is now 60 bucks. So if you are holding this this put option, which means you can sell it to someone at that $60 price, if it's trading at 58 in the market, you'd rather sell it for 60 than 58. You get more money. But what if it's trading for 61? You'd rather sell it for 61 than 60. So now you're thinking about that. It's worth more, these puts, if it's actually trading below this strike price. Because now you basically can make $2 just by taking those shares, selling them at $58. So one thing to think about here, I'm sorry, you can take that money and sell it for 60 rather than sell it at 58. The seller would rather sell you those shares or have to buy those shares for 58 rather than 60. So that's where the value comes in there. And that is, look, I want to buy these things as cheap as possible. So what you're doing there is you're saying, look, if I'm going to have to buy these shares from you, I don't want to have to buy them for too much money. So now this is a sort of a good overview slide of long versus short. Seller of the options contract versus buyer of the options contract. So if you are buying that option contract, you have the right. You can choose to exercise that or not. If I go to exercise that contract, the seller is obligated to redeem that contract to me. So what you're saying is, look, I'm coming in, I want to honor this coupon. The store owner who issued that coupon can't just say, you know what, actually, I don't want to do that anymore. Too late. that's out there. So the seller, the store owner, is obligated to fulfill that coupon. If you're holding that coupon, you don't have to go in the store and choose to use it. That's the difference between being long and short. And now thinking about it, just remember it's always flipped. If you're long a call, I think everyone gets that. I'm buying a call option because I think it's going higher. That's bullish. So if you're selling it, that means you think you're going lower. Now, if you are going to go out there and say, look, I'm going to buy this put option, you're basically saying, I think it's going to go lower. So the opposite of that is if you actually sell that put option, you're hoping it goes higher, because you would rather for someone to choose to sell those in the open market than sell them to you. So we're going to use paper money. Don't necessarily need to follow along on the computers, but we're going to go over some of that. And now here's where we get into this option pricing. So there's some things that drive option pricing. And so that's why we said, look, two stocks both trading for $100. Why aren't their options trading the same? So here's two very important things that go in to the pricing of an option. So there's time. An option expiring next week is going to have a lot more time, or a lot less time value than an option expiring next month. Think about it this way. If we say every week, I'm going to assign $1 of time value to that stock. So an option that has 1 week will have $1 of time value. An option that expires in 2 weeks will have $2 of time value priced into that. And so think about it like this. If you are someone who is selling that option and you want it to be out of the money, you're basically sitting there waiting for that option to get to expiration and hope it's worthless. So that way you just keep that money you made selling it. So that's why the value starts to come off as time moves forward. And the other thing, and this is important, especially right now, is implied volatility. I think a lot of people are familiar with the VIX. That is really just the implied volatility or the uncertainty of the future price of the S&P 500. So that when people get more uncertain about what the S&P 500 is going to be doing in the next couple of weeks, months, whatever that might be, that VIX number, the index goes higher. And as it become less uncertain or more sure, we think it's just going to, make this nice gradual move higher, or lower, or just not do much of anything. That VIX comes down. That's why they call VIX the fear index or the uncertainty index. The more uncertain you become about the future price of any underlying, the VIX is the future price of the S&P 500. That implied volatility or uncertainty increases. And so that's why when you think about options, and we'll show this here an example. Say when earnings comes up, you're going to see that implied volatility, that uncertainty really increase because some news comes out and either sales meet or beat, earnings per share meet or beat, and the expectations, and that causes a stock to move, pretty sporadically after that earnings event. So here's what goes into this option premium, and why I said we'll go back to that example of that call that was at $76 and the underlying goes to 78. So the intrinsic value is going to be that $2 difference. But let's say it's not at expiration yet. There's still 2 weeks to go. Now there's going to be some extrinsic value, because you might say, well, it's at 78, but I think it's actually going to go to 79 or 80, can run higher. So you're going to have the $2 that it's already what we call in the money, 76 to 78, this $2. But now there's some time, there's some potential move even higher. So you're going to add that on. So it'll be anchored at that intrinsic value if it's in the money to $2, but it's going to be trading for more than $2 because there's going to be some intrinsic value there. And so that's where we get into this concept of premium. And so in the money, we say the option has intrinsic value. The stock's trading at 78. My strike price at the call is 76. There's $2. That is $2 that if I wanted to, I could say, hey, you know what, give me my shares right now. I'm going to sell them for 78. There's $2. So that's going to, at the very least, going to be that $2 value. But now, what about on the put side? Hey, you know what? The shares are trading at $56. I just want to sell them for 58 right now. There's that $2 of intrinsic value on the put side. At the money, is something that we really care about because you can derive a lot from these options that trade very close to the money. And that's just really the strikes that are very near. So it's not a hard set, the very strike that's trading there. Sometimes it's a strike, if it's trading at $100, the at the money might be the 101, it might be the 99. You can sort of use that, but it's just those options where the strike price is very close to the actual price that option's trading at in the market. And then out of the money would be those options really have no intrinsic value. The stock's trading at 74. Why would you say, hey, you know what, I'll actually pay 76 for it? No, you'd rather go out and pay 74, but there's still time left. So you can say, but the stock could actually drift higher over the next 2-3 weeks, whatever my expiration date is. So there's going to be some extrinsic value in those options, just because even though it's out of the money now, I really would rather buy in the open market. You don't know what things are going to be like 2 or 3 weeks down the road. And so that's that uncertainty or that extrinsic value that we talked about. So we get into how options trades can end. Before expiration, you can sell those back and close them. So you don't have to go out and necessarily exercise and go through the whole, I'm going to give you my shares, I'm just going to sell them right away. You can just sell the option contract because it's that price, and it works very similar to stock. You bought the options for $1.50. Now they're trading at $2. So you just turn around and say, here's my options, my option contract. Just give me the $2. I don't want to have to go through, taking the shares and selling them out in the open market. The other thing you can do is roll it and say, you know what, I'm actually going to, sell this out, but then buy one that expires a couple weeks. And then we went over the concept of exercising. If they're in the money, hey, just give me the shares. And so if you're looking at these, if they're out of the money, if you have a 76 strike call and the stock's trading at 75, you don't have to do anything. It's just going to, fall out worthless. If it's in the money, then you have to decide, do you want to take the shares or roll it, or just let it exercise? Those are sort of things you can do, or you can sell it to close. Similarly, on the put side, you have the exact, same. If you're selling those, on put sides, it's going to be the exact same thing, except we're going to have to reverse that. I'm actually going to choose the exercise, and I'm going to, put those, just give me the shares, take them out of my account, and I'm going to take the cash in. You can just sell the put, which will be worth money, or you can roll that. Sellers are going to do this exact same thing. If I'm short that call, if I sold that call and it's showing up as -1 quantity of that call in my account, I can buy it to close it out. Once again, I can roll it. The risk is I really don't have any say whether or not that gets assigned. And so some sellers will say, you know what, I'm actually just going to close this out before I get assigned on it, because it doesn't matter if you want to or not. If you are selling that option and it's in the money, or for whatever reason, the buyer exercises, you're just going to have to almost do that on demand. And so here's where it gets into a little bit of a flow chart of what happens at expiration. Are you in the money? Yes. So now, is the option expired? You can get assigned. No. If it's not expiration, then you can hold that open, but it could still happen at any given time. If it's not out of the money, you generally aren't going to get assigned, but you never know when that holder is going to come out and say, you know what, hey, I want to exercise this, sell me my shares right now. So it's something that's always out there. There's a good flow chart that just goes through, okay, first of all, ask yourself, is it in the money? Yes. Is it expired? Yes. Then you're probably going to be assigned if it's in the money. If it's not expired, unlikely that someone would, but it's something to be aware of. It can happen at any time. Exercise options, same thing. Is it in the money? Yes. Is the option expired? So if you don't do anything and it's in the money, it'll automatically be exercised. If it's not at expiration, say it's got 2 weeks to go, you could still just say, hey, you know what, just give me my shares. Here's $76, give me my shares right now for whatever reason. If they're out of the money, you could still do it, but then we talked about this. Why would you buy stock for 76 if you could just go buy it in the open market for 74? So here's just sort of, a recap. We went over the basics. We talked about the difference between calls and puts. Buying and selling can sort of change the characteristics of that trade. and then how the various ways that we can actually see that trade end. So now what I'm going to do is I'm going to switch over, and we're actually going to go into the platform, and I'm going to show you where some of this stuff shows up and how you can see that on your screen. And we're also, like I said, I want this to be platform agnostic. So generally, these are the things that all these platforms do have in common in one way, shape, or form. All right, so here is the Thinkorswim platform. Just so you know, this is a demo account, so I don't actually have $16 million. I wish I did. But I was actually, like I said, I was following along with some of what we were hearing from Neil and Luke earlier. I was bringing up Okta. But here's where you come in and you put in your ticker, and all platforms have a place where you can put in your symbol, and you can say Apple if you want to, or we can stick with Luke's example and say Grubhub. So now when you come in here, you see the price. Right now it's $57. You can see what it did today. You can see where there's offers to buy and sell, the volume, all that good stuff. If it has a yield, it'll show up there. But what we're worried about is this option chain right down here. And so this is where we talk about expirations. So there's options that expire 29th, today. There's 0 days left on those. There's options that expire in June. And those have 5 or 7 days left, the 5th of June. There's some that expire the 12th, 14, but you sort of get the idea. Here's the actual date where those, think of it, that coupon expires. And then just to make it clear, we were letting you know how many days left there are. And now we look at what's going on here, and we'll say with Grubhub, over here's this implied volatility number. And you notice they all have sort of different numbers, and that just sort of pinpoints where there's going to be more or less uncertainty. So Grubhub may have earnings next week, because if you look at it, why would there be this 90% number here and then it's lower in all the other ones? This is the option saying, hey, there's something coming up next week and it's an uncertain event. It's probably going to be that earnings release where Grubhub could bounce either way. They're going to come out, have great numbers, stock's going to skyrocket, or they're going to come out, they're going to miss expectations, and stock's going to completely fall through the roof. So that's something to think about when you're looking at this, is what's out there. This is the option market saying, hey, something's coming out next week, and everyone is buying up those contracts. And so the contracts sort of respond to, like anything else, more buyers than sellers, then you're going to see the price increase. More sellers and buyers, that pushes the price down. Everyone is buying up these options because they think it's either going to shoot higher and they want to own that, or it's going to sell off, move lower. So that's what drives this number. And so if you want to think about it, we can look at, say, some a biotech, and that is Pfizer's trading for $37 a share. Look at this number, 23 cents. Let's go over and just find a good biotech that we can look at, and we can show why, why does Pfizer, imagine if you look at Vertex, and we'll do Gilead. So Pfizer, look at this number, implied vol, 23%. Pfizer's that, that they've been around for forever. They've got a pipeline drugs, not expecting too many shocks out of that. But now if we look at Gilead, you see it's a little bit higher. If you look at Vertex, also going to be higher, 60%. So these are some of the things to think about when you're looking at these options. And that is, the more riskier and certain those companies are, the options market's pretty efficient at reflecting those in their prices. And it's just a good way to pinpoint that uncertainty. And one thing I was going to look at, Dick's Sporting Good, 30% this week, but look at that, 96% next week. Dick's Sporting Goods has earnings next week. And if you look at this number in parentheses, it's kind of translating this into, okay, what does that really mean for the price of the stock? What it's saying is, in the next 7 days, the option market is pricing in Dick's Sporting Goods to move up or down. That's why you see that plus or minus by, we'll call that $4. So that's saying, look, post earnings, we think Dick's is either going to break higher by $4 or break lower. It might not do anything. It's giving you that range that they expect it to trade in after earnings. And it's not at all unusual to see some of these companies after earnings move sort of in that exact number one way or another. So now that we've come in here and we're talking about options pricing, here's where it is, just like on the stock, the bid and ask price. You buy at the ask, you sell at the bid. Same thing once again, the asking price for the option. You can buy this option for 175 or you can sell it for 150. You can come over here and change these columns, and I think that this is actually a good point to make here. I'm going to put up, we'll put this up. So here is implied volatility, that number like we were talking about, and we can actually look at probabilities too. We won't get into that. That's a little bit more of an advanced topic. I'm going to put the mark price here. So that's sort of the midpoint. $1.62 is what we'll call it. Now let's put in option theoreticals. We'll put up intrinsic and our extrinsic value. And so notice the option prices are usually going to sum up to this midpoint price. Here, if you take the extrinsic value, add the intrinsic, you get to that option price. And so our point about looking at time to expiration and implied volatility are going to change up this number. So let's just look at this 36 call option that expires next week. There's really no extrinsic value trading in that call. It's all intrinsic for now. But now if we go out here, oops, let's see here. Now, if you go out here, you actually see where this extrinsic value increases. I'm sorry, I was looking at the wrong column. So you see the intrinsic value, the amount that's in the money, there's none in there. There's $1.62 of extrinsic value. If you just go out, say 49 days, this extrinsic value is higher. And so that reflects that time that's left in there.
So Sean, we're at about 5 minutes left. I know, I can tell that you could probably do this for another hour, couldn't you?
I could, I have, and I could.
So I just want to make sure that we answer a couple questions from the audience.
Absolutely.
I think we've done a great job of covering the absolute fundamentals, and that's what I love about TD's education. Is you're answering all the questions that when you hear people talking about options, it's almost like they assume you already know a lot of this stuff. And you went through a lot of those things, and it's really great to have that here during the beginner portion of today. Now there are some specific questions, and some of them relate to some things that you mentioned as you were going. One is, what does roll to the next series mean when you say that?
Okay, yeah, great question. So I'm gonna throw an option position in here. I'll start a market order. So if I come over to my position statement and bring up Dick's Sporting Goods. So here's, I have one option in here. Now, if I want to roll, what I'm essentially doing is, see how there's 7 days left to expiration on this. And I say, you know what, actually, I want to own this for the next month. What you're doing is saying, look, I'm going to sell this. So we're going to do create rolling order, and you'll see it come up in the order entry down here. So what I'm doing is I'm selling this option I have right now, and I'm simultaneously buying another one at that same strike. So that's the concept of rolling. And there's a lot of different reasons you roll, but when someone says, hey, I'm going to roll this trade, it can be, hey, you know what, I think this thing has a little bit more to run. I'm not going to close it out now. I'm just going to roll it and give it more time in the trade. It's really what you're doing to rolling is you're extending the duration of your trade.
Okay. All right. So I think we're just about at time for those sorts of questions. Everyone, Sean's not going anywhere. The great thing is he is an educator. He is with TD. They have a lot of educational resources. Sean, for all the folks that still have a lot of questions about what you're talking about, where can they get more answers?
If you have the platform, this is how important education is to us. We actually have an education section in here. But if you don't have the platform, you can go to tdameritrade.com, and we have an education section there. So when they're done watching you guys for the rest of the day, stick with Benzinga, they're our friends. But when you're done, then you can actually come to tdameritrade.com, and we have an education section, and it actually sits on an AI engine, so it kind of adapts to your level of where you're at, and sort of figures out where you want to go. But we have it for stocks, options, bonds, everything you can think of. We try and cover it so you're a good holistic investor, trader, market participant.
Yep. Yeah, absolutely. I mean, really cool technology behind that. And, you know, TD Ameritrade has been a friend of Benzinga's for a very long time. And I can say that throughout that relationship, education has always been a theme. So I know that you guys are always trying to develop new ways to educate the market and get folks to feel confident and get out there and start trading and investing. So Sean, during this whole presentation, we started out with the absolute fundamentals. Then you showed us some really cool tools within the TD Ameritrade platform, Thinkorswim, that you can use for locating opportunities and then actually executing. If you could boil things down to a takeaway at the beginner level, what are 1 to 3 things that you really want people to walk away from this knowing?
I think one is to be comfortable in that if I go out there and I want to buy, say, an option, be it a call or a put, just understanding how that is, and just start out as simple as that. Next time you think a stock's going to go higher, you get some bullish signal, maybe go into we have paper trading, so it's not even real money that you can learn on. And instead of maybe buying 100 shares, just buy a call option alongside that and see how that plays out. If you want to short a stock, maybe just go into your paper money account and just buy a put option and see how that plays out as well. And that's some of the things is you can learn without actually having to learn with real money. We'd rather you learn with fake money, make those mistakes with fake money. But that's one thing to do. Come into the platform. We actually just launched a web-based version of Thinkorswim, so you don't even have to download it anymore. It's available online, and just play around with buying a call, buying a put, and seeing how that stock moving around affects those prices. And that'll get you going down the path of just sort of getting your foot in the door, going down the path of learning more and more and more, because it does build. It's a lot. Feels like drinking out of a fire hose at times, but you just have to get in there and participate.
Yep. So learning by doing is definitely crucial here. I can attest to that. All right, Sean, thank you so much for spending so much time with us. I'm sorry that we don't have more time allotted for you to cover this stuff. I can tell that there's so much more that folks could get out of this talk. So, thanks for being here. Can we have you back next time?
I'm always I have a lot of time in my hands these days, so definitely always happy to come back on and take a next step or expound on some of the stuff. Always happy to come back on. Love coming on Benzinga.
Wonderful, Sean. All right, man. Thanks for being here and have a great weekend.
Thank you. You the same.
All right, guys, that was an intro to options, absolute fundamentals there. I love that stuff. I in my own experience, folks just throw jargon around. You don't know what the hell they're talking about. Sean from TD Ameritrade just broke down the absolute fundamentals of options. But you guys can stay tuned. We're going to get into some more advanced options topics when we get into the intermediate session a little bit later around 2:30 p.m. Eastern time. So make sure that you stick around. If you liked what you've seen so far, or if you got to check out and you're not going to be able to see everything else today live, make sure that you do upgrade your access and purchase the complete video masterclass. You can get to that by scrolling up to the top of your Hey Summit, our event platforms page, and grab that. Also, right about now, you've got 4 minutes to get into the deep dive where Nick Shaheen, who was a big hit at our last conference, will be doing a deep dive into options trading. No dumb questions, everything from absolute beginner to absolutely advanced credit spreads, iron condors, anything you want to ask him about. The Greeks too. A lot of times he'll tell you you don't really need the Greeks, but he'll answer all your questions about them. So if you're interested in that, do purchase the breakout session. When you do that, you'll get a recording of that along with a recording of everything else from the main track. So you won't miss a single thing. I highly recommend doing it. It's something you'll refer back to for years to come. So just scroll up to the top of your page and grab that. Next up, Rolf Schlattman from Trade. I was calling it the wrong thing earlier, but we're from Quantum Trade Solutions. He's the co-founder and managing director there. We're going to talk about strategy for entering and exiting trades. Rolf, can you hear me?
Yes. Hey, Neil. How are you?
I'm doing wonderful. How are you doing today, Rolf?
Good as well. I'm just trying to get my webcam started, but I'm fine.
Well, that's great to hear. It looks like it's starting and then stopping.
Yeah, it's giving me some error message that it can't start.
Well, while you're doing that.
Oh, 1 second.
I'm going to take a look at the chat and see if there's any questions that we. Yeah, chat.
Okay.
There are a lot of questions. Really quick. A lot of questions around options. We'll make sure that we get those answered around 2:30 p.m. If you stick around 2:30 p.m. Eastern time, we can jump back into options and answer those more advanced topics. Rolf, I saw you for a second. Are you working?
Yeah, I'm getting there.
There we go. Nice to see you, man. How are you?
Good. How are you?
Doing wonderful. So what I'd like to do to start us off is, Rolf, if you could please, multiple angles, nice. If you could please give folks an idea of who you are and what you do every day,
Yes.
and what they can expect to learn from you during your session.
Yeah. So maybe some people know me from the work with Trade Society, where we do regular education. We also have a trading journal software, which is called EdgeWonk. And I've been trading myself. So I got into stocks when I was around 16. That was just around the .com boom time. So everybody was into stocks, and I got my first introduction back then, and I was immediately hooked. And then when I finished university, when I finished high school, I went into university, got my majors in finance, and I started trading, I think, just before university. So once I was about to graduate from university, I had to make a call. Do I go into the corporate world or do I do something different? So I worked all the way through university, had a little bit of savings, but not enough money to support myself in Germany because just of the high living costs and everything. So I sold everything that I owned and bought a one-way ticket to Vietnam. And I thought my plan was to reduce my living costs and put all the time and all the money into my trading to just work on that. And I was in my mid-20s back then, so there was not much to lose. So I thought, okay, I give it a try. I always wanted to work for myself, and I've been doing that, yeah, for the past 10 years, 9 years. I'm currently back in Germany, waiting for the airports to open back up so I can go back to Thailand, where I'm settling. I trade my own money right now, and we are currently in the process of setting up a managed fund in Hong Kong as well. So
Wow.
I trade like 90% is Forex, but I do trade commodities and indices as well.
Mm-hmm. Yeah, that's first off, very fascinating story. You've been all over the place. Hong Kong, when can we look forward to that opening up?
We've been preparing that for the past 12 months, but obviously there's a lot of legal stuff involved.
Yeah.
But we're hoping to get it up early 2021. So should be not too well, depending on how long this all gonna take. But yeah, that's the plan right now.
All right, very cool. All right, so we're talking entering and exiting trades.
Yeah, I prepared something. Let me pull it up. It's pretty much basically how I trade. So let me just share my screen. Awesome. I think you can see it.
Yep.
Perfect. All right. So yeah, just a few words about myself. I'm like short-term trading, short-term swing trading. I used to be on the higher time frames, but I moved to the lower time frames, especially ever since Corona started. But this really, because it really changed up the whole Forex price action. It used to be quite nice to trade the higher time frames. It hasn't been quite nice to trade the higher time frames for a few weeks now. So I moved back to the lower time frames where I started, when I started trading. I mostly trade price action, momentum. I don't look at news at all. Well, almost not, but I almost never look at news. So that's I'm only price action, momentum based. Very, very heavy focus on technical analysis. And for me, I call myself a breakout trader. And I think that being able to master breakouts, is my screen still sharing? It says it's paused.
Yep. It's still sharing, but we're still on the Who Am I slide.
Oh, okay. One sec. Then it should not be. It says my screen sharing is paused. Okay, I guess this will help.
It moved there. We're looking at breakouts or everything.
All right, perfect. Yeah, I think we should be good. Thanks. So breakout trading is my real focus, and it has been morphed over the years. And I think breakout trading is really, really valuable for every trader, regardless of what type you trade, or what strategy you trade, what markets you trade, what time horizon, because we all know, or the saying goes, the market can do three things. It can go up, it can go down, and it can go sideways. And there has been a lot of study that the market does spend a lot of time ranging. And I focused very early on those ranges, because those ranges, first of all, it's where the majority of amateur traders lose the money, because they just can't sit on their hands. They always have to trade. So they get engaged in those or involved in those ranges. But at the same time, those ranges are the origin. They are the catalyst for big trends. So whenever I look at the chart, I see sideways ranges and as connectors between different trending phases. So in this example, it can be the sideways phase can be the connection between a downtrend and an uptrend. So it completely connects to different trends, but it can also, the consolidation, the sideways phase can also connect trending phases into the same direction. So in this example, it would then be a connection in a trend continuation environment. So breakout trading is much, much more than most people realize. I think it is, and I've seen it can be a big help for traders that trade any other market strategy, because breakouts are really at the core of the big moves, and it really pays off to know, first of all, what is a high probability breakout scenario? When don't you trade a range? What are bad ranges? When do you better stay out? When is the likelihood highest for a successful breakout? When do you expect fake outs, and how do you deal with all of that things? So that is the plan that I have prepared for today. And we're going to look at different breakout scenarios, different markets, situations, and then provide you tips on what I pretty much teach my students as well, and that's how I trade. And when we look at charts, there can be obviously so many different variations. No two charts will look the same. So it really pays off to know different types of ranges. And we can distinguish two broad categories: a pattern, a sideways phase where you have a horizontal level of support and resistance. In this case, we have a horizontal level of support, very well defined. You can see after a strong uptrend, the market first it did make still higher highs here at the top of this market. And then afterwards, this marks the highest point. And whenever you see that a market fails to make higher high points in a trending market, obviously at this point, we don't know what's going to happen afterwards, but we already know that the market is not able to make higher highs. At the same time, the market is making equal lows. So probably many of you have heard already about the Dow theory, which has been tested and has been proven over decades and decades. And the Dow theory says that a market is intact as long, or a trend is intact as long as in an uptrend, the market keeps making higher highs and higher lows. So we can, or what I look for are those broken structures. When is a market not making higher highs and higher lows? And this is not automatically a reason for me to get into a trade, but it's a first reason when I start stalking setups, because I want to look for opportunities that happen afterwards. Very, very often after a trending structure has been broken, so the market is not able to make a higher high anymore here at the top, but it's also not making a lower low. I call those, well, those are those transitioning, those sideways phases where it really, really pays off to know how to trade them. Very often it leads to a continuation. Then you need to get ready in case there is a pattern. We will take a look at a few later on. But in this case, when you see that the market is really showing you signs of exhaustion in this context are bullish exhaustion, so the market is not able to come close to the previous high at all, and it's making lower highs, then it's really time to to watch the market. And what I do is then I have different ways of getting into such a trade. The very, very simple one is a regular breakout. So as soon as you have defined a well-respected support area, and one of the important things is that the support area needs to be really valid in the market. So when you look at a horizontal area, you want to have at least 2 touch points that line up. When you talk about trend lines, you want to have at least 3 touch points, but for a horizontal level, 2 touch points. And whenever you have found such a horizontal level, I will just put my price alert down there. I don't use limit orders because there are a lot of fake outs happening around those areas, as we can even see here in this small context. There are a lot of spikes in the level, and I wait for a full breakout. There are obviously different quality factors. How strong is the breakout? Do you even have, like in this example, you have an engulfing bearish candle, so a very strong momentum candle. And then you can even trade it directly on this time frame on the candle close, or you can go to a lower time frame and time the entry. This is how I used to trade it directly on the specific time frame. So if this is the 4 hour, you have the breakout on the 4 hour, I would directly trade it on the 4 hour on the breakout. If all the other factors for this market and for this pattern are present, so you have a very good and long uptrend, which is important. You don't want to trade a reversal after just a very short trend. We will come back to that in a bit when we talk about the odd enhancers. But obviously, there are some quality components that a pattern needs to fulfill. And then if you have the breakout, you get in. Interestingly, what I have observed especially over the past 3.5 years, is that the market breakouts used to work perfectly back then. You could trade breakouts blindly if you have a big level, if you have all the other criteria. Breakouts would really, really work exceptionally well. But since a few years, the market characteristic and the way price action is behaving has changed. So you will very, very often see those pullbacks. And obviously there could be hundreds or dozens of reasons. Maybe pullback trading has become very, very popular, and it's very easy to see how do people approach their pullbacks. They get into the trade here with a short position. When the price moves in their favor, they move their stop loss to break even, which is right here, and then that is where you see a lot of pullbacks go. So over the past 2 years, I have added not only breakouts but also pullbacks to my repertoire, because they very, very nicely complement each other. And once, let's say this is the 4 hour, and after you have had the breakout, what I do is I go to the 1 hour time frame, and I wait for the market to get back to this level, give me some type of rejection pattern, which looks like in this case we have, and then you can trade it directly. We'll come back to pullbacks in a later bit as well. But yeah, there are obviously many different variations of how sideways phases can look like, and that's really the thing that I focus on the most. I look at a trending market. There must be a very, very good and very obvious trend, and then the market enters a sideways phase. It can be, like in this case, like in the first one as well, it's defined by horizontal levels, very clear horizontal levels. In this case, the market was in a downtrend. The downtrend was over for the first time, or at least it paused here. Then now you have to ask yourself, what is happening here? Are the sellers really giving up? Is there just a temporary pause? And are the bulls completely gonna take over? It looks like a little bit in here that you have a potential bullish breakout, and it does happen sometimes. You're looking at a trend, then you see that the market gives you here maybe a double bottom, a triple bottom. It breaks out into a new high. Maybe you get into a long, and then the pattern fails, and that's totally fine. Nothing will work 100% of the time. You can get out of your fake breakout trade. There are some signs here that the market is really not pulling away after the breakout. So there are different ways how you can manage your losses, obviously, and then afterwards you just follow the price action. What do you see? Whereas you expected maybe a bullish breakout after this long candle here, the market made a double top. So although this huge bullish candle looks really, really powerful and very strong, the market was not able to pull above the previous high. So that's a very, very important tell. Not only did the first breakout not really succeed, now the bulls have even problems making a higher high. So that doesn't look very, very bullish, obviously. At the same time, the market then shows you a very strong bearish sequence. You have two strong bearish candles in here. And when you look through this sideways phase, you can see that there are, at no point are there two consecutive bearish candles. The last time we had strong consecutive bearish candles was in here when the downtrend was still intact. So it's another small tell, but it's another important piece to the puzzle. Then we have our third puzzle here. The market traded back into the support area, which is held previously. It does hold now, but you can see we have a significantly higher low here after this huge candle. So after this huge candle, this would be the perfect entry here. You have significantly lower highs, which tells you already that the bulls are not able to push the price high. The sellers immediately came in, and you have the breakout with a huge engulfing candle, a very, very strong candle by itself. And in the whole context, it's really like a puzzle that you slowly start putting together. And you can see we have not an immediate rundown, but the next candle again pushes back into the breakout area, gives you a pullback, and then it follows through. So it's like a puzzle, like a story that price it's slowly unfolding in front of you that you just have to follow up then.
So Rolf, if you're looking at that as an entry point, could you tell folks how you might formulate your price point for a stop loss?
Yeah, sure. So when it comes to stops, the stop loss has a much bigger impact on a trading strategy that most people realize. Moritz, my partner, always says that a wide stop loss reduces the need for accuracy. And this means that the wider your stop loss is away from your entry point, the trade or the entry doesn't have to be as precise. So you give the price more room to develop. However, what this means also is that usually your reward to risk ratio will go down a little bit when you have a very wide stop loss. So there's a trade-off. You may have a higher win rate, but also your reward to risk ratio will go down. So the general stop loss idea that I use is I always want to protect my stop loss behind some price action barrier. So it can be a support resistance level. It could be a moving average. I use the 50 moving average in my trading from time to time. Mm-hmm. But at least I want to have at least one barrier of protection between the entry price and the stop loss. So if you take the entry here, you want to at least put your stop loss above the last support area, but you don't want to put it right at the level because there's a high likelihood that it will get tested. Mm-hmm. So for very conservative traders, they would put the stop loss above the breakout candle. A little bit more aggressive traders, they might use a stop loss that is like halfway. It's not right at the level, but it's not all the way here at the top. So this allows you to style your trade or to style your trade depending on your level of aggressiveness. We have some traders who like to play it very tight. They have a very tight stop loss. They have a very close target, so they're in and out of the trades much quicker. But obviously, when volatility sometimes picks up, they are immediately out of the trade. So it's a little bit of a trade-off. I personally like to play it a little bit more aggressive, so I have a tighter stop loss. When you have a very well-defined support level, my stop loss will just go above not completely above the last candle that broke through it, but somewhere halfway. And the stop loss is a little bit more subjective because obviously it can affect the win rate directly. Mm-hmm. So there's always this link. But generally, you want to have some protection between the price action and the stop loss, especially if you trade breakouts, because pullbacks are just so common in the markets.
So if you're looking at this one right here, based on your own style, Rolf, where would you place that?
So my entry would be on the close of the breakout candle. My stop loss would go right above here. So it's in the middle between the high of the candle and the low here. So roughly here. And we would have the level of support area of protection because our trade idea would be completely invalidated if we see a big push against or through the level.
So I have a question here, Rolf. What do you think about trading the reversal strategy using the daily or weekly pivot as support or resistance on stocks?
That's so I do well. One of my best friends, he's Moritz, and he's also with me doing Tradeciety, and he trades stocks with a very similar strategy using the not the weekly, I think, but the daily pivot as support. So he's looking for stocks that that bounce off the pivot, and then he goes down to a lower time frame to pinpoint the entry. But yeah, pivot points are very, very powerful. You will often see them bouncing around somewhere at those turning points. You can definitely do that. Fibonacci's work really well for that as well. Long-term moving averages can work as well. So yeah, you will be able to do this reversal approach using multiple confluence tools.
Great. Okay, those are all the questions for now.
All right, sure. Continue. Obviously, patterns come in many, many different forms and shapes and whatnot. So you have a downtrend. The downtrend is intact. It makes lower lows and lower highs all the way until probably, well, you can see here we start making higher lows. So that is roughly, here you can see we have an area of equal highs, which would probably also be quite interesting because it looks like when you blur out everything on the right, it looks like an inverse head and shoulder roughly here, but you never have a breakout to the upside. So this will never have would have never been triggered. Then you have a continuation. You see that the market continues on a way down, lower highs and lower lows until roughly at this point is where you see the market not being able to push lower here. When this is your last swing low, you'll see the market starts making higher lows and higher highs. There's no pattern to get into a bullish trade, I think, in here. We never have multiple support levels or resistance levels. But then at this point here, this is where the market establishes a pattern, and that's when I would start tracking a market. Whenever you have a trend slowing down, and whenever then you are able to describe this sideways phase using horizontal or diagonal tools. And that's where I'm always kind of jealous of stock traders, because as stock traders you have like thousands and thousands of stocks that you can scan every day. You can be very, very selective with your approach, whereas in Forex, well, the good tradable Forex pairs, you may have maybe 40, and they are super correlated as well. So as a stock trader, I've seen some people take this approach, use it on stocks, and they have very, very clean and technical levels, which is great. But in Forex, sometimes we don't have the perfect ones. But this is something that I would look for. You have a market that goes in a downtrend. It fails to move lower, but then it also within this range, it fails to really break higher. So it's trapped in the sideways consolidation. Obviously, if it breaks out to the upside, I would be interested in trading this as a wedge or a triangle breakout or whatever you want to call this, because it already shows you that the market is making higher highs. So that would be a nice piece to the puzzle, higher lows in this case. So it's already kind of showing that the market is not able to push lower as easily, and the buyers step in earlier to drive the price higher. But in this case, it didn't happen. The highs holds very nicely, and then we have a very strong breakout candle here to the downside. And although this looks like just a small piece to the puzzle, when you look at the actual candle here, whenever you look through the range, you can see the last time we really did see such a strong bearish candle was when the price action ended the first trending phase. And we've seen it in the past as well. Those are little things, but when you have significant candles or a significant change in the candle size and the candle color, in the candle ratio, that's really where things get interesting. And that's something that you really should be paying attention to. It shows you here, this candle, it completely engulfs the past, I don't know, 3, 4, 5 candles. And then you have a well-defined trend line with at least, if you draw it nicely, you have 1, 2, 3 touch points. So 3 touch points on a trend line is important. You can always connect any 2 random points with a trend line. So on a trend line, you need at least 3 touch points. On a support horizontal level, you need 2. And then you have your breakout. In this case, you have your entry on the breakout candle. Conservative traders would put the stop loss above the breakout candle, which gives you a little bit more room for error. I would put my stop loss more aggressive in the center of the range, so not right at the trend line. Trend lines get retested very, very often as well, but my stop loss would go halfway in the between this, so not at the level, but not all the way up to top.
And a quick point of clarification, in case anyone in chat is wondering. So we are looking at Forex charts, but the principles of these patterns and the behavior of price patterns and trends are applicable to U.S. equities or to stocks in general. So these are, I mean, that's the phenomenon of chart behavior. So these things apply to both. I just want to make sure that folks, you're not going to find ticker GB, PN, ZD.
No, that's true. Yeah.
Forex pair.
I did have one of those this was soybeans, for example. It doesn't really matter. You will find, if you know or if you've read the classics from like Edward and McGee, they have exactly the same patterns. The books have been written like decades ago. It's classic charting analysis, and it's looking beyond just the regular patterns. It's trying to understand how do the buyers and the sellers interact, how does momentum play out, and that's universal across all markets.
And what were what were those books again, real quick, just in case any of our audience wants to read those?
I don't know the correct. It's so Edward and McGee, they wrote like the technical analysis Bible. I think it's called, I think that should be the one. Technical analysis of stock trends. They have a few, I think, Edward and McGee. Some of them might be harder to find because but they're really fascinating. And you can see that those principles, they haven't really changed since decades. And I trade indices with this approach. My partner trades stocks. We have other students who trade it directly on various stock exchanges. We have it from Sweden all the way to the US and Australia. So the principles really apply to all markets. So this is an approach that, so I used to be, when I started out, I was only trading those types of reversals. I have a trend, the trend ends, and then I look for new trends. Over time, I added continuations to my repertoire, and continuations are really powerful. I think in stock trading specifically, stocks tend to trend much more than Forex does. Forex is known as a mean reverting market, so it more fluctuates around the mean, whereas stocks over the long term tend to trend more. So continuations are really the way to go with stocks. And whenever you can identify a trend first, then you look for a consolidation, and you really need to make sure that there are going to be tons and tons and tons of consolidations on your charts, but you really want to make sure that you don't trade the majority of sideways phases. You only trade the ones that you can really nicely define and describe by using support and resistance, for example, but also there's a little add-on pattern. Some people refer to it as a breakout buildup. I used to call it the lower bounds, whatever. And whenever you have a swing point that is very well defined in a trend, there's very often this last breakout buildup before the successful breakout. The market is not able to pull away from a level. And it really is sticking to the level. So you can see, whereas previously the price traded into this level, it sold off. It traded into this level, it did sell off again. Not as strong as the last time, but still quite strong. And then you can see the market moves back into the level. First of all, it moves back with a very strong bullish candle. And then here, this time, it's not able to pull away at all from the level. That does tell us quite a bit as well.
So
The
which candle do you see that's telling you that right away, so that you could recognize what's happening there?
So you just want to see how does the price trade into such a level that has already been established.
Mm-hmm.
And you can see here those 3 candles move into the level,
Mm-hmm.
don't break it, and then you can see we just have a very tiny pushback here, this one bearish candle. Whereas previously you have always seen quite a strong selling reaction at this price level here as well. Multiple candles over hours and hours move away from the level. Whereas here, pre-breakout, the market is not able to pull away at all from the level. You have a small rejection, and then you have your strong breakout candle. So all of those things put together are the breakout buildup, which you will see quite a bit. And then the trend continues. Obviously, you have new areas and highs of lows are forming, and sometimes those areas won't be as clear, so sometimes you just won't be able to trade them. But you will see this behavior quite a bit across all the time frames. The market moves back into a previous area of resistance here, where this trending wave came to an end. It does not pull away at all. You have some rejections. Very often, what we do is we use some Fibonacci retracements. So, for example, you can put your Fibonacci tool from this point to the high point, and those retracements they stop on a 38 or a 50 Fibonacci retracement, and then you can trade them as the pullback. So those Fibonacci retracements or those Fibonaccis can help us to determine is the retracement too deep? Is it stopping at a Fibonacci level in the first place to help us gain a little bit more confidence in our analysis? And whenever you see that the market is not really able to pull away from a very important price level in the context of an already ongoing trend, that does tell you a lot. And you can see we already did make some higher lows here going into this level. Although we had a pretty severe bearish reaction, the market resumed to making higher highs and higher lows until it reached the previous top, pulled back a little bit, but not really a lot. And then we had the breakout. On the lower time frames, you probably have a breakout and retest pattern, but breakouts are really the way to start for new traders. They are less subjective compared to pullbacks, because pullbacks can be a little bit trickier. We will get to that as well, but generally breakout trading is usually much simpler for newer traders.
Really quick, can you talk about your chart time frames? Are there any big differences between when you're looking at Forex and looking at stocks in terms of setting your time frames and tracking these patterns?
So I used to trade the daily time frame quite a bit. As I said in the beginning, Corona has changed the Forex price action completely. So the higher time frames don't have as nice trends anymore. So ever since I moved down to all the way to the 15-minute time frame, but our stock traders generally use the higher time frames, the daily, the 12-hour or the 4-hour. They seem to work very well. Those are the time frames that I traded for years as well. So yeah, for stocks, the daily time frame seems to have a high significance, and that's when you see a good breakout on a daily stock. That's usually very high probability setup as well.
Mm-hmm.
All right. So as I said, Forex is more of a mean reverting market. So that's obviously a difference to the stocks, where stocks tend to trend more. But especially in that case, it makes a lot of sense to look at such a breakout approach, because when you hit a stock and a good breakout, in stock trading, you might be able to hold this and ride this for quite a while. Whereas in Forex, your holding time and the profit potential, the reward to risk ratio is usually much lower compared to stocks. So that's one advantage that you have. So in Forex, I call this the rubber band. When you stretch a trend, or when you have a very long trend, the likelihood that it will snap back it's much higher. Whereas this is not really the case, or may not be the case for stocks. in stocks, you are usually better off having trend continuation breakouts. So you look for an existing trend, and then you look for pauses within the trend or pullbacks, and then you can apply this breakout approach. Works really well. And obviously, when it comes to trend or trade selection, what I do is that I usually have a checklist with all the points that I go through to help me make sure that the trades fit the general criteria of the system and all the rules are there. By the way, that's one of my favorite trading books is from Marty Schwartz, Pitbull Champion Trader, and that's I read it the first time in there. He's in the market wizard, and probably many of you will have heard about him. And he said that even after 30 years, 40 years of trading, he still uses a physical checklist. So I think that's something that is very overlooked in modern trading. People just want to trade, but they don't really take the time out to make sure that what they're trading is actually what they should be trading. So just having a very, very basic checklist will often help you with trade selection. So this is not really applicable to stocks, but what you generally want to have is you want to have a nice technical chart. So I am a technical trader. I use technical analysis. I use price action analysis. I use momentum analysis, and I want to make sure that I only use charts that adhere to those principles. So very often you will find a market, for example, and you try to put on a support resistance level, but it always blows through the levels. It doesn't care about the levels. And there are certain Forex pairs at certain times or other markets where those horizontal levels or technicals are just generally not accepted or respected. And you want to stay away from the market. Another factor is you don't want to trade a market that is currently trapped in a tight consolidation. Right now in Forex, there are plenty of pairs on the higher time frames where the price action is stuck in a range with high volatility but no trends. And obviously, you need to make sure that the pairs that you watch, the pairs that you follow, they adhere to principles of technical analysis. So when you do your own watch list process, for example, you filter out charts that don't have a nice trend, where you don't have a perfect horizontal level of support, where you have a high level of uncertainty with a lot of volatility, and those are the things that you want to stay away from. When I do my watch list, I want to see a market that is trending nicely, where you can put support resistance levels in there. You see that the market is generally respecting support resistance along the way, and it's not completely all over the place. So scanning is very important. I guess it's even more important in stocks because you just have so many stocks. But having a process to narrow down your watch list it's really the key.
And then you mentioned something earlier, Ralph, something orderly but not too swingy. Could you explain what you meant by that?
Was that in this context?
Yeah, I think you were probably talking about volatility.
Oh yeah.
Wondering if you could just define it.
Yeah. So well, especially if you want to trade breakout continuations, for example, you want to stay away from markets that first of all don't have a trend, because obviously then there's no continuation. But you also don't want to have a Forex pair or any market where you have huge volatility, where you have very, very big wicks, because then either it will force you to use a very wide stop loss so you're not becoming victim of the volatility, or you're just going to skip completely the market. So it needs to make sense when I look at a chart and I see that there are huge candles, huge wicks to both directions. I will stay away from such a market because it's just a low probability trade, or you need to really use a very wide stop loss and very wide targets. But then also, obviously, your holding time will change quite a bit when you adjust those parameters.
Thank you.
So the first concept is that you really want to make sure that you don't trade high volatility markets and markets that have a good trend. And the second point is that you want to have some type of exhaustion. So when we go back to the first example, you want to see that the market is in a good trend here, a very classic trending behavior, higher lows and higher highs. That's exactly what the Dow theory said. And then you see that at one point the trend may or may not be over, but you see signs of exhaustion. You have lower highs and you have lower highs. The market is not coming back to the highs, and that is what you want to have. When we looked at this, you see that the market we had a trend, then the trend seems to be slowing down here in this range. And that's what I meant for with the first criteria is a trend. The second criteria is you have exhaustion, and the exhaustion usually builds your pattern, your sideways phase. That is the second criteria. So the exhaustion and the temporary pause, they will define your sideways phase. And there have been studies, I don't know the exact numbers, but there have some studies that show that the market does spend, or the price action does spend more time ranging than actually trending. So it's really important, in my opinion, to study all those different consolidation types. How do consolidations behave? What forms and what shapes do they have? How does the price behave in them? That's a very, very important area in technical analysis that should not be overlooked. So here, for example, we have always the criteria of we have a strong trend. The trend then somehow ends, or at least it shows signs of exhaustion, which is our next criteria. We have, for example, double tops and double tops, double bottoms, triple bottoms are very, very popular and very common in forex trading, for example. This is soybeans, so it does work on any market. Interestingly enough, cryptocurrencies do tend to behave quite technical for whatever reason. You will be able to use those principles as well. You have double bottoms. Again, those build those exhaustion patterns. You have within those trends, you have little exhaustion patterns, which look like a little head and shoulders in here. But yeah, the first thing is always you want to have a good trending market, and then you want to look for some type of exhaustion where your sideways pattern is being established. We have a downtrend in here. The downtrend ended with a divergence. The market was falling very, very quickly in here, which leads to a downward moving RSI. And then as the trend exhausts, as the bearish trend waves become less steep. So here you can see very, very steep trend wave, less steep, obviously. And then here the market is not even able to pull into a new low. So we have a double bottom. That's when you have your divergence. Very, very often those exhaustion patterns and those sideways phases are accompanied by divergence just because of the way the price action does move when we look at highs and lows and trend waves. You have a decent pattern here. You have, if you extend this back, you have like a triple top probably. You have a double bottom, very well defined. Before the breakout, you have a very strong move into the top. So you can see here we have a very, very strong move from one end of the pattern into the opposite end, which is a very strong bullish move, obviously, over 3 consecutive bullish candles. You then have your breakout. The breakout doesn't automatically or immediately succeed. You have a pullback back into the entry area, which you may or may not have been able to trade on the lower time frames. But this is such a common behavior that this is, you will see that time and time again. Trend, exhaustion, then you have your breakout at one point, and then you have your pullback, and then the trend may continue. This is how many forex markets will reverse, and I've seen it on less often on indices, but on other commodities you will see it quite a bit as well. Head and shoulders are another form of exhaustion patterns. The market is in a downtrend, very strong downtrend. The downtrend ends, well, probably somewhere around here. You'll be able to pick up that the market is making a double bottom. At this time, you have probably established a very nice resistance level in here. The resistance level on here never broke. So at this point, you are not able to trade a long breakout. The market comes back into the lows, breaks out into the low. You may have been able to trade this as a short trade. On the breakout, you can see the market comes back into the breakout area, maybe even a little bit deeper. My guess is always that this has to do with how many amateur traders maneuver their trades and maneuver their stops. You have your breakout, your stop loss is safe up here. As soon as the market moves a little bit in your favor, people get anxious, people get scared, they don't want to give back profits, they don't want that the trade is turning around. So they want to get the risk-free trade. Then they move their stop loss to break even. And that's exactly where your pullback usually ends. This is just so common. But the real point of this is that the downtrend continues. The downtrend continues until roughly around here, where the market fails to make a lower high, a lower low. You can see the market rallies back into the previous area of highs, doesn't break out, and gives you here another, if you want to call this an inverse head and shoulder, you have another higher right shoulder, or you have a bullish breakout buildup with a very, well, just a single bearish candle here, very weak signal, at least when you look at the bears. So not a very bearish signal that you see here on the resistance level. And then you have your rejection. You have a very, very strong breakout candle, and then that's how the market behaved. So it's an interesting way, at least for me, to look at charts, because it's really, you look beyond the candles, you really let the price tell you a story that you can put together, and you understand that. And it does help a lot to ask yourself, how do bulls and bears interact? Because behind every candle there is a buyer, there is a seller, and it's all about momentum. It's about the power force and the power ratio between the two sides. So it does help to narrate your charts a little bit in this context. It does help to at least put up or at least track, how do highs and lows shift on your charts? Do they move lower? Do they move higher? To which degree, or how fast do highs and lows move? Is the price very easily able to push into one direction? Is the price struggling to push into a certain direction? That does help a lot for any price analysis. Okay, I hinted that before, just because you will see that so often the buildup is just really, really powerful. You can see it time and again. Whenever you have a support and resistance level, so the market was in a downtrend, the downtrend ended at one point with a double bottom. At this point, the market established the previous support area as resistance. The market comes back into the level. It is not able to pull away from the level at all. You can see that here the market is really sticking to the level, whereas previously the market eventually sold off. And then together with the successful breakout, that is where you really have everything in your favor. Sometimes the breakouts will be very, very strong, with very strong candles. And then you have two options, obviously. You either enter it and use a very wide stop loss, which means that your take profit target to justify a good, or to realize a good reward to risk ratio, will also be much, much wider away. In some cases, I don't trade those. When you have a huge breakout candle, you're just forced to use a very wide stop loss, because you still want to protect your stop loss behind a support and resistance area. So either you use a very wide stop loss and then you use a very wide target, or you just skip the trade. That's totally fine. You don't have to trade every single breakout. Sometimes the market will just run away without you. It's really important that you don't chase them. Sometimes when you have a very strong candle and a strong breakout candle, you don't want to trade. Sometimes you will get a second chance with a pullback into the resistance level or into the support now. But sometimes the market will just run away and there's nothing you can do. There will always be a new trade. So yeah, never chase. And if you have a very, very big breakout candle, if you're not comfortable with having such a wide stop loss, it's better to skip those. What you should never be doing is to have a stop loss that is not protected. So if you get in on your bullish breakout here, you don't want to put your stop loss here, because it absolutely has no meaning in the market. If the market hits your stop loss back below the breakout level, that has meaning, because it shows you that there were not a lot of bulls in the market to defend the level and to defend the breakout. So your trade hypothesis is really invalidated. But if you put your stop loss in here and it gets hit, that doesn't mean anything. You should be still in your trade probably, because the market is still making higher highs and higher lows.
All right, Rolf, we are getting down to our last 3 minutes here.
Okay, cool.
So what I'd like to do is I know there's probably so much more you'd like to share with us.
No
So the first thing that I want to do, Rolf, is ask you, where can folks that are attending this session find more from you so they can keep learning and keep doing what you're doing?
So you can go to tradesciety.com. You can go to youtube.com/tradesciety. I think we have published 400 free trading videos. You'll find a lot of material on our website, hundreds of articles. So that's usually the best way to go. I wrote a book about technical analysis. Actually, it has been the #1 bestseller on Amazon for technical analysis. So you can go there as well. You can go, yeah. But on my website and on my YouTube, you will be busy for quite a while.
Well, let's plug the book too. What's the title of the book?
It's called, well, I have one here, obviously. It's called a Technical Analysis Masterclass, and it does look like this. So
Very
you'll
good.
find it on Amazon, yeah.
Yep, and that's Rolf Schlattmann on Amazon, Technical Analysis Masterclass to get the book.
Right.
Trade Society YouTube and tradesociety.com. All right, Rolf, if there's one or two lessons that you really want folks here to take away from this, what are those the core learnings that they should walk away with?
First of all, especially in stock trading, you can be very, very selective. So that's really your edge. You have so many stocks at your disposal that you don't have to trade all the time. You only have to trade. You never have to trade, but you only can trade when you have really the best setups that are really that do make sense. Trade less is whenever I mentor a trader. When I tell them to trade less, that's usually when you suddenly start to see slight improvements.
Mm-hmm.
And second, track every trade that you take, and if it's only a screenshot of your trade, do that. Review it once a week, once a month, and yeah, you will see a lot of things that you usually miss.
Wonderful. So I'm getting be disciplined and selective,
right?
And learn from your mistakes.
Right. Those are good takeaways, I guess. Yeah.
Great. All right, Rolf, that's all the time we have. Thank you so much for being with us. I will be able to share your slides with folks after the event, right?
Yeah, perfect. I can send you the PDF with all of the extra slides that haven't been talked about, and you can share them around. Yeah.
Perfect. Okay. Yep. So just go ahead and send those over. I'll make sure everyone gets them. Rolf Schlattmann, everyone. Thank you so much for being here.
Thank you for having me. Enjoy your weekend.
You too. See ya.
Take care.
All right, that was Rolf Schlattmann, entering and exiting trades, heavy technical basis for doing so. Big takeaway there for me was the breakout buildup. That wasn't something that I was quite sure about. You know, we all hear about breakout stocks or breakout movements being something great for more beginner traders, but there's a chart basis for that. I just want to remind everyone, there's a good number of folks that have purchased the VIP breakout session. Make sure that you go up to the agenda and get on over there. I think that we have a good number of folks that went ahead and purchased that and they have not gone over there. So make sure that you do that. Also, if you participated in our survey, I think it was about a week ago, there's a chance that you may have won a free upgrade to that VIP breakout session. So if you're not sure if you won, we did send an email out to our winners. If you're not sure if you won, make sure that you go up to the agenda now. Just check and see if you can see the breakout session there in your agenda. And if it's there, you can hop in. So you still got time to talk options and to talk hedge fund strategies. Poor Luke is over there just waiting for you to brag about his bull flag find there earlier today. And make sure you try to get an update from him on those trades. All right, just a reminder, if you want to get all of the recordings from today, you can do so by going up to upgrade your access at the top of your window here, and you can get the recordings to keep. And it's not too late if you're still interested in hopping into those breakout sessions to go ahead and purchase that. You will get a recording of whatever you have missed so far. All right, next up from From Schaefer's Investment Research, we've got senior market strategist Matthew Timpane. We're going to talk options again, guys. And this one, we're really going to talk about not the fundamentals necessarily about options, but how to make money with options. So I hope that you guys are really excited about this because we are getting the wheels to the pavement here. So Matthew, are you there? I think you're muted, Matthew.
I'm here. I'm unmuted now.
How are you doing, man?
Not too bad. How about yourself?
Wonderful, wonderful, wonderful. So it's great to have you here. And I don't want to cut into your time too much because I know you've got some great stuff that folks are really going to want to take away and start using on Monday. So really quick, just tell us a little bit about yourself and what you'll be teaching.
All right. Yeah. So my name is Matthew Timpane. I am a senior market strategist at Schaefer's Investment Research. I'm also a chartered market technician. I have over a decade of experience specializing in managing multi-strategy portfolios, trend following, trade execution efficiency. Prior to joining Schaefer's, I was a partner at a boutique registered investment advisory firm that we eventually sold. And today we're going to be talking about an overnight option strategy that we use at Schaefer's that is currently beating the S&P 500 by 726% this year.
So I'm very excited. So I'm going to get out of your way. Let's see the strategy.
All right, wonderful. All right. So we have 3 simple rules that we follow when trading an overnight strategy. The first is buy the dip or sell the rip, and I'm sure many people are familiar with those terms. The second rule is protect your money with precision timing. And the third is you want to limit your downside risk. So buying the dip or selling the rip, what you're doing is you're trading against the short-term trend. And this can often give you the most bang for your buck. We're using technical indicators to define these support or resistance zones. And honestly, I can't think of a better time than right now for technical trading with a lack of clarity on fundamentals. And some of the technical indicators that we use are just as simple as moving averages, but they have significance backed by quantitative data. Other things that we look at is option or other sentiment indicators to provide us some clues, or we might have a news or other type of catalyst that can lead to these outside moves. Now, we don't advocate that anybody use any one of these in a vacuum. Rather, you want to overlay or combine a few of these together. So just quickly for an example, you may identify a resistance area that there's some overhead supply on a certain stock. You also maybe have like a downward sloping moving average that has significance backed by the quantitative data. And maybe you're looking at the open interest configuration and you realize that the peak call is right there and it was bought to open by a lot of retail traders. So a lot of times what that will do is provide resistance. The second rule in this type of strategy is protect your money with precision timing. Now you want to embrace intraday volatility to find optimal entry points, and most people think volatility is bad. But as a trader, this really creates an opportunity for you. Now we're using weekly options to provide this great deal of an opportunity, and we've realized that this opportunity keeps being enhanced as the evolution of weekly options continues. You're noticing more and more securities, whether it's stocks or ETFs, are getting weekly options. So it's providing us with these short-term trading strategies that we can use. And it's also providing more liquidity to the options market. Third, you're gonna alter your entry times to best fit your current market environment. Right now, we know it's a highly volatile market. So this short-term strategy overnight really can allow you to limit the amount of time premium that you're going to have to pay for these options, but still ride out a stock or ETF for a big move on a short-term basis. And that kind of just brings us back to the old mantra: the best trades work right away. And you want to allow those winners to run and limit your losses. I mean, that's basically trading 101, and that brings us to the third rule: limiting your downside risk. You know, by doing so, you're going to let your average winners be much bigger than your average losses. And as you can see by the formula, I mean, you don't even have to be 50% right of the time if you manage your risk appropriately. You can have a positive P&L with a 40% win rate. Another way that we're going to limit this downside risk on this overnight strategy is by taking partial profits the following day, no matter what. And then allowing convexity to work on the rest of that trade. For those of you that aren't familiar with convexity, it's really just the concept of a small move in a stock can lead to a big move in an option. And then the final way that we limit the downside risk is by taking that overnight trade. Is you only have very minimal time premium that you're paying against. So the time decay is very minimal. So even if you don't get the big move in your favor and the trade goes against you, you're not hurt really that badly on the time decay portion of this. And you can get out at a respectable loss or maybe even break even to limit that risk. So I got two past trades that we've done here at Schaefer's, examples for everybody. On March 16th, we had a trade alert go out to our subscribers, and we had them place a day limit order to buy the Peloton March 20th 18 strike call for a maximum entry price of $3.10. Now, Peloton has been a great company to trade through the past few months during the virus pandemic and volatility in the stock market. So it's something we've put into many of our services, and it's been a great trading vehicle. What we noticed on this particular day was it was hitting all-time lows and it had a big reversal higher. Where this reversal came off of was the former half high. And if you look down at intraday, it was kind of like a triple bottom there as well. You had that bullish engulfing candle form, and we realized that the RSI was oversold, but starting to turn upwards. We also had other drivers like short interest, with the percentage of its float was still 65% short, which told us that there was a huge potential for a squeeze if the market continued to reverse. It was also a virus-related company, so we knew that there could be some speculative buying on increased sales from people staying at home. Citron also issued a negative research piece that following Friday and reiterated their bearish stance and placed a $5 price target on it. Now, we're not saying that Citron's research isn't great or bad. We're saying that sometimes their hit pieces can get huge moves in one direction, and you may be able to take a contrarian trade based off of that. And options were also very reasonably priced. They were in the 53rd percentile on a company or a stock that we know that can move 7 to 10% in a day. So as you can see, we entered on that bullish engulfing candle. We immediately exited for 50% of that trade the following day on that gap up. And we tried to allow convexity to run through expiration, exiting the final half on that Friday. The next trade I have here is Target. We entered that on April 7th, and we had them place a day limit order to buy the 97 strike call for a maximum entry price of $4.50. It just broke out of a descending triangle pattern that day. And it was also a relative outperformer versus the broader market, being up over 25% year over year, despite that pullback. Now, what we noticed was it was being guided lower by that 20-day moving average, and it was providing key resistance throughout the sell-off since February. When it gapped above that, we viewed that as a potential trend change. It also signaled to us that it was maybe trying to either find support just slightly below and get back above that $100 level, which is a round number, which we found psychologically likes to act as a pivot point, whether it's support or resistance. We also have another driver, was the 10-day put to call ratio, was in the 98th percentile. So we knew that there was potential for a bullish option related unwind here on this trade. Options were also reasonably priced. They were priced in the 38th percentile, despite all the volatility recently. At that period of time, that was pretty good when you're looking at option prices to find. We were also increasing our leverage by playing a weekly option on a Wednesday. So we only had 2 days to expiration versus typically entering these on a lot of times, either on a Monday or Tuesday. So we're able to profit over 109% in just 3 days. So the key here is you're entering the trade, you're limiting your risk, and you're trying to let the convexity run for huge wins. And that is what we have here today for everybody. So
go ahead.
I was going to say, just thank you to everyone. If you do want to chat with us, feel free to come over to schaefersresearch.com and we'll gladly talk to you about your options trading.
Yeah, I mean, how can you not? Those results are absolutely insane. Matthew, thank you so much for jumping in and being here with us today. That very, very compelling when we see results like that, especially during these times of volatility. So it seems like you guys are definitely onto something. So could you tell the audience, well, it looks like here. So we're at schaefersresearch.com, guys. Make sure that if you're interested in this type of options trading and those signals coming from Schaefer's, that you do visit that website and check them out. Matthew, is there anything else that you'd like to leave the audience with before we split?
Nope, they can find us also on Twitter at Schaefer's or at mtimpain. We have a lot of great content out there as well. You can come over to our website. We not only have strategies, but we have news and educational things as well.
That's great. All right, Matthew, thank you so much.
All right, wonderful. Have a great day, Neil.
Yep, you too. Have a great weekend. All right, guys, that was a very exciting success story. Some wins coming from out of Schaefer's research signals there for some intrepid options traders. So if you're interested, make sure you check them out. Those results are insane. All right, next up, we have Ally. We're going to talk a little bit more about options. We're going to spend a little more time on it, but this is our intermediate that I promise you. This is a bit more advanced than what you've seen already. So Brian Overby, I see you've joined us already. How are you doing, Brian? Whoop, hold on. I'm going to unmute you. Brian, I think you're muted. Can you unmute yourself? Uh-oh, looks like we're having microphone difficulties. So while Brian is doing that, Brian will be talking about some more advanced options content. He is from Ally, so we'll be using the Ally platform as a backdrop for how to use these techniques. Brian has been trading options for a very long time now, so this is definitely going to be something you want to pay attention to. If you're unable to catch everything today, do make sure that you go to the top of your screen and purchase the upgraded access pass so that you can get the recordings of all the videos so that you can refer to them into the future. Brian, do we have you yet? Nope, not yet. I think that you might want to go down to your microphone, click that little arrow next to the microphone and select your input microphone on the bottom left of your screen. You might have to change it to that nice Yeti microphone that I see there. So Brian, in chat, let me know if you can see what I'm talking about there. On the bottom left, you see the microphone. It should say mute on it, but if you click the up arrow on it, it should let you select your input device. Also, while Brian is figuring that out, I do have a disclosure from Ally. Since we are going to be talking about things for educational purposes only, let me add a link to our disclosure here at the bottom of the chat. So everyone there in chat, there is a PDF file that you can download. Everything that we're discussing today is purely for educational purpose. Oh, Brian.
It. Yes.
It's great to hear.
There's a mute button on my Yeti microphone too that I need to turn off.
You're using that advanced pro equipment, man.
Yeah. You got to be smarter than the microphone. That's my issue. You got to be smarter than the microphone.
That is the broadcast mantra. So it's great. It's great to have you here, man. Can you tell everyone a little bit about yourself and what they're about to learn from you?
All right. Well, my name is Brian Overby. I am the Senior Options Analyst with Ally Invest. And what we're going to talk about today are the Greeks. And we're going to get into detail on the layman's way to look at the Greeks when you're trading options. One of the biggest things that I always kind of worry about with beginning option traders or option traders in general is that they don't spend enough time kind of understanding the pricing dynamics of an options contract. And that's what we're going to try to get into today. Now, as far as my background is concerned, I used to work for the Chicago Board Option Exchange for many years. I was a senior staff instructor there. I also worked for Knight Financial. At the time, they were one of the biggest option trading firms down on the floor of the Chicago Board Option Exchange. And then now I've been with Ally, which recently, well, I guess total amount of years with this company is about 15 years at this point in time. So just teaching options to retail traders. I also wrote a little book called The Options Playbook. That is actually, we have a companion website called optionsplaybook.com that's free for all. And also you can buy that book on Amazon. And if you open up an account at Ally, I'll actually send you a free book. No problem.
There you go, guys. Another book for you. Open up an account, you get another free book. All right, Brian, I will get out of your way and let you start the lesson.
All right, excellent. I apologize for the technical difficulties, but I'm just going to jump right into it here. So let me share my screen. I'm going to get my PowerPoint up and running. And I'm going to share. Let's share that PowerPoint. We'll just share that screen right here. That should work. And then we'll do this. And I assume that everybody is seeing me. Understanding the Greeks, that's the title of the presentation. Can I run with it, Neil?
Yeah, you're looking good.
All right, excellent. All right, so before we get started, I have to let you know, we are a broker-dealer. We are a FINRA-regulated broker-dealer, so options do involve risk, and you should review the characteristics and risks of standardized options. You can get copies by calling Ally, phone number on the screen, or you can just go to ally.com/invest/disclosures. All right, so now I want to jump into the Greeks. Now, we only have a half hour to do this presentation overall, so I'm not going to really spend a lot of time talking about the textbook definitions of the Greeks. But the Greeks come from option pricing models in general. I have the textbook definitions for your reference in this PowerPoint, but we're going to look at how to think of the Greeks in layman's terms. Why is the delta 50 on this option contract? Why is it 75? Why does the delta move this way? What is theta? What is vega? And we're going to get into the concept that if you understand this PowerPoint presentation that I'm going to give you, that you really you always have a gut feeling of what delta is overall. So where do the Greeks come from? Well, if you look at any option pricing model, you're going to see all these different variables. One of them is going to be price. Other one is going to be time. Time is going to be a factor. One thing is going to be implied volatility. And these are the Greeks that I'm going to focus on today. Since all of those are variables, when the market is moving in real time, all of those variables can change. The price can move. The time to expiration is obviously ticking away. Volatility, the implied volatility, will define it. And we'll talk a little bit about that, but that can also change as the market is moving with price. So what in the options pricing world, what do we have to try to get a grasp on what these, how this option is going to move? Well, we have these little things called the Greeks. And so we're going to get into the detail on the layman side, how to approach these Greeks and how to use them inside your option trading. Now, all these numbers are theoretical in nature, but it's the best guess that we can have as to how our option price will react to these changes in these option pricing variables. Okay, so delta is the most popular Greek, and this is where we're going to spend the most time. And if I look at the textbook definition, this would basically be the only one that I'll really read out loud. It's the theoretical option, it's how much an option's theoretical price will change for a corresponding 1 point change in the price of the underlying security. So delta is obviously a very important one. It's going to give you a realistic expectation as to how your option can move relative to the stock price movement. But it's so popular that they actually gave it another Greek called gamma. And gamma is the rate of change of delta. And then we get into theta. Theta is time decay. And then we got vega, and vega is volatility. By the way, the only one that actually isn't a Greek letter. I don't know why they picked vega. I guess because there's a V in vega and there's a V in volatility. That's about the only reason that I can come up with. So with that said, let's jump right into delta. Okay, so delta is the amount a theoretical options price will change for the corresponding 1 point change in the price of the underlying. So I have an example here. We're going to go on through this example. We're going to basically say the stock is at 50 and the strike is 50. All right. At that point in time, if I buy this 3-month call option, it's a call option, so you want the market to go up. It's an at the money call option. The stock is 50, the strike is 50. That 3-month call option was trading for $3. All right. Now, if that stock goes from 50 to 51, guess what? That option contract doesn't go up 1, it goes up about 50 cents. And then if the stock goes from 51 to 52, that option goes up more than 50 cents in that next stock price movement. And you're, by the way, a very good stock picker if this happens instantly. None of the other variables change in the marketplace, just the price moves. And we see that in the first point movement, it went up 50 cents. In the second point movement, it went up 60 cents. So how would we know that this option should move about that amount? Well, if we looked at the stock at 50 and the strike is 50, and we looked at the delta inside the option chain, that would give you a hint as to how much this option should move as the underlying price moves. And it also is showing you by this real quick and simple example that not only does it move, it's a dynamic number, and it increases, it accelerates as that option contract moves, specifically in this instance, as we get deeper in the money. We started at the money, stock went to 51, now we're a little bit in the money, then it goes to 52, now we're a lot in the money relative to the option contract. So this is giving you a good realistic expectation as to how much your option should move when you see a change in the price of the underlying. Okay, so that is a textbook way to look at delta. And a lot of people just stop right there. I want to give you a good feel for delta overall. So if I go in and I look at delta and I think of it this way, the non-textbook definition, and this is the way the traders speak down on the trading floor. Delta, and I just brought it up on the slide, delta is the probability of the option being in the money on expiration. This is not, and I've had people come back and say this to me, like, this is not the textbook definition, it's not the exact definition. No, it isn't, but it gives you a good feel. And if you understand this concept, you will always understand in general what delta is. So if I think of delta as the probability of the option being in the money on expiration, now I'm going to emphasize 1 cent in the money. This isn't the probability you're going to make money. That's a mistake that I've heard of. It's a probability that it'll be 1 cent in the money. So for example here, if this option contract, if we paid $3 and it finished 1 cent in the money, we obviously didn't make money on this trade, but this helps you get a feel for what the delta should be. So for example, stock is at 50, the strike is 50. What's the probability at expiration of this being 1 cent in the money? Well, if the stock goes up, we're in. If the stock goes down, we're out. So, i.e., what are most at the money option contracts? Well, the delta is going to be very close to 50. Now, stock goes from 50 to 51. And I think, can you see my cursor, by the way, Neil? I don't know if you're out there.
Yeah, we can see it.
Okay, you can. So the stock goes from 50 to 51. Well, in that instance, then now what's the delta? Well, I don't know exactly, but the probability definitely increased. So guess what? The delta increased. And then when the stock was sitting at 51, guess what? The delta was at 60, and the stock went from 51 to 52. And we see that that option contract, in theory, this is a theoretical example, went from 350 to 410. So as we get deeper in the money, the probability of it finishing in the money changes, and hence the delta will increase. If we go further out of the money, the probability of that delta changes, or finishing in the money changes. And because of that, the delta will also move. Now, down on the trading floor, they just, everything that they talk about has a delta. So for example, when I worked at the Chicago Board Option Exchange, I might go over and say, hey, Bill, you want to go to lunch today? I see the markets are kind of rocking. I'd like to go maybe have lunch with you. Oh, 20 delta. Right? Everything has a delta. Everything's a probability. I don't know. It's pretty busy. I don't know if I can get away. Well, hey, Bill, it's option expiration Friday. Do you want to go to the Cactus across the street and have a beer for happy hour? Oh, 100 delta on that. right? That's how traders talk. That's how they approach it. Everything has a delta. They use delta in all of their trading, but you hear a lot of people like say, I want to trade delta neutral, those type of things. Those are meant for market makers in general. That you just want to shy away from it. You might want to learn a little bit about what that means, but delta is representative of how many shares of stock that option contract will represent. There's many different ways to look at that delta. So for example, when the stock is 50 and the strike is 50, we have a delta of 50 in this instance. And that implies that your option contract will act like 50 shares of stock. So if I want to protect myself, I could go on out and I could trade 50 shares of stock in either direction to try to protect myself. So that's how people will talk about delta neutral, and that's how they'll use delta to see how many shares your option contracts are representative of. Now, with that said, that's the most we need to talk about that. Let's get into why a delta changes. And this is very pertinent for retail investors. So we're no longer going to talk about that textbook definition, but I'm going to go out and look at a different way to approach this delta. Okay, so there's the non-textbook definition up there that you can use. And let me go in here and see if I can see a lot of questions popping up overall. Okay, there's my chat. I got it up and running. Okay, so stock is 50, the strike is 50. Now I want you to hang with me here. I want you to hang. Now there's the non-textbook definition up here. Let's change this example up. And let's say there's 1 day remaining to expiration, okay? Stock is 50, strike is 50, and I'd like some people to play in my little reindeer games here. That's the sign, the Greek symbol for delta. My question to start with, we got 1 day remaining. We changed it up. We talked about a 3-month option to start with. Now we have 1 day remaining. What's the delta? What do you think it is? And you can put it in the chat box. Feel free if you'd like to. And if you don't want to play in my reindeer games, that's just fine. We don't have to go and do that. All right. So I'm getting a lot of answers across the board. And if I look at this, one of the more common things, I see somebody said $1. All right. So if you say $1, well, guess what? You're a bull. If you say 0, guess what? You're a bear. Why? Because you got 1 day remaining to expiration for this option contract to actually move in the money. So at this moment, with 1 day remaining, the stock at 50, the strike is 50, you have the most 50 delta you could possibly have. With 1 tick up, you're in. With 1 tick out, you're down. So you have a very volatile option contract in this instance when we have 1 day remaining to expiration. So what's the delta? It's 50. As a matter of fact, it's more 50 than you could possibly get in any of the other examples that we are talking about. So in this instance, with 1 day remaining, we have the stock trading at 50. Now, if we go back to a different example, and we were talking about a 60 days to expiration, what's the delta on that option contract? Well, actually, in my example, I'm going to say that it's basically 50, but it's maybe a little bit more because you have a little bit more time on your side. But where does this get interesting? Now let's think, once again, think about that non-textbook definition. And I want you to get ready to answer this question. I want you to think about this. If that stock now goes from 50 to 51, our number one, our 1 day to expiration, now where does our delta go? It was trading at 50. What do you think the delta is going to be now? And I'm going to reference to the non-textbook definition. What do you think that delta is now? That delta now is going to be extremely high. Why? We're 1 point in the money with 1 day remaining to expiration. If you think of that non-textbook definition, the probability of it being 1 cent in the money on expiration, that has just increased quite a bit. So our delta actually goes fairly close to 1. It's going to be 90 in this instance. In a theoretical format, it's going to be 90 cents. That means that delta moved 40 cents in that 1 point movement. Now, if we look at our 60-day example, our delta went up from 50 cents to about 60 cents. So it moved a lot slower than that near-term option contract. Okay, so why do I go to the pains of making an example like this? I hear a lot of people that go out, and we're going to talk about time decay here in a little bit, but they go out and they say to themselves that Oh, I like trading weekly option contracts that expire in 5 days of trading. Why do I like to do that? They have a lot of time decay. So I like to sell spreads or sell option contracts with 1 week remaining to expiration. Well, if you're doing that, you also are, if you're doing that, you're exposing yourself to risk in that, yes, I have a large rate of time decay, and we'll get into theta here in just a little bit, but I also have a delta that's very explosive. And at this point in time, what have we just defined? That explosiveness is actually known as gamma. And gamma, as we see here, is the rate of change of delta. It's a derivative. It's derived from the options price. And this is what drives the delta towards the extremes, right? Drives it towards 1 or it drives it towards 0. The most at the money option contract is going to have the most gamma or the highest rate of change. Why? Because as delta goes in the money and approaches 1, it can't go beyond 1. So gamma has to get smaller because it's the rate of change. You can't push it beyond 1. On the other side, if I'm way out of the money, that option contract has a lower probability of being in the money. And as that happens, now my gamma has to get smaller because it can't blow it below 0. It can't push delta below 0. So if I go back to this last example, let me go back to that last slide. We see that the gamma on that 1-day option contract was 40 cents approximately in this theoretical world. And in the 60-day option contract, that was 60 cents. So this is all that I want you to grasp from this event today, is that if you are trading options, no matter what your strategy is, you need to think about how time to expiration and delta is going to change on your option contract. I know a lot of people that would like to sell option spreads. You can go to the optionsplaybook.com and check it out, but you're looking at a short put spread or a short call spread. And that mentions the fact that you want to try to bring in some option premium and you're trying to take advantage of time decay. One of the things about selling shorter term options is when they go in the money, if I sell a call option and I'm hoping that option expires, but it gets in the money, if it's 1 day remaining expiration, it's going to hurt me much faster than a 60-day option contract is going to. And that's the main point of my strategy. So let's talk about another strategy when we look at this. Let's think about a long straddle. Not a lot of people talk about long straddles. You're paying a lot. You're buying an at the money call. You're buying an at the money put. You're saying, I don't know what direction it's going to go, but I do think that it's really going to go there fast. And it's either going to move up or it's going to move down. And if that does happen in this instance, then what expiration do I want? And I've heard a lot of speakers say, well, you need to go further out in time. Why? Because you want a low rate of time decay. Well, let's think about that. Okay, I'm only going to be in this for an event in a long straddle. Main reason why I'm doing it is because I think the stock is going to move. And usually when a stock moves, it's because of things like earnings events or a known event is happening. So I want to be in for that event. And then I want to see if I'm correct and the market moves more than what the marketplace was expecting because of that move. That's the gist of a long straddle. I don't know what direction. The news could be bad, could be good. I don't know, but I know that it's going to move. All right. Well, if I go up further in time, I'm going to pay up for that option contract. Why? Because time is money. The further I go out, the more expensive it gets. And then also, if you look at our example here, and we're talking about the 60-day to expiration, I don't get much gamma. I don't get a very explosive option contract. So I go out and I buy at the money option contract, 60 days remaining to expiration, and all of a sudden my call option goes in the money. And in that instance, when I see that happening, all of a sudden my put option is losing money, right? So I need my call to make more money than the put that I'm losing on. So my moral to this story is I need to be closer to expiration because when this option, whichever side gets in the money, I need it to work fast for me. I need the acceleration that gamma can give delta. Granted, I'm going to have a higher rate of decay, and that's called theta, and we're going to get into that one next. But that's what I need to be thinking about when I'm doing all my option strategies. If I'm selling an let's go advanced, iron condor, if I'm buying a butterfly, if I'm buying an at the money option contract, why am I buying that? What is usually where is most of the volume in the option chain world? Well, they're the nearer term at the money option contracts. Why is that? Because if they go in the money and you're correct on your forecast, they move for you much quicker. They actually do something because of the acceleration factor that gamma gives delta overall. All right. So like I said, I don't have a ton of time here. So I'm going to go on in and we'll talk a little bit now about the time decay factor, and that's going to be theta. Okay. So I'm jumping forward to theta. Theta is the amount of theoretical options price will change for a corresponding 1 day change in the days to expiration. Okay. So I just have a simple little math, and this is one of the things, as far as option pricing calculators are concerned, this is actually one of the truest, if you could, variables. And if you look at the Black-Scholes pricing model, you pull it up, you Google it or whatever, you'll see a lot of square root signs. And I guess I should go this way. All right. You'd see a lot of square root signs inside that model. And that just means that options decay at the square root of time. I know that's an amazing factor that you might want to go out and tweet about, but in general, it actually works. If this was a utopian world and it was a 360-day year and we only traded 30, 60, 90-day options, this little math formula would actually work for you. And it would be fairly consistent. If I look at a 1 month option contract here, for example, and it's trading for $1. Well, if the world was logical and we didn't have this little square root of time thing, well, a 2 month option contract would make sense. If you add another 30 days, you add another month, it would be trading for $2. And a 3 month option contract would be trading for $3, right? If 1 month's $1, why wouldn't 3 months be $3? Well, it's close, but you got to add the square root in here. And once again, this is in a utopian world where everything is 30, 60, 90, 360-day year. But just to understand the math, if a 1 month is trading for $1, a 2 month would be trading for 141, 1 times the square root of 2. And a 3 month would be trading for 1 times the square root of 3, or 173. So in this instance, if we just graph these 3 little points and we see days to expiration down here on the x-axis, we have the option premium on the y-axis here, we see that not only do options decay, but they decay at an accelerating rate as expiration approaches. Now, I'm specifically talking about an at-the-money option contract, and I made it a call because our example was a call. But if I'm looking at an at-the-money option contract, and this is the scenario, I see that when a 3 month option becomes a 2 month option, I lose 32 cents. And when a 2 month option becomes a 1 month option, I use 41 cents. And then when a 1 month option becomes a 0 month option, it's like, wham, my sled hit the tree. I lose that entire $1 in that last bit of life of this option contract. So options decay, specifically at the money option contracts decay at a more accelerated rate. Why? Because that's where all the time premium is on. That's where it just sits in the option contract. You get this explosive gamma. A lot of people like to trade it because of the gamma, but you also get this explosive rate of time decay. And if I was an option trader, what would I love the most? I would love to have low theta and high gamma. Guess what's the one thing you can't have in the options trading world? Low theta and high gamma. If you want that explosive option contract, that at the money option contract, you're going to have to deal with time decay. And theta is the thing that will give you that look as to how much your option will decay over time. But I want you to think about your strategies and what's happening. I talked about the long straddle. I've heard a lot of people say, if you're going to do a long straddle, you should go further out in time. I say, no, you need to have a ratio where you're going to get some explosiveness without as much time decay. So much so that some people will actually make another Greek that doesn't get talked about very much. And that is basically gamma over theta. It's a ratio of gamma to theta. And some people will call it alpha. They'll come up with just a few other names for it, but it doesn't really matter. What they're trying to do is say, what is the right ratio that I get from gamma versus theta? Now, I don't have that golden book of an answer. Like, if I'm buying an option contract, I need to do this, because every underlying stock has different dynamics to it. If I am selling a shorter term call spread and it's a volatile stock, I would rather go more short term than long term. Why? Well, I'm going to get a lot of juice in that option contract overall, especially if it's a volatile stock. So I'm going to get some more premium. I don't need to go out further in time to get something worth.
Hey everyone, sorry about that. Hopefully you can see us here. It looks like we had a little conflict with our accounts. Just trying to get everyone back on board. Just please bear with us while we get Brian back on. Hey Brian, are you there?
Yes. Yes. There I am.
Hopefully that gave you a chance to catch your breath.
All right.
Really sorry about that.
I was getting way too fired up, and I think I just burnt the microphone over here.
Yeah, I know the Yeti is burning down, man. Yeah, no, you had some great momentum. I want to get you right back on track. Sorry about that.
All right. So is everybody listening right now?
Let me double check on our event platform and just make sure that everyone can see what we see here.
Okay, because I'm about ready to get to questions here.
Yep. You're live and ready to go.
Okay. All right. So now I'm going to share my screen one more time. And we were rocking and rolling with time decay and theta. All right. Everybody seeing me okay? Just need one heads up, I guess.
Yep, you're good.
Okay. And in the chat. And I think I'm going to take questions here shortly. So if you have some questions, please put them in the chat box. If I can see the chat box, here we go. Okay. I think I can, but it's not really.
So we do have one question. Are you ready to take them?
Yeah, let's do the one question, because I knew where we were. We were talking about the Greek that gives you gamma versus theta.
Yep.
Let me just finish here. Let me go to the next one. Here we go.
All right.
And then that was the Greek. So a lot of people want to have high gamma and low theta, and that just doesn't happen. And there are some people that will try to manage that. But I just want you to think about, if I have a volatile underlying, I'm going to pick a different time frame than a less volatile underlying. So let's just talk about volatility in general and what it is. The Vega Greek that tracks volatility is Vega, and Vega will track implied volatility, and that's why I have the definitions up on the slide. Now realize it's not historical vol. Vega is a part of option pricing. And where does implied volatility come from? It comes from an option pricing model. So for example, if the underlying stock, if a just random stock, let's call it consolidated lint, doesn't trade options, there won't be an implied volatility. Why? Because you need an option contract to see what the marketplace is implying the volatility to be over the life of that option contract. So for example, implied volatility, it justifies an option's current market price and is also stated as an annual number. It can be found using an option pricing calculator. So you need to have an option price in order to find an implied volatility, as opposed to a historical volatility, or some people will say actual volatility, which is the real price movements day in and day out of the underlying stock. It's already happened. It's previous. Both of these numbers are stated usually on an annualized basis, just so that you're always comparing apples to apples. Even though it's a shorter term option contract, it's going to be stated on an annualized basis, unless stated otherwise. Sometimes you'll see it say 30-day implied historical. They'll say it's a 30-day historical. If it doesn't state that, it's considered an annual number. Okay, so Vega tracks that. Vega gives you a hint as to if implied volatility swings, what will happen to your option contract. And now the one thing that I want to point out on longer term options is a lot of people say, well, in the short term, Vega affects short term options more. Well, it might on a percentage basis, but Vega gets bigger as we get more time premium. The further I go out in time, the Vega becomes a larger number. And that's one thing that a lot of people don't realize. They think, well, if I go further out in time, I don't get the wild fluctuations because of an implied volatility situation. Well, what's a situation where that might happen? Earnings is the easiest one to talk about. Company's going to be announcing earnings. And as soon as they announce the earnings, the stock kind of settles down. The implied volatility will come in, and basically it will reduce the price of your option contract. That happens most times after earnings. Now, one of the biggest things about implied volatility, a lot of people will say, oh, the market maker is pumping up the implied volatility. And that's a little bit tough to come in and say with. It's really the orders, the money flow that's coming in that really does it. Because if I'm down on the trading floor and let's say everybody thinks that the market's going to move a lot more than expected, all of a sudden they start buying options. They don't know the direction. Implied volatility doesn't have any regard to direction at all. It's just saying that think the stock will move. And they start buying options. If I'm a market maker on the floor, I want you to stop buying. How do I get you to stop? I keep raising the price. And if I raise the price, the only variable in that option pricing calculator that can really change and fluctuate is that implied volatility. Okay, overall. So that sums up the PowerPoint presentation. I'm going to take some questions now, but here's my takeaways just in general. No matter the strategy, think about how gamma, theta, and vega will affect your Greeks, and specifically your delta. Now, you can try to control this. There are different situations. Like, for example, if I'm looking at a butterfly, if I'm looking at doing strategies that are fairly advanced, I want to think about what I want to happen at the expiration of of this strategy. And if I'm correct on my forecast and I'm doing a butterfly, I actually want time decay to erode because I'm selling option contracts that need to decay. And when that happens, that's a good thing for me. Even though I'm paying a debit for that underlying trade when I put it on, I want to think about how that could decay as expiration approaches. Okay, so I think obviously we're going a little bit long. My name is Brian Overby, known as the options guy here at Ally Invest. Check out my book, optionsplaybook.com. You can go to Options Playbook and check out these strategies there too. Our Twitter handle is Ally Invest. I have been tweeting more about our events that we do, our educational events we do on the Ally platform. And my handle is actually just Brian Overby, twitter.com/Brian Overby. All right. So you can email me at the options guy, but let me address your questions. I'll leave that up for right now. If you
for actually hosting this and putting it on. And like I said, I'm going to talk about algo momentum. First, I hope everyone's getting back to normal with all this Corona stuff going on. It's crazy. You can probably see from the webcam, or maybe you can't, but I was thinking my hair's as long as it's ever been until my wife reminded me of this picture of me from my high school years. And my hair's almost getting back to that length if I didn't kind of slick it back a little bit. But hopefully everybody's kind of getting back to normal. It's been some weird times in the markets too. So, but I figured I'd share that picture with you. And so with that, we'll get started. So first, I just want to share a disclaimer. I'm not a registered investment advisor, and if you're trading stocks, futures, watch out because there's a lot of risk there. You can lose more than your initial investment. Past performance is not indicative of future results, and all the results you see from anybody who's showing you trading, just treat it as hypothetical. That's a good way to be when you're in the trading environment. So with that, my goal today is to kind of just pull back the curtain a little bit and demystify algo trading a little bit, because I'm sure you guys have heard about it. You might have wondered about it. Is it, it sounds kind of mysterious and sounds kind of tough. Hey, I don't have a PhD in statistics. Can I still do it, kind of thing? So I'm going to kind of just pull back the curtain and talk about it. And then we're going to go through a pretty simple example that shows you what algo trading can actually do. So first, I'm just going to mention about myself, give you a quick intro about me, just so you know where I'm coming from. Then we'll talk about trading algos, what's an algo. We'll talk about advantages and disadvantages of them, because that's obviously important. It's not a bed of roses when you're talking about algos. There are some disadvantages. And then we'll actually build a simple one. So I'll fire up my trading platform and I'll kind of walk you through some steps, and we'll look at some results and kind of talk about it. And then in case you're interested in this type of trading, I'll give you some next steps to pursue. It's pretty neat, a neat way to trade. It's not for everybody, but especially if you're a numbers type person, it might be something you want to do. So just some background on me. If you subscribe to Technical Analysis of Stocks and Commodities magazine, it's one of the big industry trading magazines. I write a monthly column that's called Algo Q&A. I've been trading for 30 years. Now, I do trade stocks a little bit, mostly for like my IRAs and that kind of thing. So it's more longer term, but primarily what I trade are futures and Forex, and I'm a more active trader then. I've written 4 trading books that have all been bestsellers. And I've also won a trading contest. I finished in first place one time, second place 2 other years. So 3 years in a row, I was first or second place. And that was a real money trading contest. It was a year-long trading contest against some really good traders. You guys have probably heard of Larry Williams. He's a legendary futures trader. He actually won that contest 20 years or so before I did, but it was the same contest. And then I also do some teaching. I've been able to teach 6 other people who've gone on to win this trading contest. So I'm pretty proud of that. And then I have students in a workshop, and they've created over 300 strategies that have actually worked in real time. So it's one thing to build a back test with an algo. Pretty much everybody can build a profitable back test, but to have it perform real time is something that's pretty good. So I'm pretty proud of that. So like I said, Technical Analysis of Stocks and Commodities magazine, every year they have awards given out. It's called the Reader's Choice Awards. And so last year I won first place in their category for articles in the magazine. That was for my series of columns on Algo Q&A. And then I was also lucky enough to finish in third place in trading courses. And what's neat about that, if you look at the first and second place people, you've got Thinkorswim and TradeStation, who are, multi-million dollar companies. And I was able to come in just behind those guys. So that's pretty neat, because I'm doing this myself. I teach on my own. I don't have a staff or anything. So it's kind of neat. If you're interested, I know a lot of you are stock traders. So I wrote this book. This is my most recent book. This is on Amazon. It's called Stock Market Investing for Everyone. And I actually use this book and use my kids as an example, because they started investing in stocks. They're middle school age, and they've done pretty good, actually. My wife was joking that she should just let the kids invest in stocks, because they've been doing pretty good, but they pick things they like, and like Activision and Google and Amazon, and they've been doing pretty good in the past year and a half or so. But anyways, that's on Amazon. And enough about me. We're here to talk about algo trading and kind of reveal some secrets on it. And the big thing is, don't be scared about algo trading. Pretty much everybody hears that word algo and they're like, what's that mean? It sounds like, you think of the people at Google who do all kinds of algorithms to do search engine stuff. And you think of all this advanced stuff. It really doesn't have to be that way. But the one reason people think about it and get scared in trading, here's just two reasons. This was a number of years ago. There was a group called Knight Capital, and they had a trading glitch in one of their computer programs. And in a matter of, I believe it was minutes, they lost like $440 million. It was crazy. And then just recently, you might have heard that crude oil went negative. Well, the one contract, the nearest contract, which was almost expiring, did go negative. And a lot of traders couldn't handle that. And a lot of their algos couldn't handle it. And even the brokers couldn't handle it. And so what happened with Interactive Brokers, they actually lost, I think, around $100 million because their system wasn't set up to go negative. So what happened was their traders, their account holders, couldn't get out of positions. And to their credit, Interactive Brokers is saying, hey, this is our fault. We're going to make it up to you. But these kind of things are what scare people when they start talking about computer algorithms, because, hey, software's buggy, right? And, bad things sometimes happen. For those of you who are a little older, you'll recognize this reference to the old TV show Lost in Space. A lot of people think algos and they start thinking, oh man, it's going to place 100 orders for me. And, all of a sudden I'm going to end up with all this stock, or I'm going to owe all this money. Doesn't have to be that way. And there's ways you can protect yourself and still do it the right way. So here's an example. This is just a simple, what I would call a retail trader algo. It's nothing complicated, yet it's something you could use for stocks, Forex, crypto, whatever you want, really, as long as it tested out good. And so this one, I'm saying if the close is less than the average of the last 5 bars, go long. So it's kind of like a mean reversion, kind of counter trend. And if the close is above the average close, then you go short, because you think it's going to fall back. And you can see you put this on a chart in some trading software. This is TradeStation. It puts the orders for you, and then you can take the next step and actually automate it, where it would take those trades automatically. So it's not really as complicated as you might think. Of course, this is a simple strategy. You can get more complicated ones, but that's kind of the basics. So here's another example. This is futures, and this is actually the 30-year Treasury bond. And this is a system I actually trade live right now. So this chart was from a couple days ago. And you can see over this Corona crisis, it got a couple losses, but a lot of the time, it actually seemed to catch a lot of winners. So it was pretty good. And that just used price and moving average. So it wasn't that complicated. And it still works pretty good. The one thing people say, hey, you got to have a complicated system. You don't really. And actually, a lot of times what you want are a simple system. You want simple systems because they tend to work better going forward. But that's just a couple examples of them.
Hey, really quick, Kevin.
Sure.
Just a point of clarification, because this stuff is crazy to me. This is obviously some very futuristic stuff. So what you've done is, with your brokerage, you've plugged in a plugin or a separate application that is applying your algorithm. It can be something simple, or it can be something else that you've written that's more complex. It's looking for, it looks like mostly technicals, and then actually executing trades based on things that you deem as positive indicators.
Yeah, exactly. So there's a lot of trading software out there, and I'm gonna get to that in a little bit, but you can use trading platforms like TradeStation or NinjaTrader, Thinkorswim, multi-charts. There's probably 20 different trading platforms, and what you can do with those is actually make rules. You write rules, and then you can apply it to a chart, which would be an instrument. So it could be Amazon, could be Microsoft, it could be wheat futures, it could be some kind of crypto, it could be Forex. And then, usually the software has it set up that they work with quite a few brokers, and you can actually automate that. So what you can do is you can create whatever system you want. So here's an example of just some simple code that it's kind of like a breakout system. And you apply that, you see it worked historically, and then you say, hey, I want to use that going forward, and let it run automatically. And it will take trades for you, enter and exit, and you just have to kind of monitor it. So that's really kind of what I'm talking about here, as opposed to what most people do is, they'll look at a chart and they'll see, hey, the price is above, the moving average, and I see a candlestick pattern, so I'm going to buy, and then they go and they execute a buy. Algo trading kind of gets away from that because you're letting the computer actually make the decisions based on what you've told it to do. So in the example I just gave, you could program it to say, hey, when the price is above a moving average and I see a certain kind of doji bar, buy, and the computer would do it for you. So that's kind of what I'm talking about here.
Yep, very, very fascinating stuff. All right, I'll get out of your hair and let you keep going.
All right. So all an algo is just a set of rules to tell you when to trade. Okay. And you can back test them with the proper software. You can automate them with the proper software. And, you can go to town and run all kinds of different algos if you want. I realize a lot of people are still algos. Well, hey, if you're a part-time trader who just calculates moving average crossovers by hand, with a calculator or something, and then that tells you when to buy and sell, that's an algo. Okay. And so that's algo trading. Back in the day, I want to say 10, 15 years ago, they didn't call it algo trading. They called it system trading or systematic trading or mechanical trading or rule-based trading. So if you've ever heard of those terms, algo trading is basically the same kind of thing. It's just rules to help you get in and out of the market. So, retail traders can algo trade. Obviously, hedge funds, they have teams of PhDs. They have all kinds of complicated programs. A lot of them are algo trading too. They're not making the decisions. They're letting the computer make the decisions. Okay. And that's kind of what an algo is. So, probably a lot of people are intimidated by it, but you've probably heard about it. And if you just think of it as rules to trade by, you'll say, hey, this isn't that intimidating. It's not that complicated. And I'm going to build a simple algo with you in a second, or a couple minutes actually, and you'll be able to see it and you'll be able to understand it better. And I think that'll kind of tie it together a lot better. I know I'm doing a lot of talking now. Seeing some visuals will really help. But first, I just want to talk about some of the advantages of them, because, for those of you who trade with a chart where you fire up your PC every day and you look at a chart of Amazon and you look and you hear some news and you decide to buy or sell, if that's the way you're trading, maybe, and you don't like it, maybe you're scared to pull the trigger, maybe you're scared to exit with the loss and those kind of things, and you kind of get paralyzed. algo trading might be something you're interested in. The biggest thing I think is when you do this, you can test things for yourself. So we've all seen these gurus out there who claim to have some magic indicator or a magic pattern. They claim they have 90% win rate with this opening bar pattern or something. And you got to kind of just believe them, right? Oh, he said it's true. Algo trading is something you can program and you can test. And when you test it yourself, you can see, hey, is this guy full of it, or is what he's saying really true? Spoiler alert a little bit. Most of what people tell you of, hey, do this pattern, do this indicator, most of them aren't going to work when you test them, when you put them to a real test. Sure, if you pull them up on a chart, you can find 1 or 2 times it works, but we're talking over years. That's what you want to evaluate these things, these patterns, indicators, whatever you use, statistics, a lot of different ways to find rules, but you've got to test it. But then the cool thing is you don't have to be focused on one market. If you create some algos, you could have something that ran on Google. You could have something that ran on IBM. You could have something that ran on Walmart stock all at the same time, as long as you've tested them and proven them out. I mean, that's pretty awesome. You're able to kind of diversify. And the other big thing is when you go and you do this the right way, you'll actually test these algos and you'll know they've historically worked or not. I mean, take a simple rule or a simple candlestick pattern. If you test it for 5 years and find out it lost money, are you going to trade it live? No, right? That's kind of silly to do that. At the same time, just because it made money in the past doesn't mean it's going to make money going in the future. So you've got to kind of be aware of that. But all things being equal, I'd much rather trade something that I know has worked historically, because that gives me some confidence that maybe it'll keep working. And that's what you can do with algos. You don't have to be glued to a screen, which, I know I've heard of people who, hey, from 9 to 4 o'clock every day, they can't even go to the bathroom. They're just fixed on their screen. Well, with algo trading, you don't have to be, because you can set it up to place orders whenever you want. You have a lot more flexibility in that, which is nice. And you don't have to worry about missing orders, because the software is going to take care of it for you. And ultimately, you're in control. You build your own systems. You get what you want, not what somebody else tells you is a good thing to do. And that's pretty powerful. And then the last thing, I mentioned this earlier, you don't stress about every single entry and exit. You'll worry more about your strategies, but you'll just let your strategies run. You won't worry that, oh, the Fed's making an announcement today, I better get out of all my stocks. No, you don't have to do that. You just follow the algos, and that's kind of nice. Of course, there's also disadvantages, right? So I'm going to kind of go through these. Just because you can develop an algo doesn't mean it's going to be good. It's very easy to mess this up and develop things the wrong way. That disclaimer I talked about earlier, past performance is not indicative of future results, definitely holds true. Just because something worked even for the last 100 years doesn't mean it's going to keep working. And a lot of people don't realize that. A lot of people can't resist making changes to their system, trying to make it better and better. And then a lot of people can't resist overruling their strategy. And, I just mentioned the Fed. Ooh, the Fed's going to have an announcement, so I'm going to turn my algo off. That kind of defeats the purpose of it. A lot of people tend to think that algos are, and this type of trading is this set and forget. A few years ago, in the Forex market, robots, these expert advisors were really popular, because people were told you just turned it on and you go on a trip and you come back and you'll have tons more money. And that'd be nice, but it's not true. And you still have to monitor things. You still have to work at this. So it's not like a great thing that you can just go off and never have to deal with it. And, that's the last point. It takes hard work to succeed. A lot of people, unfortunately, I'll get emails from people and they're like, I want to try algo trading. I need to be making money within a week, 2 weeks or the end of the month. And, I'm like, sorry, I can't, you're not going to be able to do it that fast. This is not easy to do, but no trading is, right? And if somebody tells you trading is easy, I'd kind of wonder, because I've never found trading to be easy. You can do it, it can be done, but it takes hard work, just like anything else. So, the bottom line, it's not for everybody. And, maybe what I've told you has completely turned you off. So if so, just, maybe put me on mute for a little bit until the next speaker shows up. I think it's gonna be about 20 minutes. Some people are just better off trading on a chart. And I don't want to dismiss that and say, oh, everybody's got an algo trade. That's not the way it is. But if you're into solving puzzles, if you're a numbers type person and you can do some programming, algo trading might be what you want to do. So a couple questions, just as if you're kind of like, should I consider this? If you can follow rules exactly all the time, that's a good sign. If you know how to develop a strategy properly or are willing to learn, that's a good sign. And this is a real tough one, but if you can resist tinkering with the strategy and you don't feel like you have to make it perfect, that's a really good sign. And finally, you got to be excited about it, that, hey, the thought of developing multiple strategies for multiple stocks or multiple futures markets or multiple Forex currencies. If that kind of excites you and you can think of all the possibilities, which are pretty numerous, then that might be something you want to pursue. Okay, so we're going to build an algo. We've got about 18 minutes left, so I should be right about on time, hopefully. You need really 3 things to do it. You need a trading platform, which I mentioned to Neil earlier, to do your testing and your automation. You need an instrument that you to trade, and you need an idea to test. Okay, so trading platform. I use TradeStation. There's a ton of other things out there. NinjaTrader, multi-charts. You can program things in Python if you know how to do it. You could use Excel even, and some brokers would actually have add-ins for Excel where you could generate signals in Excel. You can do it by hand. I used to, 30 years ago when I started. I was that guy generating moving average crossover signals by hand. You can certainly do that, but you definitely need some way to evaluate your trading strategies. And then, you need an instrument to trade. Now, this is for one particular algo. You obviously will be trying a lot of different markets and stuff, but I'm just going to try Amazon today. And I'm going to do daily bars of Amazon. Now, I normally trade futures because I like the diversification and the tax benefits of them in the US. But anything that trades, you can create an algo for. Okay. So I've got my platform I'm going to use. I've got the market I'm going to use. Now I just need an idea. So here's my idea. I'm in Cleveland, Ohio. So that's my smiling face right there. Let's say I want to take a train to Los Angeles. Okay. So kind of follow that line west. If I'm going to go on Amtrak, am I going to take a train to Chicago, which is on the way to LA, or am I going to take a train to New York City? Okay. Which one would you do? Well, obviously, you're going to get on a train that's going in the direction that you want to end up, right? You're not going to hop on a train going to New York, hope it turns around, and then goes to LA. You're going to hop on one to Chicago and maybe you have to change trains at Chicago, but you're already on your way. That's the trading idea I'm going to introduce today, and it's just momentum, right? Price is moving in a certain direction, then that's the direction you want to trade in. Pretty simple, right? So here's an example. So I'm going to take today's close and compare it to the close 5 bars ago. So it's like a 1 week momentum. And if it's positive, the momentum is positive, the difference is positive, it's up, we're going to go long. And here's an example. So here, pretend we're on this day, day 0, and you count back 1, 2, 3, 4, 5. You see that the close of day 0 is greater than the close of day 5. And then the next bar at the open, you buy. And you can see the little buy signal there. Okay, that's pretty simple. And then I like to do symmetric systems. So let's do the reverse. If the close 5 bars ago is less than the close today, that means the momentum is negative, the market's trending down, I'm going to go short. Here's an example of that. Bar 0 is the day we're making our decision. Count back 5 bars, and there's not a lot of momentum there, but the close 5 bars ago is actually higher than the close today. So then I go short, and you can see the next bar I actually go short. So that's it. That's our algo. Okay, pretty simple. All you have to do is code it up. Now, this is in TradeStation, so you might not understand it, but you should be able to kind of follow along. I'm just saying if the close is greater than the close a certain number of bars ago, which I've set to 5, then buy the next bar at market. And if it's less than the 5 period momentum, then sell short. I'm going to put a stop loss of for 100 shares of $10 a share, which would be $1,000. And that's it. That's the whole algo. So let's see how it works. So I told you I'd do a quick demo. So here's TradeStation. Here's my Amazon chart. And I have over here the actual strategy. I've called it Benzinga 01, but you can see it's just the same thing I just showed you. So what I do, and this is how TradeStation does it, but most other platforms are pretty much this simple. You just go and you insert the strategy. And I have a lot of strategies, so it kind of takes a little while to load up. And there we go. And I go down, go through all my strategies, and let's see. I apologize for this, but there's a long list. And there's the Benzinga 01. So it just calls up a little thing. You can change slippage amounts. You can do a lot of different things here. I won't show you today. I will show you there's a little box down below for automation, and you'd actually just check this box, and then some other boxes would come up that you'd check, and then you'd be able to automate it and run it live. We're not going to do that. We're just going to apply it, and there you go. So there's all the profit and losses, all the trades it would have taken. And it does it obviously super quick. And you can call up a strategy performance report. So here's how it's looked over time. This is just the last 3 years. But you can see if you followed this simple momentum, you would have made trading 100 shares each time about $125,000. Again, that's hypothetical, so don't go running out and say, I'm going to do it. Because there are some drawdowns here. There were a lot of losses in a row here. And at least this gives you an idea of what you can do. And then you'll hear about algos and optimizing. A lot of people like to optimize algos. So I'll just give you an example of that real quick. A lot of trading platforms make it real easy. So instead of a 5 bar, let's go 5 to 50 bars, and we're going to try in increments of 5. So I'm going to run this quick optimization, and it just did it. And then I can pull up the results, and it's kind of hard to see here. So what I'll do is I'll show a graph. So you can kind of see at 5 bars, you make 100,000, then you make profit at 10 bars, 15, 20. Then if you get out to 25 to 30, you actually would lose money with this particular strategy. And then when you go out further, you'd make money. So this is net profit over here. And along this axis are the number of bars and net momentum. But I just wanted to kind of show you, I'm not saying this is a good system by any means. It's just a simple algo that I just wanted to program to show you how you could do it. So you could do anything with this, right? You could add all kinds of things to your code to do whatever you wanted to do. If you wanted to add candlestick patterns, as long as they're coded up, you could add them in. If you wanted to add MACD, Bollinger Bands, any kind of standard indicators, that would be good too. The sky's the limit. I mean, you know, there's an unlimited number of possible strategies you can do. The way I usually do this is I think about what I'm doing and I think, hey, is there a reason why this might work? And, you know, the momentum, that makes sense, right? You just want to hop on a trend. You're hopping on that train that's going to LA. You know, you don't hop on the New York bound train hoping it stops and turns around, because that would be trying to pick a top. And maybe you do that. Okay. So you can do whatever you want. You test it and then you can see the results. And, you know, so for example, these are the results for this particular one for Amazon. But let's just say it kind of went down and down below my monitor, below the screen. Well, I wouldn't trade that then. I wouldn't even consider it. But that's the kind of thing you can do with algos. It's a great way to test ideas and to see if they're viable rather than just relying on somebody to tell you they are. So here's an example. If I would have bought and held Amazon, so I just bought 100 shares way back then, this is what my equity curve looks like. Okay, I made a bunch of money, but I also had to endure some flat periods and down periods. Here's what that momentum algo looks like. And it's kind of hard to see on your screen. It did make less money overall, but it's a lot smoother. So, you know, which one do you like more? That's what you got to kind of think about. A lot of people would say, hey, I'll give up some profit to get a smoother looking equity curve. And that's one of the benefits and one of the things you can do with algo trading. All right, so I've got a couple more. We might have time for a couple questions, and then I'll turn it back over to Neil. If you're thinking this might be something you want to get into, there's a lot of things you got to look at going forward. You got to know what good performance is. You know, was what I showed you good or was it mediocre? Okay. How do you know how to develop an algo the right way? I'm going to show you the wrong way in a second. And the wrong way involves over optimizing. How do you avoid that? Those are all key things. Should you use out of sample testing? There's a lot of questions that you have to answer with this. So it's not a super simple thing that you can jump in and today make an algo, start trading it Monday. It's going to take a little time, but you know, because starting out, you don't know all the things that you don't know. And for me, the way I learned it was doing this on my own and basically failing and losing money over and over again. I'm like, oh, I'm over optimizing. Oh, I'm doing this. And I finally got to the point where I don't do those things anymore. Not that it's a, you know, every day's profit kind of thing, but I'm a whole lot better than I was when I first started doing it. So I mentioned, I'd say what not to tell you what not to do. Whatever you do, just don't call up a chart, insert a strategy, optimize it, and then trade the optimum results. Okay. The problem is that's what most people do. I just showed you with the software how easy it is to do that, right? What did I do? I called up a chart, I inserted a strategy, I optimized it. And then, you know, if I was to take those optimum results and just keep trading them, tomorrow in the real market, I'd probably lose money, even though it looked good historically, because the optimum doesn't work. And the way I always explain this to people is, I used to invest in mutual funds a lot, and I used to always research mutual funds. I never knew which ones to pick, so I'd go out and buy Money Magazine or Kiplinger's Personal Finance Magazine and look at the top 5 over the past 5 years, say, and I'd pick those funds. I'm like, well, those are the best. I'm going to buy those. And I'd go and buy them. And then they were never the best anymore. I'm like, man, I just pick losers. But it's because, in effect, that test optimized, you picked the best ones, and then you went and tried to trade them. And that doesn't work. So don't do this. If you've learned nothing else today, if you ever try optimizing, just be careful, because it's just pitfalls upon pitfalls. Okay, so wrapping up, if you want to start this, if you're interested, if this kind of sounds interesting, research platforms and brokers first. Read some books on strategy development. There's a lot of good authors out there. You can just go to Amazon. Get advanced help if you need it. And then, when you're ready, start developing that first strategy. And then, eventually you're going to have to take it live. And if it doesn't work out, if the first couple don't work out, you've just got to change what you're doing and change your process. So that last step is exactly what I did. I would, over the years, try things. Oh, it doesn't work. Then I try something different. And now I'm at a point where I'm pretty comfortable, but that's how you do it if you really want to do it yourself. So that's a good way to start. And with that, hopefully algo trading is not still scary for you. Hopefully I've kind of demystified it a little bit. And thanks to Neil for kind of cutting in there to say, hey, take a step back with this, because obviously I've been doing this so long. This is the intro stuff to me, but a lot of people don't understand it. Realize, like any other way to trade, it's got good and bad points. It's not a magic key to the kingdom, and it's not for everybody. A lot of people cannot do this. They cannot let a computer make their decisions for them. If you're going to do it, take the time to learn it, to do it the right way. And what I showed you, oh, hey, he had that nice Amazon strategy. I made it look easy, but in reality, it's very hard to do correctly. It's very easy to do it incorrectly. So with that, I think we might have, I think I got you back on time. We might have 1 or 2 minutes for a couple of questions, but if you have questions, feel free to visit my website, kjtradingsystems.com, or you can just send me an email directly at that address. I'll be glad to answer questions. I love talking to traders.
Kevin, we have questions and we want answers now.
All right.
So one is you're like the Tony Stark of trading right now. So this is definitely one of the most transcendent or fascinating talks of the day. A couple quick ones. One is algorithms. Are there open source algorithms? How do you come across them? Do you purchase them? Once you have your tools in place, if you're not going to develop it on your own, can someone borrow another algorithm from someone else, make some tweaks, or how does that work? Is there a market for it?
Yeah, I mean, you can buy some. I'm not a big fan of that, because usually what's out there are over optimized systems. Mm-hmm. I'll tell you the way I develop most systems is I'll find something, or I'll think of an idea. I'll see something in a magazine or on the internet if somebody did something, and it might not even be an algo. It might just be something they've said. And then I'll go and I'll take what they've done and modify it and kind of make it my own. Mm-hmm. For example, one of the books that I have on Amazon is actually 52 different entries and exits that you can kind of take and put into your own algos. So there's a lot of stuff out there. You don't have to come up with ideas from scratch. You can definitely take what someone else has done and just expand upon it.
That's great. That's very helpful. So now we've got some specific ones. So some folks are kind of wondering, are there going to be a lot of wash sales with this type of thing?
Not necessarily. I mean, the cool thing about it is you can set it up however you want. So if you say, hey, I want to make sure my algo avoids wash sales, then when you program it, you'll just make sure that you've programmed that in. You can definitely do that. So it doesn't necessarily have to be an issue at all.
So, okay, we've got another one here too. So before the algorithm actually executes for you, or I'm not sure if this would be a platform thing or perhaps something you could write into the algorithm itself, but can you set it to alert you before execution, like an email or something, so that you can go in and check it?
Yeah, depending on the software, you definitely could. You could get a pop-up window. You could get something to confirm a trade, or you could just let it do it all. You could have it send you a text message, email. Different platforms have different setups. And especially if you're a slower trader, meaning if you're working, say, with daily bars, that might be a better way to go. And then you could actually then make the trade manually. So you could have the algo tell you, hey, buy, but it doesn't actually automatically do that for you.
And what kind of ranges? So you mentioned daily bars, and then I'm sure we get to intraday. What kind of ranges do we get out to looking at weeks and months?
You can. I stick mainly with daily bars and smaller time, down to like 5 minutes.
Okay.
But you could use weekly bars or monthly bars. The problem is you can't test for as long a period. Just there's not as much data points. And then as far as trade length, that's something you can decide. So I have systems that trade seasonals in some of the futures markets that last for 2 or 3 months, but it's still an algo.
And for folks that aren't too experienced with writing code of any type, are they able to get help with that from one of your books?
For like TradeStation, yes. For other languages, not really, because I'm mainly a TradeStation guy. But what I would recommend is people, whatever platform they have, is try to investigate what the capabilities of their platform are, and then take a look at how you could program. And there's usually a community of people more than willing to help people program to get started.
Great. I think I and Chat here on the platform have so many more questions for you, but I don't want to take up too much of your time. Everyone, his email is on the screen. Make sure you get over to kjtradingsystems.com for more information on what Kevin is doing out there. Kevin, thank you so much for spending time and introducing us to this concept.
All right. Well, thanks, Neil, and thanks, everyone.
All right. Take care, Kevin, and have a great weekend.
All right. You too.
All right, guys, algorithmic trading, very, very fascinating stuff. Something I've been aware of for a long time. Something that a lot of the big funds are doing, obviously. But boy, did he make it seem easy. So make sure you check out Kevin. Just a reminder to everyone, if you want to get these video recordings to keep and go back to at any point in the future, I do recommend that you scroll up to the top of your page and go ahead and purchase the Masterclass video set so that you have those. They are still available. Now, I'm very excited to bring on a good friend of mine. His name is Ryan Faluna. He's a fantastic trader. He's wonderful at leveraging the news. He's done options in the past. You can answer pretty much any question you have for him. I know he's probably mad at me right now for building him up on all these things. So I might hopefully not setting him up for something he doesn't want to talk about. But Ryan is here to talk about how to trade on the news, or how to use news headlines to benefit your trading. Ryan, welcome.
Thank you very much, Neil. No, I'm not mad at you at all. We are good friends. It takes a lot more than that to get me upset. So thanks a lot.
Good to hear. So Ryan, we've got you here for about a 40-minute session. Okay. Can you give folks an idea of, what your trading background is, what you like to do, and what they're going to learn from you today?
Absolutely. So let me first start off with a little bit about me and how this came to be. I'm just a normal guy like everyone else out there in our audience. I I didn't come from a Wall Street background. I didn't work at an investment bank. I didn't do any of that. I went to college. I got a degree in management and finance, and I've always been interested in the stock market. So I wanted to teach myself the stock market. So I started trading with my own money 7 years ago now, I believe, 7 years ago. So I learned very quickly. I did what most people do. I followed people that had more experience than me. I would listen to recommendations of what people would buy. I would buy it myself, and then I wouldn't understand why I wasn't making money, or in some cases why I was losing a whole bunch of money. So I quickly realized that I need a tool that's able to give me information so that I can make my own decisions. Because when you're able to create your own trading plan and make your own decisions, that's going to go a long way to building up your consistency, which will translate into profits. And Benzinga Pro was the tool that I ended up purchasing. So I used that for 5+ years. I liked it so much. I was like, I kind of want to work at Benzinga. And lo and behold, here I am. So this program has a very, very special place in my heart. It's really what kind of accelerated my trading. Again, I didn't start with a lot of money. I'm not some Wall Street expert, but this program, these tools allowed me to turn into a profitable trader. And I'm trying to keep that going for as long as I can use a computer. So hopefully that's forever.
All right, great, Ryan. So, yep. So as Ryan mentioned, he did come to us as a Benzinga Pro user, and we couldn't be happier because Ryan is the man. And now here he is getting ready to teach you a little bit about how to use the news to trade. Ryan, I'm going to get out of your hair. I'm going to let you do your thing. And I will monitor our comment section to make sure that any questions that we have get to you.
Okay, great. So I went ahead here and shared my screen. So hopefully you can see the Pro platform.
Yep.
At first glance here, especially to people that are new, this may look overwhelming. And I get it, but it's really not that overwhelming. The way I would give an analogy for this is when you get a pizza and you look at the fresh pizza, it looks delicious. And if you're hungry, maybe you want to eat the whole thing, but you probably shouldn't because you don't want to have a stomach ache. That's kind of how Pro is. There's a whole bunch of tools. There's a whole bunch of different options, and you don't need to use all of them in order to be successful. You also don't need to use all of them to get your money's worth. We have a huge community, and some traders use a bunch of these tools. Other traders use just one tool. What they've honed in on is what it takes for them to be successful. And that's really the key. And that's one of the reasons why this program is so powerful. So Neil, you had mentioned, Neil had mentioned earlier, trading off of the news. That's super important. One of the things that people forget is that the news is going to be able to trump any chart, any pattern that you see forming, any indicator combination that you use, anything like that. News is going to be able to trump that. A good example here, let's actually pull up the S&P 500 from today. This actually just happened today. All right, so you can see here that this S&P 500 here is actually trading down. We had a press conference that had some macro items about it, and this actually took off. I challenge anyone, find me the indicator that told me this was going to happen. Find me the chart pattern that told me that SPY is going to run like crazy in the afternoon. And I'll save you the trouble. You're not going to be able to find that. What caused this to happen was news. And what's so great about this platform is it actually allows you to harness that. And there's a bunch in it. So let's first start with the actual news feed itself, which is the heart of the Benzinga Pro platform. So I'm going to go ahead and click on a new workspace here. You can see at the top here that I've got multiple workspaces because there are multiple things that I'm trying to get out of the market. There's multiple pieces of data that I'm trying to use in order to create my trading plan and then execute that trading plan. So what we're going to do here is we're actually going to start with the news feed. And the reason I wanted to start with a fresh one is I wanted to get all of the other clutter off of the screen so we can focus on what's going on here. So the first things first is you'll see a whole bunch of news here. And the first thing that I do is I like to click on sources. And I like to add sources for whatever it is that I'm trying to find. So in the case here, signals are going to be like automated reports from our algorithms that are finding transactions that take place in the market, like option activity, unusual options trades, block trades, halts, etc. Benzinga Wire is going to be our aggregated news wire that has a whole bunch of different sources of news. And it puts them all in one spot so that you don't have to have multiple subscriptions at a whole bunch of different companies. Partner links are other partner links, other websites that release news. Guru Focus would be one of them. I think TechCrunch would be one of them. Press releases, these are a bunch of different press release companies. A lot of times companies will issue some piece of news via a press release, and we actually give you access to a whole bunch of different press release services here. And then finally, we have the SEC. This is just a feed directly from the Edgar database. So as soon as things are filed with the SEC and made public, they actually come through Pro here. So for a new user, the first thing that I think that you should do is select just the Benzinga wire as your source, and then go ahead and click on categories. And what's so great here, and this is unlike any broker that I've used. I used Scottrade back in the day. I briefly tried E-Trade. I didn't like it. I currently use Thinkorswim. I've never tried Robinhood, but I've seen some of my friends who use Robinhood. There's no way to make the newsfeed in those platforms as powerful as the newsfeed as you're going to get in Pro. And one of the reasons for that is because the newsfeed in Pro allows you to filter and remove all of that noise so that you can focus on what it is that makes you successful. So what I've got here is I've got a whole bunch of different categories, and I want to quickly go through some of these just to give you an idea of what's possible. Analyst ratings, these are very, very important. A lot of people trade off analyst ratings. Stocks sometimes move off of analyst ratings in different initiations and upgrades, etc. So if that information is important to you, you can actually click that and add that as one of your filters. So I'm going to go ahead and click on analyst ratings. It loads all of the subcategories as well. Now, I also definitely want to click on exclusives because I want to know any of the news that we're releasing before anyone else. I certainly want to know about that. We'll click on general here, and you can see that I've already got some categories here highlighted. Now, biotech and healthcare, I'm going to click on both of these. Biotech and healthcare, these are both very, very active categories right now in the middle of the pandemic that's going on. So I definitely want to see news that's coming out that's related to this. And one of the things that you'll see here is that when I actually click on one of these categories, I have the ability to color it, which makes it easier for me to see and stands out in the newsfeed. And this is important because once you get familiar with these different colors, you can actually discern what a new post is simply by looking at it, simply by associating the color that you have set. Now, obviously, when you first start this, might be a little bit difficult. And if you use a whole bunch of colors, it might take a little bit to actually learn all of those. I try to use 5 or 6 max, and that's gives me a real quick ability to process information. So I'm gonna go ahead and check these 2 categories. I definitely want to click hot. I definitely want to click market moving exclusives. That's really important. I'm big in following mergers and acquisitions. Mergers and acquisitions can often cause stocks to move, sometimes huge amounts, which can obviously lead to huge profits. So I want to know news about that as well. Click on markets. You can see here, I'm definitely into options. I'm not so much into binary options, so I'm just going to leave options checked. Looks like about it on this site. And let's click on news. This is great. I got asset sales and contracts. These generally have to do with new money or expected revenue. That's definitely a positive. FDA, this plays off of our pandemic corona theme that we just talked about. And then some other things in here like offerings, which are normally negative news catalysts that will drive the stock price down, as well as rumors. Sometimes when it comes to rumors, even before something is like official or officially reported, the rumor itself might cause the stock to move. And if there is a rumor floating around out there, I definitely want to know about that because that's going to help me plan my trade out. Now, if going down the list here, we can just select some other things that may be important to you. I'm a big technology trader, so I'm going to go ahead and turn that on as well. I'm also going to turn on this WIM, which stands for why isn't moving. We're going to cover this a little bit in the next section, why this is such a important category for me. Something that I just absolutely love. Now in here, I'm also going to click on technicals, small cap analysis, dividends, and long ideas. So the key takeaway here is that I didn't like hack the code or figure out what's gonna make me money. I selected things that were important to me because my trading plan is to trade things that I have experience with. I tell this all of the time to new traders. I mean, when I first started, man, I wanted to trade everything that moved. I'm going to make $1 million. I'm going to do this. Yeah, that's a real quick way to lose money. So what you want to do is you actually want to trade things that you have experience with. I know how new news stories are going to move technology stocks. I'm not as familiar, by contrast, to how biotech, healthcare, and FDA things move, but we have a huge event going on right now. And I feel like that news is going to be very important to any trading decision that I make. So I've gone ahead now and added it to some of my category filters. So what I will say, trade what you know, stick to what you know, develop consistency, and that will actually turn into profits. So now that I've got a whole bunch of categories selected here, I'm going to go ahead and press done. And what you can see here is you have a whole bunch of different colors. Looks like a child spilled a box of crayons here. But when we actually take a deeper dive into that, you can figure out exactly what's going on. Let me zoom in here and see if I can make this any bigger for you. All right, so what we've got here is we've got a whole bunch of different news, and we've got them color coded. So I immediately, what jumped off the screen here were these red news posts, and you can see here this has to do with the press conference that the president had that caused the market to jump. So you can actually make this easier to see and just easier for you to synthesize the information that's coming to you. Now, if you don't want to use category filters, you have other options here that you can do. You can actually apply a sector filter. You can just only see news about a particular sector. So in the case of my technology example, if that's what I wanted to see, all I have to do is click technology, and now I can see all of that. Now, I'm actually not going to apply this filter for this example. One of the other filters that you have here is your watch list filter. So if there are a particular group of stocks that you like to trade, like I do, in fact, let me go ahead and click on this. If I click on main right here, you can see these are all of the stocks that I watch and trade on a regular basis. So if I select this watch list, the result is going to be only stocks that have, or only stocks that are on my watch list. It's going to show me news posts for stocks that I'm watching. This can be very, very helpful for kind of reducing the noise. Let me go ahead and turn it off here for the example and go back to our category filters. So the news feed is the heart of everything in our platform. Now, we also have a bunch of other tools to help you, because I've discovered that unless, in some cases, you can trade off just one news item. So for example, if in today's press conference, if you saw that the market was jumping, you could very quickly jump into any type of day trade. I personally would use S&P options in that case, and you can actually just trade off that one piece of news. But when I'm actually setting up a swing trade, or perhaps even a slightly longer term trade, I like to use multiple pieces of data to formulate my trade plan. And I'm able to do that using some of the other tools here in Pro. So before we actually move to some of the other tools, the other thing that I want to mention is you can actually filter this news feed by a particular stock. So if you actually want to just do research, all you have to do is type in a ticker and you will see all of the news for that particular ticker. Again, it just makes it very easy to filter for what it is that you're looking for, so that you can act on that information as soon as it happens. Now, it doesn't stop there. Benzinga Pro has more to offer than just a news feed. And one of my favorite tools that I use every single day, in fact, it's one of the tools that first drew me to this program, was the Squawk tool. And the Squawk tool is great because if I'm reading something, or if I'm looking away, or maybe I pull up my broker screen, or I pull up a different screen, just a web page because I'm doing research or what have you, if I'm not looking at Pro and there's a big piece of news coming, I still want to be able to react to that. And Squawk gives you that ability. Squawk is a audio news feed that is just all or nothing. You either have it on or you have it off. The Squawker is a 20+ year market veteran who knows how to spot things that are going to move individual stocks, sectors, or the entire market. And what's so great is that, like I said, even if I don't have the Benzinga window open, by having the Squawk tool open, I'm still able to take advantage of those alerts in that piece of news. So I actually just click play and I run it in the background. Now, I'm not going to click it now in case there's a whole bunch of reads. I don't want that to drown out the rest of the presentation, but this is something that I use every single day. And I use that in conjunction with the other tools in Pro. One of the other things that I use every single day is the movers tool. And again, you can see that the Benzinga Pro gives you the ability to customize quite a bit. So I have a whole bunch of different workspaces built here. So let me go ahead and click on movers. Now, movers is great because with a couple of clicks of a mouse, you can actually tell what's moving. It doesn't really take a lot of time, and it doesn't really take a lot of research. So right here, what I've done is I've gone ahead and selected gainers. So these are things that are moving up on the day. I've selected pre-market as the session because I want to know what's gapping before the regular session opens. And I've selected the entire session as the period. And what's great about that is it shows me here everything that's moving up in the pre-market. These things are going to create a gap. And what I've done here is I've loaded in this first ticker, SNOA, for Sonoma Pharmaceuticals. And so right here, you actually get to see the why is it moving, or the WIM as we call it, around the shop. This is such a great feature. It's actually one of my favorite. It's one of the newer features that we have, but it's really, really helped. This is our news desk has discovered a reason why this stock is actually trading up. And it says right here exactly what that is. So my job is done. When I woke up this morning, I had no idea about Sonoma Pharmaceuticals. I didn't know what the news was. I didn't know what its past performance was. I didn't really know anything about it. With a couple of clicks of a mouse, I've discovered that this thing is moving. I've got a chart. Let me move the video icon out of the way. I've got the chart pulled up here. You can see that obviously this morning it was gapping up pretty considerably. And then as soon as the market opened, it actually ran off of that. So this would have been a very quick gap and go. Obviously, it was not able to hold that and then traded down the rest of the day. In fact, you can see here that it actually used the 9 EMA as resistance. Stock really, once it plunged through that earlier, it really had trouble regaining that and then closed lower on the day than when it opened. So this is a perfect example of how you can actually plan your trades ahead of time, or right before the market opens in this case. And what's great about this is you can actually just go down the list. You can click on other tickers here and see, oh, here's another one. This one gapped up, sold off at the open, and then continued to trade up for the rest of the day. We don't have a why is it moving here, so we don't have a predetermined reason as to why this is moving, but we can do some research ourselves. We can actually just click on news. We can this will show you a news feed that has all of those different sources we briefly talked about earlier, and you can actually review them. It maintains any color coding that you have set up, which is incredibly helpful because now I can actually just quickly scroll through this list and I can see what's causing this stock to move. Is this something that's important to me? Is this something that maybe has some more legs that I can actually jump on and trade for longer than a day or several days? So there's a number of different things that you can use in this platform. And right here, movers, this is one of my favorite ones. And what's the other thing that's great about this is you can do this every single day. So earlier I talked about consistency and coming up with ways to execute your trading plan, becoming more consistent, and then growing your profits. This is a step that takes almost no time at all that you can do every single day. And if you're not looking for things that are actually gapping up, no problem. You can actually just click on losers and it will do the exact same thing. It'll show you things that are trading down and you can actually go through them. So let's go back to the chart here. I noticed that canopy growth is right here. So if I click on that, let me see if I can zoom in here. Oh, let me try clicking on a different stock here. Sorry about that. Looks like I've clicked too quickly and frozen up my chart here. But basically what you can do is you can actually go through all of these and discover, hey, what happened? So if we click on Canopy here, we've got a why is it moving? And it's showing us here, Canopy Growth shares are trading lower after the company reported Q4 EPS results that are down from last year. So okay, they had poor earnings. That makes sense why it's low. Now, are those earnings, is this a good entry point? Is this something that I actually want to swing for the next few weeks? Do I think this is going to rebound? There's a whole bunch of different things that you can actually research using this tool. And it's very, very simple to do. It doesn't require you to code. It doesn't require you to program a scanner. In case of like limiting price, we have a slider here that you can use. So just very, very easy to change these options. We also give you the ability to enter in custom options. So, so let's go back to the chart here. And here you go. So now you can actually get a visual representation of what happened at Canopy. I mean, look at this. This is crazy. Now, in the case, after it reported those subpar earnings. It obviously traded down the rest of the day here, didn't really do much. So we'll have to monitor this. This might be an opportunity in the future. So movers, very, very easy to use, takes almost no time at all. And it can be very, very powerful and alerts you to some different opportunities. Now let's talk a little bit more about the chart and some technical analysis. I have another tab here with my chart loaded, and I have Apple here. So this is one of the other things that I really like about Benzinga Pro. So obviously I can review the news. I can monitor the news. I can watch the news. I can see, what's new, what is affecting some of the different stocks, but I can also do technical analysis in the exact same platform. So here we have a chart of Apple. We've got the daily chart, which means each bar here represents a different day. And I have two very commonly used moving average lines. I've got a 50-day moving average and a 200-day moving average. And one of the reasons why I like these is because a lot of traders use these. A lot of these levels are actually respected. And if we take a look at the chart here, we can see that back in December of 2018, we had a death cross here. Looks like that was on December 19th. And then a couple days later, December 21st, we've got a gigantic red volume candle. So it looks like someone was selling after that death cross took place. We actually have another one several days later in the new year. And we also have a golden cross here. So you can see that as the stock starts to trade back up, the 50-day average actually moves through the 200-day average to the upside. The stock struggles a little bit while it decides which direction it's going to go. And then it actually breaks through this 50-day, trades above it, trades back down into the 50-day, that is held, and then the stock just takes off from there. And so you can see that you can actually do some of your technical analysis right here in the platform. It doesn't matter if you use VWAP, if you use MACD, if you use moving averages, whatever it is, there's going to be a way to apply that. In fact, you can also do drawing in here, right? So let's go ahead and click on this line tool. We're going to do a horizontal line. I noticed here that Apple looks like it made a high here at, what is this, about 327 here. So I'm going to go ahead and put this line in here. And right away, I can see that it looks like after this Corona started here, it obviously, Apple sold off considerably, but it looks like it's regained quite a bit of it. And it looks like we actually may test this double top here coming up in the next few days. So we'll see how this plays out. I actually want to keep this level on here because I want to monitor how Apple responds when it gets to that level. Let's take it a step further, actually. Let's go down into here. Let's do we've got a couple of different patterns in here. Let me see if I've got, find the, we've got a Fibonacci retracement. So this is something that's used by a lot of traders. Fibonacci retracements are very, very popular. I don't want to get into the specifics of what makes Fibonacci so powerful, but let's see how this actually works out. We've got our stock here. We've got our time frame defined here. What we're going to do is we're going to draw a study from an extreme low point. Oops, I think I clicked on the trading view ad there. We're going to start at an extreme low point and then go right to an extreme high point. All right. Now, one of the questions I get, so now we've got this pretty drawing on here. We've got these levels shown here. One of the questions that I get all of the time is, Ryan, when a stock is selling off, how do you know when to enter? And unfortunately, there's no crystal ball. There's no one right answer. There's no magic formula that's going to tell you, hey, if you buy right now, you're going to end up making some money. What we have to do is we've got to kind of piece these different data pieces together and then come up with a trade plan and give it a shot. Our last guest, Kevin, just told you that nothing ever works 100% of the time. That is so true. And as traders, we need to be prepared for that. Benzinga Pro absolutely helps you be prepared for that. So let's take a look at our example here. Well, now let's focus on the Corona sell-off here. How would you have known when to buy? I mean, all of these scary headlines are coming out. How would you have known when to buy? And you can see here that one of the most important fib levels here, the 0.618 fib level. If I put my cursor on here, look at where this candle touches. That's almost to the penny. It oftentimes doesn't get that pretty, but here we go. So you can see here that this stock actually sold off what looks like from the 327 handle all the way down to 211, and it ended pretty much right on that Fibonacci level. So that's perfect. You could have actually taken some attempts at some of these other Fibonacci levels. Let's take a look at the 0.382 level. That looks like it sold right down to that. Tried to rebound, couldn't really hold its gains and sold off again. Okay, so let's try this level. Oh, looks like that candle, bottom of that candle lines up with the 50% retracement. Pretty nice. But the big one, the one that jumps out at me here, this is the actual 0.618 level or 0.618 level. This candle, this is so perfect. It goes right to a T. And you can see that it actually bounces off that level, reclaims the 200-day moving average, continues to trade up, reclaims the 50-day moving average, has a little bit of a battle as it figures out what it's going to do, breaks through, and then keeps running up here. So let's summarize this just from looking at this. So from its low of 213, 214, on what day is that? March 23rd to today, so May 29th. So in the course of 2 months, we have Apple, a stock like Apple, moving 104 points. I mean, that's incredible. Okay. And what's so great about this is that Apple, already, this is a super strong company with a whole bunch of different revenue lines. It's often traded. It's got a huge balance sheet, huge market cap. This is not just some like black swan, some brand new company that nobody's ever heard of that is releasing a piece of news and oh my gosh, now it's running like crazy. This is something that people watch every single day. And you can see here that if you're using some of these different tools to plan out your trades, you could have really set yourself up for quite a nice gain here. So in addition to us having breaking news being delivered to you in real time, lightning fast real time, we also have a very easy to use mover scanner. We have a audio squawk tool where you can actually hear some of these breaking news headlines, and you don't even have to be looking at your screen in order to take advantage of that. We have a chart tool that allows you to do your own technical analysis right in the platform, and it will actually save these drawings and these indicators to each of your tools. So this can just be a very, very helpful one-stop shop for using or for finding what data it is that's important to you, and then crafting your trading plan, and then hopefully executing that trading plan. And so it doesn't stop there. There's a whole bunch of other things that Pro can actually do. So let me go ahead and click on the option activity tab here. Move myself back over to the right. So options are super popular. The more and more people get involved in options on a regular basis, and options can actually tell us something about the underlying asset. And in the case here, we actually have the unusual options activity algorithm that we have laid out in a very convenient and easy to read table format. So you can see here that and actually, this is going to be a perfect example. You can see here that most of these are actually on ETFs. So we've got the SPY, the S&P 500 ETF. We have the Qs, the technology ETF. The IWM is the Russell. So we have a whole bunch of different ETFs here. And maybe ETFs aren't a part of your trading plan. I totally understand. I don't actually trade them that often myself, but I do like to know what type of action is going on in those ETFs. It might tell me something about the greater macro market. So one of the things that you can do here is you can actually click on filter, and you can go to security type, and let's go ahead and remove ETFs. Now I'm only seeing stocks. All right. So that's a first step. Now, the next step here is I also want to define this a little bit more. I only want to see option sweeps that are greater than $500,000. So I'm going to click on total trade price. I'm going to go ahead and enter 500,000. All right. And what that's doing here is it's only showing me option trades that had a total premium cost of $500,000. And so this is important to me because I want to know where the smart money is going. Where are some of the bigger players going? What do they think is going to happen? And it's great because all of this data is laid out here for me. So I can see if the trade is just a singular trade, if it was a large trade like a sweep that needed to be broken up into multiple orders in order to get filled. We actually have a sentiment. So we're determining what this particular trade means to the underlying asset with respect to where the transaction took place on the bid or ask. You can also see the size of some of these unusual trades. And you can see this one right here, 362 contracts. I mean, it is Amazon, so those contracts are priced very high, but there's other ones. This one's got 22,000 contracts on Uber. So again, there's a whole bunch of different ways to view this data and then actually use this in your trading plan.
Hey, Ryan.
Yes, Neil.
Got a question about unusual options activity.
Lay it on me.
All right. Are we able to see implied volatility as well?
Yes, you are. So great question. You can go ahead. Oh, I'm sorry. You were asking about implied volatility. So I actually mistook that for open interest. So we actually don't have implied volatility yet. You should be able to get that data through your broker if your broker allows you to trade options. But that is absolutely something that we are looking to add in the future. What you do have access to right now is open interest. And we've actually done something a little bit, taken it a step further. We've actually given you a volume to open interest ratio, right? So you can tell if some of these trades were new eyeballs on a particular trade, you can actually tell. So right here, let me go ahead and show this. Let me go ahead and add the open interest column just so it's a little bit easier to see. So you can see here on some of these, like for example, this one, this is the Zoom call, the 200 call. There were 265 contracts open on this going into today. However, today someone bought the 200 call that expires on in November. So we've got plenty of time. In fact, we've got 175 days till this contract expires. Looks like they paid just over $1 million for this. And you can see that the open interest, the volume over the open interest. Let me see if I've got that here.
Yep, far right.
Yep, right here, far right. Sorry about that. So the volume over the open interest is huge. And there's actually some other trades above here that have the same thing. Looks like Cisco and AMC as well. So Neil, to answer your question, no, we don't have implied volatility yet. You should be able to get that data from your broker. We are looking to add that, but we have a whole bunch of other data here that can actually help you.
Yeah, something I want to hop in and add is this is a fairly new feature. So we're still building on it and improving it. I mean, it's been days since this has been out, so more to come.
Well, Neil, one more thing, our development pipeline is based off customer needs and demands. So the fact that this is actually being asked for, that's great. That's exactly what we're looking for. We want to give you what you're looking for. So as I mentioned, in the case of implied volatility, that's something that's already been requested. We're already in the works for trying to add that, but we don't have it yet. If that happens again in some of these other tools, you can do the exact same thing. You can still request that this feature will get added. And our development team, they're great. We listen to our customers and we want to give them what it is that they're looking for.
Yep.
So the calendar, and this is just the unusual options calendar. We actually have a whole bunch of calendars. We've got 13 calendars to be exact. And again, this all leads back to planning out your trade. So our analyst ratings, something that are important to your trading plan, we've got a calendar for that. Our earnings important to your trading plan, we've got a calendar for that. In fact, if I click on add a new workspace here, we actually have some pre-built workspaces for you. So let's take the earnings monitor example. I'm just going to go ahead and click launch. And you'll see here it's going to load up our predetermined workspace. And what we have here is in the news feed, we actually have the signals in the wire, and then the category filters, we have earnings and guidance checked. So we're only seeing news that pertains to earnings and guidance. We also have the calendar tool on the right here, which lays this out in a table format that might be easier for you to follow. Now, what's so great about this is that this news feed updates in real time. So as soon as these earnings come out, it's going to be updated in the news feed. And if you're planning on watching a particular stock, you can actually filter your news feed by that stock. You can filter your calendar by that stock, and you can actually watch as this news breaks. If you're trying to trade off of that news, you're given that opportunity. Or if you're trying to plan your trade for the next regular session, you're given that opportunity as well. And what's similar to the earnings monitor here, let's go ahead and click on the analyst ratings monitor. This is very similar. This has to do with when an analyst firm is actually going to upgrade or downgrade a stock. You can do the same thing here, so you can filter it. So for example, if you only want to see upgrades, you can actually filter on only seeing upgrades. If you want to see something where the price target is actually raised, you can filter on that. You're given those options. Pro is giving you that kind of power. Now, there are, again, you don't have to use all of these tools in order to be successful. You can, and the more comfortable you become with it, the easier it might be to do that. So let's take a look at another example here. Let me actually click on Edgar. I mentioned at the beginning of this when we were talking about the news feed that we have an SEC feed. And so this is what it is. So I actually have it colored green here. SEC likes money. It's just one of the mental connections that I'm able to use. And one of the things that I use this for are insider trades. So let's say, for example, I want to know what companies had insider trades recently. I know from doing research that that's actually a Form 4. So I'm going to filter this news feed by a keyword. Let's go ahead and add the Form 4 filter. And now you can see here, I'm seeing all of the different insider buys. And what's so great about this, let me click on this one, is that when you open this up, you're actually seeing the file or the form that was filed with the SEC. So if you're experienced in reading these, that's great. You've already got a leg up on that. Now you can actually view them right here in your platform. You don't have to go to the SEC site. You don't have to minimize anything. It's just right here. It's available for you. And on top of that, you can also add tickers. So let's say you want to see what types of insider transact. So we just clicked on Hertz. So let's keep that example. Let's go ahead and see all of the insider transactions for Hertz. I'm going to go ahead and type in the ticker, select the symbol, and now I'm being given a list of all of the different insider trades that have to do with Hertz Global. So this can be a very, very powerful tool for you planning your next move. A lot of people like to follow what the directors are doing. When someone works for a company and they're trying to, and they're actually buying their own stock, that's generally a pretty good sign. The inverse is true if they're actually dumping their own stock. So you have that ability right here in Pro to do. And let me see if there's another tool that I really quickly wanted to cover. And it is signals. And so again, at the beginning of this presentation, I mentioned that one of the sources in the newsfeed is the algorithm, the signals source. So if I click on sources here, you can see that I've got the wire and signals added. So I'm actually seeing all of these different signals. Look at all these block trades that happened right here after the market closed. And I can actually see that same data in the signals tool, right? So let me move myself out of the way here again. And you can see we've got a whole bunch of different signals. So options are just one of the signals. Block trades are just one of the signals. You can also view halt and resumes, opening gaps. You can also use different highs or lows. So I know a lot of people like to trade off of 52-week highs or 52-week lows. You can actually see those as they're being achieved in real time. So you don't actually have to do any work. Benzinga Pro will just tell you, hey, this stock had a new 52-week high or a new 52-week low. If it is I know a lot of people like to trade as soon as a stock hits a new 52-week low or shortly thereafter, they buy it for a mean reversion trade. A lot of times stocks like to bounce back before they find their equilibrium. Same can be true for a 52-week high. So it can fit into whatever your trading plan is. I can't stress enough how there's just simply not one right answer. The right answer is what makes you profitable at the end of the day. And the whole idea of using Pro is that you're going to be able to find a set of tools that are going to work for you. So let's go back over to my main workspace here. And now that we are kind of more familiar with some of these tools, perhaps it won't be as daunting to look at 4 of them at one time. This is generally how I have my screen laid out. I also like to add chat because we have an amazing community here that we're trying to add to, and chat allows you to be a part of that. There are traders in our community that have been doing this for 40 plus years. It ranges from people that are brand new to people that are 40-year veterans. And we're learning all of that type of stuff. So the chat is super important. Normally, my main screen actually looks like this, right? So I have chat loaded up and then I have 4 other tools. I'm just removing the chat room just so these other tools are a little bit easier to see. Obviously, I've got a newsfeed here. In this particular case, I actually don't have category filters on because I don't actually need it. All I actually really need is the coloring that I have. And I need to know what it is that I'm looking for. So I like to watch signals. I like to watch the newsfeed. I have my watch list of the stocks that I happen to trade on kind of a regular basis, stocks that I'm watching often, I get to see exactly what it is that they're doing. If I want to sort it, I can real quickly just click on any of the column headers. I can sort it. And then obviously in the details tool, I can look at the chart. I can review the financials for some stocks. I obviously can't review the financials of an ETF. That's not going to work. Let me go ahead and actually put a stock in here. Oh, didn't take the ticker here. There we go. All right, so let me go ahead and put a stock in here. I can actually resize this just so it's a little bit easier to see. I can click on the financials tab. I can review the financials for a particular stock. I can also review its peers. So this is key. So let's say a stock actually pops and it runs on a particular day. You can actually view some of its peers and see if any other company that's in a similar space has actually had a move. Maybe it hasn't moved yet. Maybe that's your opportunity. If the information is out there, Pro is going to be able to show it to you. And it's going to give you all of these tools at your fingertips to try and reduce the amount of time it takes to research and find out whatever your goal or your entry point or your exit point is. So whether it's technicals, whether it's news, whether it's communal based chat room, Benzinga Pro gives it all to you. And you don't have to be a long trader. You don't have to be a short trader. You can trade options, you can trade stock, you can trade both. You can do any of it. And that it's one of the most powerful tools that I've ever used. It's incredibly helpful. One of the things that I really like doing is when I miss things, there's no way that I can possibly trade everything that moves every single day. Nobody can, all right? Not even some of these computers and these algorithms can do that. But one of the things that I like to do is I actually like to, after a move is put in, I like to research and try to backtest, figure out what caused that to move. What catalyst was it? What kind of news story was it? What kind of environment were we in at the time? What were its peers doing? What do its financials look like? I often have questions when I'm trying to build a trading thesis, and I'm often able to get those questions answered right here within Pro. I don't actually need to go anywhere else. So I'm so excited, Neil. It's one of my favorite programs of all time.
I love watching you go. I love watching you go. All right, so we are at time,
Okay.
Ryan. So I just two questions before we part.
Let's do it.
Number one, what is your favorite stock right now?
My favorite stock right now is Apple. It has been for a long time. That could be a bias. I mean, I bought Apple after it split at 92. And it's printing 320 right now. So it's my favorite stock right now. I also really like the balance sheet behind it. I like the management. I like the products. I like the ecosystem. There's a lot to like about it right now.
Yep, same. Apple is probably my favorite stock right now. The last thing that I want to ask you is if folks enjoyed hearing from you, where can they find more of you?
You can always reach me. In fact, if you're a Pro subscriber, you can reach me live every day that the market is open by clicking this here blue button in the bottom right-hand corner of Pro. This will load up Intercom. You can actually write into our news desk as well, but you can actually talk to me via that button. You can also send me an email. So my email address is ryanfaluna@benzinga.com. My name is spelled RyanFalOona. You can always reach out to me. I would be happy to answer any questions that you have to the best of my ability. And or you can call us. Simply pick up the phone and call us.
Yep, there you go. Just Google Benzinga phone number. It'll show up right away. It'll probably end up with Ryan. Ryan, thank you so much for that hyper fast crash course in Benzinga and how we use news, fundamentals, and all of these other tools to trade. Thank you.
My pleasure.
All right, Ryan, have a good weekend, bud.
You too, and enjoy the rest of the boot camp, everybody.
All right, next up, just a real quick reminder to everyone, if you do want to purchase the video so that you have them for your perusal in the future, you can still do that. Just scroll up to the top of your page and go to, I believe it says upgrade tickets. You'll be able to find it pretty easily. You can purchase these videos to keep forever. Now, without further ado, we are at our most advanced session of the day. We are jumping into day trading, actual day trading with a real day trader. Anne-Marie Band is on the line. Anne-Marie, can you hear me? Let's see. Anne-Marie, you should be able to. All right.
Hi.
Hey, how are you doing?
Well, I finally had to take my ponytail out because, it's the end of the day. It's the end of the week.
You are telling me.
Doing good. Yeah, it's been a hectic week. I did send you a PDF, albeit very late. Very late. The one that you asked about to share with the folks in here, I sent it via email. I'm going to show it again, and then I'll have a link for the PDF for anyone to see it for the steps that I'll be talking about today. And so I apologize. I totally.
Hey, no problem. We know you're busy. So that is some training material piece from Anne Marie. So Anne Marie, could you give us an idea of what you're going to talk about during this session?
Okay, so today I'm going to quickly go over what the anchors are for trading for a living. And it's the real simple, high level stuff, but it's also got the thing about trading is you'll hear something once and then later you'll hear it again and you'll go, that's what that meant, right? And that happens to us all the time. I mean, that still happens to me today as I keep learning and learning and learning. It's a space where you never really arrive. You never stop learning. And as long as you focus on learning and getting better, you're going to be in great shape, right? And so I'm going to be talking about that, the things that hit us mentally, psychologically. And then what I did, because I knew I was working with folks looking through the day trading event, I stayed with the one contract a day for the rest of the day. And I'm going to show you from this morning how the rest of the day played out, what all the trades looked like, and how the turn in the cycle ended up for us on the whole. Okay, so we came up about maybe to the plus of about $1,200 for the day. But again, only one contract. A couple of times I had to cost average in at a space that was a little bit higher. But again, the most contracts we ever had were 2. And so that is really where I want us to start. And so we want to build a very strong concrete foundation, right? It's the old adage of if you build your house on sand, the first storm is going to wash it away. And so day trading requires that you be right most often, right? We don't have particularly time on our hands, though we do have to have patience. And so what we want to do is build that solid foundation so that we can leave and go, wait, I know the basics, everything else I can add on to. So this, for the individual looking at this, you can take everything that you've learned today and you'll still be able to use this because it'll be on the baseline, part of that strong concrete foundation, whether you're trading stocks, options, or futures like I do.
Excellent. I love it. So that sounds perfect, Anne Marie. So like what we've been telling people is we want to give you something in each session that you can start next week off feeling confident using. So I think you hit the nail on the head. So with that, I'm going to get out of your way and I'll just be servicing any questions from the audience to you as we go along.
All right, sounds great. I am going to pop our Motive Wave up here and then share my screen. Here we are. And we're going to look at, this was this morning. We had a live day trading session and we got through about 90 minutes of the day. We had these 2 trades right here on the 30-minute chart. What I want to do is show you the results of the day and then have you come back and see, okay, here's what it takes to get it. All right. So you can see in these 30-minute formations, you can see several trades, right? And so what I was looking at is the following. I knew that when I came into the day, I was range bound and that my pullbacks would give me buy zones, but because I was under my moving averages and my 30-minute time frames, and I'm going to remove this study so it's a little bit, I'm going to remove all these studies so everything is just a little bit more quiet. It's not letting me touch that. For heaven's sakes. Yes, purely operator error right here. All right, so let me, I am not sure why this is not letting me, I know why it is. Silly goose. All right. So what we're going to do, I'm going to try and clean this up. So, oh, for heaven's sakes. Never mind. We won't clean it up. It's just fine. All right. So what we're going to do is realize the following. Everything that you look at in the market must anchor on price. Everything. So we watched Ryan go through all the incredible information that we can get from Benzinga Pro. The key elements, once you take away that fundamental understanding of, all right, here's what's going on with this formation. Here's what we're looking at here. Come back to the charts and say, what is price telling me? Because there are analysts that say, hey, we are doing this. Case in point, every hedge fund came out in March saying, you know what, we're just buying high quality stocks. And it turns out, big release this April, they're all majorly short. And so you can tell from price that these hedge funds have been short and they're just watching for the fade so they can buy up and buy themselves out of the short that they've been sitting in, because the short is sitting in. That's a trade that didn't fill. Those are the trades they're sitting in that just are not working. So they're going to wait for the dip and they're going to buy to get out of the trades, going to buy to cover. So one of the things that's super important when you take a look at this, and I have a number of accounts sitting here, but you can see we pulled in about 1225 today. And that was from maybe, I took a couple of trades every 30 minutes, and then I didn't do anything the last 90 minutes of the trading day. And then this one, I think I just didn't do anything because it was sitting sideways. So the key thing to understand is that less is more, which is what I want to talk about. That big formations will give you all the information that you need. And at the end of the day, your job as a day trader is to use your trading account as an ATM machine. So how do we go to an ATM machine? We put our card in, we engage, we tell the system what we want, we pull it out, and we leave. What traders have a tendency to do is come in with an investor mindset. They look at something and they go, oh, this is going up. My chart is really, I can see from the day formations, this is really going up. And so I'm just going to take it long where it looks like it's at support, and I'm going to hang on to it. See, we don't have time on our hands. We do, but that time structure is very short and it's got limitations, and that limitation is risk. And so when we think about, hey, the chart is going up, are you wrong? Of course not. Look at where it ended today. It's absolutely huge. So if you're taking a look at that and you're saying, oh my goodness, this really was the right way, but you took a long, say at this level, right around this edge, you could not have held on for 25 points to the downside. 25 points to the downside, listen, it's $50 a point. Yeah, that's a lot of points. 25 points to the downside is thousands of dollars. And you don't need to do that. What you can do is say, wait a second, I know it's going up. If it loses this edge, and it actually is going up, it's going to need to recover this edge. And so the big things we're going to look at are, how does support and resistance look? And so we are going to start with a weekly chart. And although you think to yourself, are you kidding me? A weekly chart is what you want to look at here? How can you possibly trade day trading from a weekly chart? Well, first of all, our formations are very, very rapid these days. And so you can. That's the first thing. And the second thing is, once you understand where the weekly formations are, you're going to understand how things are going to move ahead. And here's what I mean by that. This was 5 weeks ago. This is this week. It just finished. This was the week before, and the week before, and the week before, and the week before. We noticed right around here that every time it came into that 28.49 area, people were selling it. And this week began, and they did the same thing. They came into these edges and sold it, but then they recovered it. Here is a very important thing for you to think about. If you are above the weekly close from the week before, and you are above the high of the week before, you are very likely bullish going into resistance from the past. You want to know where a trade is going? Look to the left. And here is a breakout area. It was resistance, then it became support. It broke to a new high and it pulled back as that support. Price action moved right up into that area this week, stopped just a couple of ticks high, faded all the way back down into just maybe 29.94 or so, and then turned right around and moved back up. The weekly formations tell you where strength is sitting. That is a very important thing to look at. You focus on price the most. And so what I want to do now is stop and talk to you a little bit about focusing on these price events. And what I'll do is I'm going to delete all my technicals, and I'm going to change the formation so it doesn't show my trades. Only because we don't want it to be cluttered. We'll open that up afterwards. What I want you to do is trust that price memory is a real thing, that old resistance often gets tested as support, and old broken support will test as resistance. Guess where we ended? Right up on the edge of this resistance zone. So next week is going to give us a very big tell. That's really the first thing that you want to look at. Then when you go to the daily, now that you have the weekly squared away, and remember, you can put this information on top of all of the other studies that you have for today. But this is the foundation of everything because it's the only place we make money. We make money when we buy low and sell high, or we sell to open high and buy low to close or buy to cover, right? So that is really it. So your job should be focusing on where can I get in at the right price, and where can that price take me in to my frontline event. Now today I was waiting for 29.89 and it came to 29.92 and it rocketed right up. So I had to chase it just a little bit to get through that trade, but you will see that it works, and it works consistently time after time. It's going to work way better than any technical indicator you will ever use. I promise. I mean, I really, really, really promise. Okay, so let me minimize this and let us look at our, this is sitting in the wrong place. Hang on. All right, let's put this in and I'll move this up. And so this is the piece that I'm going to leave you with. And really it is how to look at the markets tactically and trade from that perspective. And so we're going to jump right into it. And well, I just want it as one. How will I do this? Hide presenter view.
There
yes, there you go. For heaven's sakes.
So before, did you just press F5?
Oh, I didn't even know I could do that. Let me see. F5. No.
Maybe that's old.
Good heavens. All right. Let's just look at it this way. We don't even need to worry about the thumbnails and that sort of thing. We'll just look at it as it sits. All right. And so when we look at trading and you think about day trading, I don't know if you could do a poll in here, Neil, that says how many people have tried to day trade and maybe they've had a little bit of success, or maybe they haven't had that much success, or if they really want to do it because it looks interesting / exciting / whatever. I don't know if you can do that, but if you just ask them and just see how it comes out, the bigger things that I notice are, and I talk to a lot of people in the trading space, and these are the reasons that people don't make money. They trade too much and they trade inconsistently, right? So they engage in the market where they don't have an edge, and they move into those spaces that give them increased risk because they chase the breakouts or they chase the breakdowns. Those are the sorts of things that really happen to traders all the time. Listen, I used to be one of those people. Truly, if there's any person that I've ever known that was really bad at trading in the beginning, it's me, 100%. Absolutely 100%. I was a terrible trader. And so I really had to learn how to disengage and have less interaction that would give me less risk exposure so that I could make money all day. So here is the problem with consistency. Remember, we talked about having a consistent process. So we think we have a process, and many times we listen to a lot of different traders, and we sort of have a salad bar trading system. Sometimes it works with us, sometimes it works against us, but we think when good things happen that all of a sudden it's something that's working. And so we think to ourselves, okay, this is it. And we get very confident, and it makes us rush into trades. And then when we get very confident, we get arrogant. Now, many of us would think, no way, I'm not arrogant. But if you're confident and you go, no, this is going to roll over here, what you're actually doing is you're driving down the interstate without a map. You cannot see where the road turns because it's a great big hill above or a hill to the left. It's hidden. And you are anticipating that the curve on that straight road going in one direction, that curve up ahead that you perceive is going to be a hard left or a hard right. And so you're preparing to turn without seeing any road. That's really what we do when we try to pick a top or a bottom. That's bad. Imagine doing that in your car. That's not going to happen. You want to see the road. You want to see the signals that the road is turning, and then you're going to move. But what we have a tendency to do is go, oh, this can't go up anymore. This absolutely can't go up anymore. Or this can't go down anymore. This has got to be support. And we take the trade. And then we hang on thinking that we're right. And that drives a complacency, an inaction when we're supposed to be really looking at things. That's our inattention. And then at the end of the day, our stops get run, or we end up getting out with way bigger loss than we are supposed to. So really, where we have the best chance of going through the cycle as short as you can, listen, I still get into this confidence space. Oh, that's definitely turning over. I still do that. But because I've been running a trading process so long, the part of my brain that's in charge of logic says, okay, let the chart prove it out to you. Once it proves it out to you, you can go. Listen, you can feel like a great big hero picking a top or a bottom, but the hero space and how you're feeling in your chest might come one time out of 20, and the other 19 out of 20 you lose, and then you don't have your house payment. Remember, this is about using your account as an ATM machine. So you're not investing in that ATM. You're simply going to it, taking the money that's sitting on the floor or just inside the box, the little man in there's handing it out, and that is all you do. So that might seem something that doesn't resonate with you right now, but I promise you it's going to resonate with you later. The longer you trade, the more it's going to be like that. Second thing, when does a strategy work? A strategy works when there's proper risk management and that you follow the rules. Hey, the rule is you got to be home by 11 o'clock because mom and dad are going to ground you, and you're not going to be able to go out for 2 weeks if you're not home by 11 o'clock, 12 o'clock, whatever the curfew happens to be. See, in my house, if that happened, my dad would lock the door. Yeah. So he was really serious about it. So not only was I locked out, I was also grounded and locked out. So these things, you've got to learn to follow rules. A lot of us put ourselves in spaces where we let ourselves off the hook, right? Just this one time, just, whatever. Really, you've got to follow rules. And they've got to be good rules, not arbitrary rules, or you're not going to want to follow them. And so that's really what we've been talking about, these hard and fast rules. So how do you make a day trade profitable? The first thing, direction of trend. A rising tide lifts all boats, right? Now, that's usually true when a market is behaving properly across the board. When there's broad participation, everything's going well. Right now, we've got a little bit of dissonance because certain things that have been doing really well are giving back some profit, and certain things that haven't been doing well, certain things that haven't been doing well are now catching up. But mostly, the trend is going to be your friend. And so that's what you want to identify, and you want to identify it on a big time frame. Most of us look at time frames that are way too small. Momentum and price mechanics. How do you find the levels that provide high reliability? We just talked about them. Day closes, day highs, day lows, day opens, week closes, week highs, and that's WEEK. Week closes, week opens, and then you identify the risk. That means you're going to have to wait on the trade. Once you understand where price is likely to come to, you must wait for it. Sometimes it's going to come right to you, and sometimes you're going to have to chase it a little bit. Today, I was waiting down at 29.89 in the ES, and it didn't come for me, and so I had to chase it a little bit. If you're right, and it's coming right into your edge and it starts moving, the reason it's moving quickly is because everybody's buying up at that space. If you're going long, those are the best places. You want to engage where everybody's doing that. Now, you hear this all the time. Listen, when you're positioning a trade, you want to find something that nobody else is doing. Listen, that's great for an investment where you want to buy something and hang on to it. If you're trading in the broad market cycles as a day trader, how do you make money? You're going to make money if price moves in the direction that you want it to move, where you're positioned. That's the only way you're going to make money. So really, you've got to do what everybody else is doing. But what you have to do is let the guys on the bottom pack themselves in and build the levee so that you don't fall through the cracks. And just about where they're getting ready to get out, you go, you know what? I'm leaving the party about 5 minutes early. I don't want to get stampeded. So that really is it. You want to be a first follower, and then you want to pay attention to prior price where they did the past of what you thought that they were going to do, right? So that's going to be it. Now, there's a guy, his name, well, he's passed on now, but his name was John Boyd. And he created something called the OODA loop. He was an amazing gentleman that did a lot of pilot training for people. And he wondered why there were so many accidents in the military for these pilots. And he realized they were not being taught properly in terms of looking at how the world works. The market is exactly the same way. Pilots actually do very, very well in this environment because they're used to a changing space. So what's the first thing? We observe the market. We're going to look at what the market is showing us. A lot of us say, ooh, it's going up. I probably need to buy. Ooh, it just sold off. I probably need to sell. That is a passive observing state. You have to move to an active orienting state. So what you see is when you observe, you orient. You then say, this is how price is moving. How are the traders behaving? Where are they buying? Where are they selling? Where were they selling? Where were they buying? Listen, near past equals near future. It's the reason I get to trade over and over again every day. I had no bad trades today. I had no trades that went negative, right? Some trades are bad and you come out positive. Some trades are good and they still end up negative. I didn't have any negative trades today. This is because I'm constantly oriented because the market changed direction halfway through the day. Halfway through the day, the early part of the morning when we were all together with Neil and Jeremy, the market sold off, plateaued, bottomed out, and then turned around and moved back. I would not have been able to see this unless I had been constantly orienting myself between prior price and current price. This is very important, and many of us, we just want to look at a technical indicator that says, just tell me when to buy, right? Listen, most of us don't want to put in the effort to do the work that's required. I work very hard in this business. Somebody said, I think Jeremy said this morning, who wants to get up at 5 a.m.? I get up at 5 a.m. routinely. Every day I am up. I've got 4 hours of study into the market before the market has 30 minutes to even be open. So I really work hard on establishing where these prices go. But here's the great thing. Once you know where the daily high lows are the prior day, once you know where the weekly high lows are of the prior week, you know what these traders are going to do. If they're above these highs, if they're above the closes, they're going to be generally bullish. If they're not, they're going to stair step down into the next level of support because traders have price memory and algorithms have price memory. We move up and then come back to make a support zone and move up again. Or we move up, come back into the support zone, try to bounce, and then fail. Everything is a decision at these support zones, and that's what brings this decide motion into our work. We say, okay, when this comes to me, I'm going to do this. I'm not going to do anything else unless it comes to me. Now, sometimes, like today, I was really trying to squeeze it, just like I did for the very first trade of the day. I put the trade in at 30.14 and a quarter, and it came into like maybe 30.15 or 30.14.75, something like that. And it did not allow me to engage because I was waiting for it. Well, see, my goal is to minimize my risk. And if it doesn't come directly to me, I'm not going to take it because, see, I trade to eat. I trade for my house payment. I trade for my work is all about, can I leave green on the day? I can't afford to engage in high level risk behavior. Plus, I'm old. Time's a wasting. Can't really do that, right? The fourth thing is execution. A lot of us, we plan, strategize. It comes to the position and we go, I don't know if that's the right trade. I don't know. Maybe it's wrong. What if I'm wrong? Listen, if you're wrong and you have your risk defined, you're going to be in great shape. You're just going to go, you know what? I got stopped out. That is absolutely something that you want to engage in. Really just saying, listen, once I get in there, it's either going to work or it doesn't. Hopefully, you've got a strategy that allows your probability to be high that it works. But if it doesn't work, nothing works all the time. You just get out. Okay? Why do traders fail? They don't define rules of engagement. They don't obey their rules. And then when it's the end of the day, they don't review their trades. None of us want to head out to watch film, right? But if you take a look at the very best guys, I'm crazy about sports. I got a huge sports family, and you know, we're always talking about sports at our house. And so here's the thing. If you look at some of the best guys, all they're doing is reviewing film over and over and over again. They're looking what they're doing and they're looking what their competition is doing. What are we doing? Well, we're pressing click. What is our competition doing? Our competition is moving all around. We need to understand what they're doing. Review your trades. Do the homework. If you don't, you're not going to do well. You really are not going to do well. All right. When you read indicators, this is what we'll talk about. Slope, the steeper the slope. Somebody said, hey, how do you know? This morning, one of the questions was, hey, how do you get yourself out of a fake out or out of a, look at the slope. If the slope was way up and the chart gapped down, look to the left, you're going to see where the buyers are going to come in. If the slope was way up and they gapped up, they're going to hold support, just like Zscaler, right? Zscaler held all its support because it had gapped up and it was doing very, very well. A lot of people who were short had to buy to cover, right? Use the slope and follow the crowd. Everybody wants to be a maverick. You can't be a maverick and be a day trader, but most people who day trade are mavericks. I know that that's terrible. It's just this dissonance that we have with our mind. Listen, I have worked for myself for 35 years. Okay? Yeah, a long time. I've worked for myself for a long time. It's because I don't want to work with anybody else, frankly. That sounds terrible. But you know what I'm saying? I am very good by myself. If it's to be, it's up to me. And I know how to put that pressure on myself. And I usually the person that steps out and says, you know what? I'll take the counter trend thought to that. And it came into the market and it made me lose vast amounts of money. You cannot have that mindset. You must follow what everybody else is doing. You can get out before them. You just want to get in right when they're saying, yeah, let's do this. So you want to be a first adopter very quickly, move into the motion, go from point A to point B and leave. You're not there to drain the ATM. You don't know how, and it's not possible, but it's going to have new money in there for you every single day. All right. So Strength of trend means the steeper the slope, the stronger the trend, the flatter the formation, which is what we had today. Really awful until the end of the day. Just tells us it's going to whip back and forth. All right. Superior traders, 3 things. They plan a trade and they define the risk. They know where they're going to get out before the time arrives. You can't find yourself saying, for the majority of your position, let's just see where this goes. Let's just see where this goes. No, you don't want to do that. How is your ATM machine going to tell you? How are you going to tell it what you want if you don't put something in there? And that's how it absolutely works. All right. So you follow that plan that you've gone to the trouble of creating. All right. So let's get back to our chart formation. And Neil, if it's all right with you, how about maybe picking a stock and let's look at something together and maybe plan something for next week.
That sounds very interesting. I have a couple stocks in mind.
Okay.
Just staying on the theme. I hope Luke's not watching right now because I don't want him to make any money on this. But it's ticker OKTA, Okta.
All right, let's do it. OKTA. All right, and what does Okta do?
Let me just get you our description here from Benzinga Pro. Addresses 2 primary security concerns via workforce identity and customer identity solutions. Looks like cybersecurity.
Perfect. I love the cybersecurity space. I actually, at Benzinga last year, like I think it was maybe December 30th or something, I came on and they said, what's your big play for 2020? I said, cybersecurity.
Really?
Absolutely. Oh yeah, absolutely. We're going to have, even before this business, we are the most vulnerable and the least prepared for any kind of cataclysmic motion. All right, so perfect. This is absolutely great. Now, first thing, we're going to look at it and we're going to say, hey, what is the trend here? So if I have a trend and I can see this, it is definitely up. So what are people doing on any kind of major pullback? They're buying it. So it looks fantastic. As a matter of fact, what is this? 2, 3, 4 days ago on Monday, it gapped up on Memorial Day at this line in the sand, and today came right up into the edge. So from a daily perspective, 1, we see the chart action is doing very, very well. We see that buying pressure is increasing, and notice it tried to dip below yesterday's close, couldn't even get there. That is going to be your number 1 thing for strength. If your chart action pulls back, so let's talk about Monday. Yeah, Monday. So we have the potential for a breakout and then a pullback. So this thing has moved since March. Holy smokes. What are we looking at? 89. Okay, so over 100%. All right. So it's a beast. Mm-hmm. It's still a beast. There is a tsunami of money flooding into the market. And so any dips should be buy zones. But take a look at this. Let's say you came in here on Monday morning and it gapped up and you went, woohoo, we're off to the races. And you bought right there. You'd be feeling pretty awful at 167. Mm-hmm. Right? So the number 1 thing to do is never buy a gap up. This is not the environment for that. Back in the .com days, You could buy gaps up, but not now, especially after we're moving back from lockdown to easing of a lockdown. And so what the traders are going to do is what they've done during the lockdown is they've said, all right, let's find all these COVID plays that are going to be infrastructure based, security based, network based, all those sorts of things. And let's just buy them up. And that's where they've gone. And it has just run like a house of fire. This is a strong stock. So if you had looked at it here and it had the gap up, notice though, I'm going to expand this so you can see this. This is so beautiful. So here's the chart. Closes on this day. Next day, gaps up, tries to come back a little bit. Look to the left. If you want to know where stock has buyers, look to the left. Old resistance that gets broken, that gives us higher lows, because this is the low. They give us higher lows, and you've got a breakout of a formation. And it's right here, right? And so you're looking at this, it breaks out, it pulls back. You can easily say to yourself, wait, where's the last time it closed above this candlestick? Look to that one, and then you're going to say, you know what? That's a buy if I hold over here. And guess what? If it fades, I know I'm wrong, and my stop is only $1.90 wide. Because you don't want to experience this unless you're an investor. Unless you're saying, hey, listen, I'm going to buy OKTA and I'm going to hold it for the next 15 years, 5 years, 3 years, whatever, right? So the investor might say, listen, I've got time on my hands. You might be thinking that here. Hey, they were right. But most of us don't have a $30 drawdown and go, no, I'm chill with that. We don't. We're like, oh my gosh, what is happening? Right? And so when these sorts of things happen, realize, number one, if the stock gaps up, wait for the fade. If it closes below the close of the prior day, look out, because it's going to have another drop into support. So now let's look at the future. What it did was broke, filled the gap, moved into this area, fast move, totally failed, absolutely recuperated from the edge. Why? Look at this breakout zone right here. I don't really see why this got pushed so far. Really, it should have been pushed to this heavy congestion where we see resistance, resistance, support, support test, support test. That gives you the real area that the price action should hold. So when you're looking at this, you can see it come down. Remember, your job is to go, all right, I need to isolate support, and then I need to wait for that support to get to me, and then I'm going to watch to see how the traders behave. So let's do that. Let's go to a 30-minute chart on this, and then we'll map what's going on with the rest of everything. All right, so here it was coming down into the 170. Look at what happened. It lost that 170 and immediately recovered. That's buying strength. Absolute buying strength. So what do? Same thing. You look for resistance. Here it is. If I can look at this level as my support, have the chart bounce, and I pull back, and I look for those wicks to the left, I can say, all right, I can take this at 171 or 172, and I'm off to the races. The same thing you want to look for. Here's how it looks. Failure to test lower. That's this one right here. Breach above the resistance, which is all of this congestion here. Any kind of pullback coming into this zone, you can buy it. If you let the candle close, you can also buy here because it's the breakout over this level. Old resistance, support, 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 brand new congestion zone, comes right back into support, and people buy it again. It happens over and over and over and over and over again. This is the way you can accumulate a position that you believe is on the rise. So when we take a look at what's going on next week, however, we have a little bit of something very interesting. First of all, incredible buying recovery here, but we stop right at this top. Now, I am a terrible candlestick person. I know the names of none of them, but this is a very interesting pattern. I gapped up, could not hold the gap, faded into my primary support zone, right? That's around this 170 area. Oh, that's a little bit better. Look at that. That's really where that number is. The close and then the open holding support, the rise up through the level, and now we've broken through another gap. Look, this gap's open. Don't chase the gap. Wait for it to come in. As soon as it holds over the close, buy it. And then you have your stop in case things go awry. Especially if you're just doing it for a trade where this thing's running like crazy and you go, you know what, I just want $4 or $5 from this. All right. So next week, this chart has a lot to prove. My suspicion is that this kind of formation, let's see, has it ever had a candlestick that looked like that? That's a very unusual candlestick.
Mm-hmm.
A very, very unusual candlestick. I don't see it anywhere. I see something that's sort of the reverse of it here, but then the body doesn't move through 2 weeks of motion, right? So it has everything to prove. Here's what you do. Buyers are going to come in 183. Very likely they're going to try and come in at 183. I suspect that we fade come Sunday night once, listen, President Trump, everything that he said today, the Chinese are not going to take it sitting down, and they're going to say things and it's going to freak the market out, and we're going to have ourselves a fade. This is going to be great news for the trader. Optimally, you want to get in right around this area if it can come back for you, but the last thing you want to do is buy another gap up. Wait for it to pull back into the zone. Here is the first place it's going to go. So let's look. We're going to look at this last week here, and we're going to see how prices resolve over our candlesticks. All right. So we're going to go to the day, and we're going to see what happens when you're coming in and you're looking at price, you're thinking to yourself, wait, I don't even know if this is going to hold. How do I even know that it's in the middle of working? So let's take a look at what happened here. This is a giant gap up. It gaps up. Look at where it gaps into. The past, open, and the high of 2 candlesticks to the left. So here's what you know. The buyers here have thrown down the gauntlet. They're saying, listen, there is no way you're getting past here. If you do, we're going to move out of the way. And so this is how you know, all right, if it comes to this edge, I'm going to watch it come into here, and then I'm going to buy it. And I know my stop is going to be nearby, and so I'm going to get out. If you say, well, what if it rolls over? You said not to buy a gap up. That's true. That is absolutely true. But watch for the fade and the hold over the highs of the prior candlestick. That's what you want to do. You want to watch it retrace into your prior high, prior candlestick open, and then take the position after it says, listen, this gap is strong, I'm going to hold it. Notice it actually fills that gap in.
So, Anne Marie, we're getting some questions. One is, I just want to say, Luke, you better be watching because you're gonna eat your hat if we have some problems here. So, one is one user is commenting that candlestick type there is a hammer candlestick. And then another person is asking, how important is the 52-week high in this particular trade? Is that something that factors into your decision making?
Well, here's what I know. I know people think that when things come into 52-week highs in this kind of market, they might be inclined to short it,
Mhm.
right? Just like a 52-week low, people go, oh, I should buy it, right? But here's the thing. Trend is going to be the ultimate decider of what goes on. And frankly, the place that gives most traders trouble is at the reversal of trend.
Mm-hmm.
Now, I happen to love all the cybersecurity stocks. I do love them. But this one has been running like a house of fire, right? And so the thought might be, hey, what kinds of ways can I trade this and be bullish? Listen, you could sell the 170 put, right? Let me look at one of my other screens because this doesn't hold that. And let me see. So let's say you look at it and go, you know what? I like this thing and it might fade, but I'm going to look at July and I'm going to sell the 170 put. It's going for $4.20. What that means is the following. If it comes down and you get exercised, right? You actually got it for $165.80 is what you got it for, which is really great. That cuts the profit in half, right? If you say your job is to make the money from the stock moving up or not. If you fall in love with it and you go, no, I just want to keep it. You know, a lot of us really get very attached to certain stocks, and so we'll trade around it. This is a danger zone. Number one, if a chart pops into the 52-week high, like it did right here, did it not? Did it? Yes. Right? Oh, yeah, absolutely. It started selling off the second it got to the 52-week high. I mean, the moment it opened up, they started selling it off on that Monday. And then it gapped down only to recover. Now, true market strength, this isn't going to show up. So what we have are some nervous Nellies sitting around in here. Monday morning, going to be a big deal. If you take a look at this, my suspicion is the first thing it's going to do is come in to heavy congestion at maybe the 184 level. And then it's going to make a do or die event. If it cannot close above that 190, there's trouble here.
All
Absolutely trouble here. So the great thing would be you want to get involved on the bullish side, sell the puts, or sit back and wait for the fade. Now, you could also wait for the fade. You can buy the stock and sell the puts, and that would give you the double whammy. But remember, every chart has price memory, and it goes from areas of resistance to support. And if it breaks support, it means it's going to stair step down to the next areas of support. Doesn't mean it'll stop on the dime, because there's always Joe Normal who's sitting looking at that going, ooh, I am going to buy it right there. And he has a stop that's very tight and he gets stopped out. Some momentum trader is just going to push it all the way down until it catches traction, and then it'll turn around and move it right back up.
So, Anne-Marie, we've spent a lot of time. I want to thank you so much for taking us from the top of the day, starting us off with some live trading, which actually turned out to be quite successful. If I remember correctly, it was in the 1200 range.
Yes.
So, folks, if you weren't paying attention during live trading in the morning, make sure you grab the recording so you can see what exactly Anne-Marie quite quietly and sneakily was doing the entire time.
That's right.
while Jeremy was talking about his thing. And then very, very great coverage here, Anne-Marie. So what I want to compliment incoming, just a warning. What I really like about your sessions is that you cover the full range of just brass tacks. This is what's going on with the chart. Here's why it's going on. Buy or don't buy. So this is just very literal action-based things. But then you're also talking about mental patterns and processes that are going on, almost like soft skill sets that traders should have. And if folks out there, I mean, I hear it enough at Benzinga from comments in our chat rooms on Benzinga Pro or on our articles and stuff like that. If you don't think that having both of those sides, the hard skills and the soft skills, being strengthened is important, you're kidding yourself. So
that's right.
Anne-Marie is an absolute force of nature when it comes to learning about these things. So we do have some final questions here, but guys, I don't think we have time for it. I want to bring Luke in if I can, so we can see how he's doing. I think he's going to gloat a little bit because I do think he made money on this stock right here, OKTA. So we'll see. But Anne-Marie, thank you so much for being a part of this event. I think that you really brought something wonderful to it.
Thank you so much. I'll see you guys soon.
All right. Thank you. Take care. Have a good weekend.
You too.
All right. Thank you, Anne-Marie.
All right. And we're back with Hot Stocks Luke, the man who made a trade at 12:30 p.m. today. Luke, how are we looking right now?
Yep. I made 2 trades. I was using some of our lessons. Like I said, I'm going to put my money where my mouth is, pull some value out of them. You see my screen, Neil?
Yep.
All right. I made $16 so far. 16 bucks on $2,000. It's not any day that's gonna blow anybody away, but I'm gonna let it ride. I liked what Anne-Marie was saying about Okta.
Yep. And how are you feeling about Grubhub?
I'm feeling good about Grubhub too. It's at what, up 0.44%. Let it ride. It was my first bear or bull flag that I'd drawn.
Yep.
And used. So let's see how it goes. And you know what I'm doing with the rest of the account, Neil?
What?
We have an event on Monday, our Cannabis Capital Conference. That's another one that's free. We're having the CEOs of, I believe, 5 publicly traded cannabis companies pitching their stocks, talking through them. So I might be looking for some cannabis opportunities. I've never bought any of the cannabis stocks before, but I'm feeling good. I might just let it rip.
Yeah, I like seeing this very opportunistic side of you, ready to take on some risks, get into some greener pastures, no pun intended. Yeah, so everyone that's attending now, make sure you do check out that June 1st event. What's the URL for that?
I believe it's bzcannabis.com.
Yeah, one way you can get to all of our cannabis events is just go to bzcannabis.com if you're interested in the cannabis sector. There's going to be a lot of great companies there vetted by our team. So no chaff, just the wheat. Make sure that you attend to see what these CEOs mostly have to say about their organizations. It's a great event, both for institutional investors, private investors, as well as retail traders / investors. So make sure you get on over there, bzcannabis.com. With that said, just a reminder, one last chance, you can purchase the recordings from today to watch them at a later date. Just scroll on up on your page and you can find your purchase options there. Luke, any last words before we close the day?
My only last word is that I'm sad it's ending. But again, we had 12,000 people registered for today. I love that we have 12,000 people who want to take their time, become better traders, especially everybody who's stuck around to the end, want to figure out how to day trade. It's awesome. Proud to be a part of this. And I hope you guys all had an amazing event.
Yep, couldn't say it better. It was amazing for me. I learned a lot. It was a marathon, but I'm definitely walking away from this having learned quite a bit. So thanks, everyone. We'll see you at the next boot camp.
All right. Take care.